Okay, my dear students, hope you are doing well. Now we are going to see the marathon session with respect to May 2024 attempt. With respect to our GST, and these videos will be 100% useful to you in getting good marks in your exam, because these marathon videos will keep you the focus on the important areas. That means which are the most important areas, where you need to keep focus and where less focus is required from the examination point of view. All these things definitely we need to know, because in order to qualify CA, हार्ड वर्क इज पुराना जमाने का तरीका है. तो हमारे न्यू जमाने में हम क्या करते हैं कि स्मार्ट वर्क. फॉर दैट स्मार्ट वर्क डेफिनेटली व्हाट इज रिक्वायर्ड इज आवर marathon sessions, Masterminds marathon sessions. Okay, in that I am going to discuss about GST. So with respect to our GST, what are the most important areas or the things we are seeing now? So in this particular presentation, we are seeing the important areas in basics and supply chapter. So with respect to basics and supply chapter, basics means in our institute material terminology, what we can say is introduction to GST. Okay. In that, the important areas you need to keep focus is in that, the important areas are first, what are the taxes that are subsumed and not subsumed under our GST? Here the word subsumed means merged. There are some central taxes that are merged in GST, as well as some state taxes that are merged in GST. So the taxes that are merged in GST will be, with respect to central taxes, central excise duty, additional duty of excise, excise duty under Medicinal and Toilet Preparations Act, CVD, special CVD, service tax, CST. These are the taxes that are merged into GST. That is, these are the central levies that are merged in GST. Sir, we know central excise duty, it is levied on manufacturing. And additional duty of excise, it is levied on some tobacco related items, textiles related items. Okay. And in the same way, excise duty under Medicinal and Toilet Preparations Act. Sir, what does this mean? That means alcohol is kept outside the scope of GST. Already you know that. Okay. And if this alcohol is used in medicinal and toilet preparations, definitely it is within the scope of GST. So what is meant by these toilet preparations and medicinal preparations? With respect to medicinal preparations, what we can say is, say for example, cough syrups, you can take the example of. So with respect to cough syrups, what is the point? Definitely, in that alcohol will be there, but it is used in medicinal. If it all is used in medicinal preparations, definitely it is within the scope of GST. In the same way, toilet preparations like aftershave lotions, shampoos, sanitizers, all these things will comes under the word toilet preparations. Definitely with respect to them, what is the position? With respect to them, what is the position? On them, there will be GST. And in the same way, CVD and special CVD. So what is the full form of CVD? Countervailing duty and special CVD. General, why this particular CVD and special CVD were levied? Because in olden days, that is before 1991, before 1990s, the economic policies was very strict. Okay. That means, let's say for example, Indian product is there, foreign product is there. Both are actually value 100 rupees. Okay. Let us assume that the excise duty rate at that time 18, it will be 118. And at that time, sales tax at the rate of 10%, it is 12. Total, it will be 130. Okay, let us assume that like that. Those are the rates. Okay. Now the point is here. on some foreign products, not all, some foreign products, 200% customs duty was there. Now the product is 300. Okay, that means Indian product price is 130 and whereas foreign product price is 300. In that way, the domestic industry was protected. But due to 1991 economic policies, LPG, liberalization, privatization, globalization, because of that particular thing, previously which was 200%, now it was reduced to 10%. Now the foreign product price is 110 only. Now which one is the cheaper one? Which one is the cheaper one? Foreign product. Obviously, because Indian product is 130 and whereas foreign product is 110. In order to protect the domestic industry, the government come up with the idea that whatever the local taxes that are suffered by the Indian manufacturer, all those taxes are needed to be paid on these imported goods also. This was the policy that was made by the government. What is the policy the government made to protect the domestic industry? The point is simple. Whatever the taxes that are paid by the Indian manufacturer within India, all those taxes are needed to be paid by the importer of the goods also. Now, the issue is here, but what are the local taxes that are suffered by the Indian manufacturer? Just now had a discussion. One is excise duty and the second one is sales tax. One is excise duty and second one is sales tax. Okay. One is excise duty and second one is sales tax. Okay, ma'am. But the problem is here, in order to levy the excise duty, the goods must be manufactured within India. But what about the imported goods? Are they manufactured in India? Answer is no. In that case, we can't levy the excise duty. That's why they named it as CVD, countervailing duty. That means it is levied to counterbalance the excise duty. That's why it is named as CVD. And along with the excise duty, sales tax is also levied. But in order to levy the sales tax, the seller and buyer must be within India. But where is the seller? Outside India. Therefore, practically it is not possible to levy tax in the name of sales tax. Therefore, in order to levy the sales tax, the another new tax was created. It is named as special CVD. So, to counterbalance excise duty, CVD was there. To counterbalance the sales tax, special CVD was there. So, these two are now merged with GST now. And service tax, CST. What is the full form of CST, ma? Central Sales Tax. Okay. With respect to central sales tax, there is one speciality which is levied by the central government and collected by the state. This is a speciality the CST is having which is not available to any other tax. It is levied by the center but collected by the state. So these are the taxes that are merged into GST, central taxes I mean to say. And in the same way with respect to state taxes, VAT, entertainment tax, luxury tax, tax on advertisement, octroi, entry tax, purchase tax, tax on betting, gambling and lotteries, all these are merged into GST. These are the central levies that are levied. Okay. So the question is here, that means each and every indirect tax is merged into GST? Answer is no. The taxes which are part and parcel of supply chain are the taxes that are merged in GST. What is meant by the word supply chain? Manufacturer to distributor, distributor to wholesaler, wholesaler to retailer, and retailer to consumer. This one is known as supply chain. So the taxes part and parcel of supply chain are the taxes that are merged in GST. So that means there are any taxes that are not merged in GST? Yes. Any example for the taxes that are not measured in GST? Let's say, for example, alcoholic liquor for human consumption, petroleum products, basic customs duty, exports duty, road and passenger tax, toll taxes, property tax, stamp duty, electricity duty. These are the taxes that are not merged into GST. So these are the few examples. That means not every indirect tax is merged into GST. The things that are merged is only the taxes which are part and parcel of supply chain or the taxes that are merged in GST. Keep that point in mind. And in basics, another important area is actually model of GST worldwide. With respect to that, India follows dual GST model. Simply what we can say is here, there are 4 types of GST models worldwide. Central GST, state GST, non-concurrent dual GST and dual GST model. Worldwide there are 4 models. Central GST, state GST, non-concurrent dual GST and dual GST model. Concurrent dual GST. So generally this model is known as concurrent dual GST. In this particular model, both level of governments will levy the tax on both goods and services. In this concurrent dual GST model, both level of governments will levy the tax on both goods and services. That's why India follows this concurrent dual GST model. Being a federal republic country, central has some obligations and state also has some obligations. Therefore, what is to be followed by here? Dual GST model. Okay. The taxable event under this is actually supply. As usual, the supplies can be divided into 2 types. One is intrastate supply and second one is interstate supply. If the supply is within the state or UT, it is known as intrastate supply. If the supply is between the states or UTs, it is known as interstate supply. On intrastate supply, what will be levied? CGST and SGST, or if at all it is a UT GST will be levied. Okay. And CGST will be paid to the central government. For that, the act is CGST Act 2017. And in the same way, with respect to state, it is paid to the respective state governments or UTs. Now the point is, for that, respective states will pass the SGST Acts. And with respect to interstate supply, IGST will be levied. Generally, IGST rate is equal to CGST rate plus SGST rate. It is levied by the central government. Further, the act is IGST Act 2017. And 50% of its revenue will go to the consuming state, that is the destination state. Okay. This is another point you need to remember in chapter number 1, Introduction to GST. Next one is, in order to levy the GST, there is a need to amend the constitution. The question is here, why there is a need to amend the constitution? The reason is simple. Because if you are able to recollect your constitutional aspects, first point is article number 265. What does article number 265 says? No authority, no tax. Without constitutional authority, no government is able to levy any type of tax. And what does 245 says? If the matter is of national importance, Parliament will have the authority to make the law. If the matter is of state importance, Assembly will have the authority to make the law. Okay, and this is 245. What does 246 says? In order to avoid the dispute between center and state, as per article number 246, there are 3 types of list. List 1, list 2, list 3. With respect to list 1, what is the position? The exclusive power is there with Parliament With respect to list 2, exclusive power is there with the state. List 3, both the governments can administrate the matter. Okay. And if you observe that, but the concurrent list covers non-taxation matters only. That means taxation matters are either covered under list 1 or covered under list 2. That means as per article number 246, at a time, only one government is able to levy the tax. But whereas under our GST, both the governments shall be simultaneously able to levy the tax. In order to make it happen, there is the need for constitutional amendment. So simply the need for constitutional amendment is central government had to get the power to collect the tax on sales, because previously on the sales, only state government is having the power. In the same way, state government has to get the power to collect the tax on services, because service tax was there under list 1. So that's why, in order to make both the governments simultaneously levy the tax, there is a need for constitutional amendment, and based on that, article number 246A was created. As per article number 246A, if at all it is intrastate supply, both center and state will have the authority to make the law. That means both center and state are empowered to frame the rules and regulations for intrastate supplies. And if at all it is the interstate supply, then central government has been given the exclusive power to levy the tax. Okay. And whatever the IGST revenue that was collected by the central government, it will be shared with the state government in 1:1 ratio. That is 50% of the IGST revenue will be shared with destination state. Okay. And the next one is, with respect to first chapter, these are few important areas. GST is levied on the supply of all the goods or services or both. Okay. GST is levied on all the supply of the goods or services or both. That means on every item, whether it is a good or a service, definitely GST is levied. But GST is not levied on alcoholic liquor for human consumption. Still, state excise duty and VAT continues on this alcoholic liquor. But I told you that if this alcohol is used in medicinal and toilet preparations, it is outside the scope of GST. Okay. And in the same way, GST on the following products will be levied from a future date, that is petroleum products like high-speed diesel, crude petroleum, motor spirit, this is nothing but petrol, ATF, aviation turbine fuel, which is used in the flights, and natural gas. In all these cases, for the time being, there is no GST on them. Still, central excise duty, VAT or CST will continue on that. And another one, there is another product, tobacco. That is, the tobacco is the one and only product on which there is excise duty as well as GST. Tobacco is the one and only product on which there is central excise duty as well as GST. And another things are also there like Indian hemp, narcotics. With respect to them, generally state excise duty plus GST was levied on these items. So, tobacco is the product on which there is central excise duty as well as GST. But on Indian hemp and narcotics, there is state excise duty along with GST was there. Okay. So, these are the important aspects you need to remember with respect to chapter number 1, Introduction to GST. Now we are going to proceed to chapter number 2, Supply. So, the next chapter will be Supply. In this particular, the chapter Supply, so every act has its own taxable event. So, the question is here, what is meant by the word taxable event? When tax is levied, when tax is attracted, or what is the triggering point of taxation, it is known as taxable event. Okay. So, based on that particular thing, The taxable event with respect to our GST will be supply. So in this particular chapter, we are going to see two sections. One is section 7, which deals with supply topic. Another one is section 8, composite or mixed supply. If the item is going to be supplied individually, in those cases, section 7 will come into scene. If those items are going to be supplied as a bundle, in those cases, section 8 will come into scene. Okay. Item is going to be supplied individually. What will be applicable, ma? Section 7 is applicable. If the item is going to be supplied as a bundle, in those cases, what will be applicable, ma? Section 8 is applicable. And along with that, Schedule 1. Along with that, Schedule 1, which deals with deemed supplies. Schedule 2, which deals with classification. And Schedule 3, negative list of GST. So these are the important areas you need to remember. Now we are going to proceed with 7.1a. As per 7.1a, GST is levied on the goods or the services which are supplied in the course or furtherance of business for a consideration, and if at all it is a taxable supply, you are liable to pay the GST. This is a summary of section 7, subsection 1, clause A. In that 7, subsection 1, clause A, the first important thing is it must be goods or service. The question is here, what is meant by the word goods and what is meant by the word service? Goods means any movable property. Any kind of movable property is known as goods. The question is here, sir, what is meant by the word movable property then? If the item can be shifted from one place to another place in the same condition, it is movable. If it requires dismantling and re-erection, it is known as immovable. If the item can be shifted from one place to another place in the same condition, it is movable. If it requires dismantling and re-erection, it is known as immovable. So every kind of movable property is a good. And it includes actionable claim. Here there is an amendment. We will discuss that particular amendment later on. So goods includes actionable claim also. Sir, what is meant by the word actionable claim? The claim on which we can take legal action even though there is no security. Sir, any example regarding the actionable claim? Promissory note, bills of exchange, checks. In fact, every negotiable instrument is a actionable claim. And apart from that, what we can say? Yes, arrears of rent, insurance claims, lotteries, betting, gambling, all these things are treated as actionable claims. Okay. Sir, that means on every actionable claim are we liable to pay GST? Answer is no. You are liable to pay the GST on the actionable claims. You are liable to pay the GST on the actionable claims. Which one? On the actionable claims which are not specified actionable claims. And we will have a discussion on that. Yes, wait a minute. So this was amendment that is there, ma. This was amendment that was there. So the point is here, although actionable claims are goods, but supply of only specified actionable claims wise betting, casinos, gambling, horse racing, lottery, or online money gaming, GST shall be levied. This is the point. That means previously, only which actionable claims are taxable? Lotteries, betting, and gambling. Now, apart from betting, gambling, and lotteries, 3 other actionable claims are also added to the list. What is the 3 items that are added to the list? Casinos, horse racing, online money gaming. Now, these 6 are treated as specified actionable claims. What are the 6 types of activities that are covered under specified actionable claims? Betting, gambling, lotteries, casinos, horse racing, online money gaming. These 6 are treated as specified actionable claims. On these specified actionable claims, we are liable to pay the GST. And on the rest of the actionable claims, we are not liable to pay any GST. Now, based on the amendment, what we can conclude, actionable claims are divided into 2 types. Okay, one is specified actionable claims, second one is others. If at all it is a specified actionable claim, you are liable to pay the GST. If at all it is a specified actionable claim, we are liable to pay the GST. If at all it is not a specified actionable claim, it is there under 7 subsection 2 negative list and you are not liable to pay any GST on that. This is the amendment that was there with respect to this specified actionable claims. Okay. So, now goods includes any movable property and actionable claim. But on every actionable claim, we are not liable to pay GST. If at all it is a specified actionable claim, then only we are liable to pay the GST. And in rest of the cases, we are not liable to pay any GST on it. Okay. And in the same way, growing crops, grass and the things attaching to or forming part of the land which can be separated before making a supply, those things are also treated as goods. Sir, that means whatever the things that can be separated from the land before making any supply, definitely they are treated as goods. Whatever the things that can be separated from the land before making a supply, everything will be treated as a good. So the point is here, whatever the things that can be separated from the land before making a supply, definitely all those things are treated as goods. The next one is service. Anything other than goods is a service. Anything other than goods is a service. So, anything other than goods, technically, everything other than goods is a service. And keep it in mind, money and securities are neither the goods nor the service. But use of money or conversion of money, if at all these 2 things happen for a separate consideration, these 2 things are happen for a separate consideration. In that case, what is the position? Definitely, we are liable to pay the GST because it comes under supply of service. Keep it in mind. Money and securities are neither the goods nor the service, but use of money or conversion of money, if it happens for a separate consideration, then definitely it is within the scope of GST and we are liable to pay the GST. That is the point you need to remember. Okay. And next point you need to give focus is that is consideration. So consideration means any payment in money or other than money. That means consideration can be divided into 2 types. One is monetary consideration. Second one is non-monetary consideration. One is monetary consideration and second one is non-monetary consideration. Sir, what is meant by the word monetary consideration, which is in terms of money? And what is meant by this non-monetary consideration? Because in kind. Okay, that means whether it is a monetary consideration or a non-monetary consideration, in both cases, it is a valid one. Okay. Our next one is act or forbearance. Act means to do something. Forbearance means not to do something. To do something is a valid consideration. In the same way, not to do something is also a valid consideration. So we know that to do something is a valid consideration. How this not to do something is also a valid consideration? The answer remains simple. The answer remains simple here. Best example for that is non-compete agreements. In non-compete agreements, what is the logic? The person promises to do something or promises not to do something. He promises not to do something. He will promise not to do the business for a specified time in the specified locality. Okay. And in that, what is the answer for that? Definitely it comes under forbearance. Therefore, to do something is the valid consideration. In the same way, not to do something is also a valid consideration. Okay. Next one is paid by the recipient or by the third person. What is the point here, ma? That means paid by the recipient or by the third person. So paid by the recipient, that means it is not every time necessary that consideration should be received from recipient only. Even it can be received from a third party also. Even it can be received from a third party also. Okay. It is not necessary that every time consideration should be received from recipient. Even it can be received from a third party also. The best example for that is you students. Even though service is received by the students, but still consideration can be paid by the parents also. And not to include subsidy given by central government or state government. Simply, subsidy by government excludable. Subsidy by any person other than government includable. Subsidy by government excludable. Subsidy by any person other than government includable. And deposits to be considered as a payment only when applied as a consideration for the said supply. Simply, security deposit is not a consideration unless otherwise it is adjusted for the payment. So this is with respect to consideration. You remember my important points. And in the same way, another important area you need to keep focus is donations. So donations are received by the charitable institutions from the individual donors without quid pro quo. What is meant by the word donation? What is exempted or when there is no GST mark? If at all it is a donation, which is received by the charitable institution. Okay, from the not the business people, individual donors without quid pro quo, then definitely it is exempted. GST is not leviable on those activities. Okay, simply GST is not leviable when all these following conditions are satisfied. Sir, what are those conditions that are needed to be satisfied? First one. Gift or donation made to a charitable organization. Gift or donation made to a charitable organization. First point, it must be given to charitable organization. Second one, it must be in the character of gift or donation. Third one, there should not be any commercial gain and should not be any advertisement benefit. If all these points are satisfied, then definitely GST is not leviable. First point, it must be given to a charitable trust. Second point, it should be in the name of gift or donation. And third one, there should not be any commercial gain and should not be any advertisement. Okay. If all these points are satisfied, in those cases, what is the position, ma? GST is not leviable. Okay. If any one of these conditions are not satisfied, definitely GST will be levied. Okay, ma? And the question is here, GST on the display of the name of the donor in the premises of a charitable trust receiving donation. In that case, what is your answer, ma? If at all the donor name that was displayed is the individual name, then definitely it is not a supply. There is no need to pay any GST. If at all it is a business name, definitely on that GST will be levied. The display name is a individual name. In that case, what is the position, ma? Definitely there will not be any GST. If at all the display name is a business name, in that case, GST will be levied. Okay. So the next point will be no claim bonus. That means the no claim bonus offered by the insurance company to the insured. Whether it amounts to consideration or not is the question here. The first thing you need to remember is here, what is meant by this no claim bonus. If at all the insured, that means the policy holder, did not claim anything in the previous year, then as a token, this insurance company will give some no claim bonus from that premium that is needed to be paid in the current year. Those things are known as no claim bonus. No claim bonus is offered by the insurance company to the insured. Definitely it is not a consideration because there is no supply that is provided by the policy holder to the insurance company in the form of refraining him from the act of lodging insurance claim in the previous year. Therefore, no claim bonus cannot be treated as a consideration. This is the point, ma. So, no claim bonus is not a consideration. That is the point you need to remember. Okay. Our next one is with respect to artwork. So, with respect to artwork, that means after painting is completed, the artist will send the painting to the art gallery. Okay. In that case, the artwork sent by the artist to the art gallery for exhibition, is there any consideration that is moving from the art gallery? Answer is no. Therefore, it can't be treated as a supply. So the artwork sent by the artist to the gallery for exhibition is not a supply because there is no flow of consideration that is moving from art gallery to the artist. Therefore, it is not a supply. There is no need to pay any GST. But anybody remembers what are the supporting documents we need to issue? Because if at all it is not a supply, but there is a physical movement of the goods, what is the thing we need to do? We need to issue the DC, delivery challan, and if the value is more than 50,000, e-way bill is also required. Okay. Next one is GST is essentially a tax on commercial transactions. Say for example, sale of a car for personal use which was purchased previously by the individual is not a supply because it is not in the course or furtherance of business. And selling the car after personal use, selling the old jewelry, because in the course or furtherance of business condition was absent. Therefore, it is not a supply. But keep it in mind, a famous actor paints a painting and sells them and donates the earnings, definitely it is a supply. Because here the painting was sold. If the painting was sold, definitely it is a supply. And in which way the money is going to be utilized is immaterial. Definitely is it a supply or not a supply? Yes, definitely it is a supply. The next one is 7.1b. Sir, what does 7.1b deals with? 7.1b deals with import of service. In order to treat any transaction as the import of service, first one, the supplier should be outside India and recipient should be within India. Then it will be called as import of service. Sir, in order to be qualified under this 7.1b, Consideration is mandatory or consideration is optional? Definitely consideration is mandatory. Consideration is a mandatory thing. Keep it in mind, that point, ma. Consideration is a mandatory thing. If the consideration is there, then only it will be covered under 7(1)(b). Okay. So here, okay, consideration was there and it is mandatory. Then business test is to be satisfied, or there is no requirement of business test there. So what is meant by this business test? It means whatever the imports you are doing there, it must be in the course or furtherance of business. If at all a business test is needed to be satisfied. Even for personal use also, if you import something, then GST is attracted, then business test is not required. What is your answer? Whether business test is required or not required? Not required. Whether the import was done in the course or furtherance of business or not in the course or furtherance of business, in both cases it is a supply as per section 7. In both cases, it is a supply as per section 7. That is the thing you need to remember. Okay. And in the same way, as per 7(1)(b), consideration is mandatory. If at all there is a consideration, definitely it is a supply, whether it happens with or without business purpose. Okay, the next one is 7(1)(c). So what does 7(1)(c) deals with? Deemed supply, that is without consideration. If you observe 7(1)(a) or 7(1)(b), in both cases, consideration is mandatory. But whereas the cases which are covered under 7(1)(c), what is the position, ma? Even though it happens without consideration, but still it is a deemed supply. So 7(1)(c) read with Schedule 1. So the 7(1)(c) says that the activities that are mentioned in Schedule 1 are deemed supplies, even though they happens without consideration. Sir, what are the activities that are covered under 7(1)(c) read with Schedule 1? 4 activities. First one, permanent transfer or disposal of business asset. Second one, supply between distinct persons. Third one, principal and agent relation. Fourth one, importation of service. So the first point will be here. In order to be covered under point number 1, basically 3 conditions are required to be satisfied. The first one, it should be a business asset. Second one, on that IDC was claimed. Third one, it is permanently transferred. If all these 3 conditions are satisfied, then it is a deemed supply, even though it happens without consideration. So first point is business asset. Sir, what is meant by the word business asset? The asset which is used or intend to be used in the business is known as business asset. Second one, on that IDC was claimed. Sir, if at all it is a business asset, obviously IDC will be given now. Answer is no. Even though it is a business asset, not on every business asset we are able to claim the IDC. Take the example of car. Even though car is used for business purpose, we cannot claim the IDC because it is covered under negative list. That is section 17, subsection 5. That's why not on every business asset we are able to claim the IDC. If at all it is a bus, on that definitely we can claim the IDC. Okay. That's why it should be a business asset. Second one, on that IDC was claimed. And third one, it is permanently transferred. Sir, what is meant by the word permanently transferred? Permanently transferred means, what is the position, ma'am? What is meant by this permanently transfer? Transfer can be divided into 2 types. One is revocable transfer. Second one is irrevocable. Revocable transfer means During the lifetime, it is possible to get it back. It is known as revocable transfer. If at all it is not possible to get it back, it is known as irrevocable transfer. Okay. And in order to be covered under deemed supplies, the transfer should be a irrevocable one. First one, it should be a business asset. Second one, on that ITC was claimed. Third one, it is permanently transferred. If all these points are satisfied, definitely it is a deemed supply, even though it happens without consideration. Okay, ma'am. Whereas we are having a discussion on this permanent transfer or disposal of business asset, where ITC has been availed, even though it was done without consideration, but still it is a deemed supply. The next point we need to see is here. Supply between distinct persons or related persons. So those transactions are also regarded as deemed supply, even though it happens without consideration. The first point we need to see is who are related persons and who are distinct persons now. So these persons are treated as related persons now. So any transaction that happens between related persons, even though it happens without consideration, but still it is a supply. The question is here, who are related parties or who are related persons? General relations like common directors, partners, employer and employee, same family members, sole distributor, like this. Common directors, legally recognized partners, employer and employee, same family members, sole distributor. So in that, the important one is employer and employee and family members. When the persons can be treated as same family members, like spouse and children, whether financially dependent or not, parents, grandparents, brothers, sisters, if at all they are financially dependent, then only they are treated as related parties. When the persons can be treated as same family members, with respect to spouse and children, whether financially dependent or not, and whereas with respect to parents, grandparents, brothers, sister, if at all they are financially dependent, then only they are treated as related parties. Okay. Our next point is here, with respect to controls each other, that means holding and subsidiary, and they together controls a third party, and third party controls both of them. Third party is having more than or equal to 25% of voting power in both organizations. So in all these cases, the parties are treated as related parties. So in this related party transactions, employer-employee relation is the most important one. So whatever the services that is provided by employee to employer, which is in the course of employment, will be taxable under the head salary, and it is not a supply. But whatever the things that are done by the employee to the employer, which is outside the scope of employment, then definitely it can be a supply. Okay. The next point will be supply by employer to employee. Supply as a part of employment contract. Then it will be treated as perquisite and it is taxable under the head salary. But whatever the gifts that are given by the employer to the employee, which is outside the scope of employment agreement, is taxable under the head 7(1)(c), that is supply. So whatever the benefits that are given by the employer to the employee, which is outside the scope of employment agreement, generally it will happen without consideration. In those cases, the employer and employee are treated as related persons. Employer and employee are treated as related persons. And definitely it is a supply even though it happens without consideration. But there is one relaxation regarding that. Gift per employee per financial year up to 50,000 rupees, it is exempt. Gift per employee per financial year up to 50,000 is exempt, even though it is outside the scope of employment agreement. Okay. The next point is distinct persons. Sir, what is meant by the word distinct persons? Generally, in our GST, there is no concept of centralized registration. There is no concept of centralized registration. In how many number of states you are having the place of business, that many number of RCs you are required to make. Okay. Let's say with respect to Masterminds, it is there in 2 states, AP and Telangana. In that case, how many RCs that are required to be taken by the Masterminds management? 2 RCs. RC means registration certificate. Okay. But if at all the place of businesses are there in one state, it is optional. But once it was taken, one separate registration was there, whether all the place of businesses are there in the same state or UT, or there in different states or UTs, one separate RC was taken, they are deemed to be distinct persons. Once they are deemed to be distinct persons, whatever the stock transfer that happens between them, definitely it is a deemed supply, okay, and it is not a stock transfer or a branch transfer. That is the point that will be covered under 7.1c. Okay. Second point now completed. Under 7.1c, now the third point will be principal-agent relationship. Generally, agents can be divided into 2 types. One is selling agent and second one is buying agent. What is meant by the word selling agent? The person who sells the goods on behalf of the principal is known as selling agent. Buying agent means the person who sells the goods on behalf of the principal. Okay. With respect to this point, supply by principal to agent. Here, which agent is covered? Selling agent is covered. Sir, generally the transaction between principal and the selling agent or buying agent and the principal is a deemed supply, even though it happens without consideration. That is the point that will be there under 7.1c. So what is meant by 7.1c, ma? What is meant by 7.1c? As per 7.1c, any transaction that happens between principal and the agent, even though it happens without consideration, but still it is a deemed supply. But there was one relaxation that was given by the department here. While selling the goods by the selling agent or while receiving the goods by the buying agent, if invoice is in the name of the agent, then only the concept of deemed supply will be applicable. If the invoice is in the name of the principal, then the concept of deemed supply will not be applicable. Okay, ma. So the point is supply by principal to selling agent, where the agent issues for further supply invoice in his name. That means invoice will be issued in the name of the agent. Then agent shall be covered under Schedule 1, that is deemed supplies. If the invoice is in the name of the principal, then the agent shall not be covered under Schedule 1. Simply, while selling the goods by the selling agent, if the invoice is in the name of selling agent, then the agent will be covered under Schedule 1 and it is a deemed supply. While selling the goods by the selling agent, even though the goods are sold by the selling agent, but invoice is issued in the name of the principal, then agent is not covered under Schedule 1. That means what will not be applicable? The concept of deemed supply. Okay. Same point will be applicable to the second one. Supply by agent to the principal, that is buying agent to the principal, where the goods are being procured by the agent on behalf of the principal. If invoice is in his name, that means what is the position? Invoice in his name means what is the position? The invoice will be in the name of buying agent. Then the agent will be covered under Schedule 1. That means the transaction between buying agent and principal is a deemed supply. But if the invoice is in the name of the principal, then the agent is not covered under Schedule 1. The concept of deemed supply will not be applicable. Okay, that is the point you need to remember. The next point will be in this case is import of service. Sir, import of service is covered under 7.1b. Is it also covered under 7.1c? Yes. Sir, what is the difference between 7.1b import of service or 7.1c import of service? So there are three differences that can be between 7.1b and 7.1c. 7.1b with consideration. 7.1c without consideration. Second difference, 7.1b for any purpose, business or non-business, but 7.1c only business purpose is covered. And third one, 7.1b. 7.1b. So with respect to 7.1b, what is the position, ma'am? With respect to 7.1b, what is the position? From any person. 7.1c, only from related parties. These are the three differences between 7.1b and 7.1c. First one, with consideration, without consideration. For any purpose, only for business purpose. From any person, only from related parties. These are the three differences between 7.1b and 7.1c. Got the point? So now, in order to be covered under 7.1c, 4 questions, answer shall be yes. First question, is it import of service? Yes. Is it without consideration? Yes. Are the related parties? Yes. Is it for business purpose? Yes. For all these 4 questions, answer is yes. Then it is a deemed supply as per 7.1c read with Schedule 1. And definitely you are liable to pay the GST. Okay. And there is a few circulars regarding this point here, and this is one circular with respect to DCA, declaratory agent. Sir, what is meant by this particular DCA, declaratory agent? Generally, a selling agent is a person who will assist in supply of the goods or service by contracting the potential buyers on behalf of the principal. Okay. Simply, selling agent means a person who will help the principal in finding out potential buyers. But what is the difference between selling agent and DCA, declaratory agent? Selling agent duty ends when he finds out potential buyers. But whereas DCA is a person who will guarantee the timely payment to the principal. That means if the buyer fails to pay that amount, then this DCA on behalf of that particular buyer, he will pay the amount. Simply DCA guarantees timely payment to the principal. Okay. That means that's why DCA will provide various loans to the buyer. And paying to the original principal or the supplier himself and recover the amount from the buyer after some time with interest. Okay, the question is here, so how interest is treated in this case? It depends upon invoice is in whose name? Invoice of original supply in whose name? If invoice of the original supply is in the name of the principal, then the loan given by this particular DCA is an independent supply. And definitely it is outside the scope of GST. But if the invoice is in the name of agent, then interest on loan will be a part of taxable value of the original supply of the goods and not considered as a separate supply. Definitely on that, GST is payable. Got the point, ma? If the invoice is in the name of the principal, then the loan by the DCA is an independent activity and it is outside the scope of GST. If the invoice is in the name of the agent, then loan is a part and parcel of the supply. Therefore, interest will be added to the taxable value. And definitely, we are liable to pay the GST and it is not considered as a separate one. So, that is the point you need to remember. Okay. So, the next circular will be that is Pagadi system or tenancy rights. So, with respect to this one, let us assume that there is a building owner that is named as Raj, is having a commercial building. We just gave that particular building to Masterminds. Okay. This particular tenancy agreement for this commercial complex is already a registered one. And on that, stamp duty is paid. And generally, there was agreement between Raj and for payment of a periodic rent. But along with that, actually paid a tenancy premium of 2 crores. The question is here, whether that particular 2 crores of tenancy premium is liable to GST or not is the question. First point is here, why a tenancy premium will be paid? Why a tenancy premium will be paid, ma? A tenancy premium will be paid only. A tenancy premium will be paid when this wants the tenancy rights, subtenancy rights simply. Say for example, why is paying periodic rent to Raj there? Because it is enjoying the possession of the property belongs to Raj. That's why is paying the periodic rent. But along with that, management says, a dil mange more. That's why they're asking the Raj to, Mr. Raj, along with that possession right, we also want the tenancy rights to sublet them. In that case, Raj said that is okay with me, but for that, if you dil mange more, उसके लिए कुछ पाने के लिए कुछ खोना पड़ेगा. So what खोना पड़ेगा? Here, asked by this management there, you need to pay some extra amount to me. So what is that extra amount? That is called as tenancy premium. Okay, for getting the tenancy rights to sublet, okay, generally this tenancy premium will be paid. So here the 2 crores tenancy premium was paid by to the building owner Raj. Say for example, management, let's just assume that has given that particular building on rent to Mr. Guru. In that case, is treated as outgoing tenant and Guru is treated as incoming tenant. And again, from Guru, who is the incoming tenant, which is the outgoing tenant, collected rent and tenancy premium. In that, the tenancy premium is 10 crores. In that, the tenancy premium is 10 crores. The question is here whether the 2 crores between the building owner and the or between and Guru of the 10 crore, whether tenancy premium and periodic rent are subject to GST. Yes, tenancy is a supply of service as per para 2 schedule 3. Definitely tenancy is a supply of service, hence GST is payable. But there is one relaxation here. If the property in the question is a residential property given on tenancy, for residential purpose to a registered person, tenancy premium and periodic rent both are exempted. Simply, if the property in the question is a residential property, that is the first condition. Second one, it must be given for a residential purpose. And third one, the recipient is a unregistered person. If all these 3 conditions are satisfied, then the periodic rent as well as tenancy premium both are exempted from GST. That is the point you need to remember. The property should be a residential property. Second one, on that, it should be given for residential purpose. And recipient is a unregistered person. In that case, tenancy premium as well as periodic rent, both are exempted. Okay, that is the point you need to remember. Next circular will be interstate movement of various modes of conveyance. Like any interstate movement of various modes of conveyance between the distinct persons, including trains, buses, trucks, tankers, trailers, vessels, containers, aircrafts. Okay. Any interstate physical movement of those conveyances between distinct persons, and it should be a interstate physical movement. Any interstate physical movement of conveyance between the distinct persons for these two purposes, for carrying out passengers or carrying out goods or for the sake of repairs and maintenance. It is treated neither the supply of the goods nor the supply of service, and we are not liable to pay any GST on it. Conveyance carrying the goods or passengers are both treated neither as a supply of the goods or as a supply of service, and no IGST will be there. In the same way, if that interstate movement is for the repairs and maintenance, then it is treated neither as a supply of the goods nor as a supply of service, no GST is payable. But keep it in mind, on such repairs and maintenance, GST is payable. I am not talking about the repairs and maintenance service. I am talking about the interstate physical movement of that motor vehicle. On that motor vehicle, we are not liable to pay GST. But whatever the repairs and maintenance we will carry out there, definitely on them, GST is payable. But look at the third point there. Conveyance moved for further supply. That means the physical movement of the conveyance is for further sale. Like say for example, factory to showroom. In the showroom it will be sold. In that case, definitely it will be treated as supply of the goods or service depending upon the facts of the case, and IGST shall be levied. Same concept is applicable with respect to interstate movement of the rigs, tools, spares and all other goods on a wheel. So simply any interstate physical movement of the motor conveyance between the distinct persons for three purposes. It is neither the supply of the goods nor the supply of service. So what are the three cases? The physical movement is for carrying the goods or for passengers or for repairs and maintenance. In all these three cases, what is the position? It is neither the supply of the goods nor the supply of service, and we are not liable to pay any GST. Okay. So this is the circular you need to remember. After completion of this 7.1c, the next point is we need to see 7.1a. The next thing we need to see is 7.1a. That means section 7, subsection 1, clause A. Okay. Previously, there is a section actually 7, subsection 1a is there. What does section 7, subsection 1a deals with? Generally, it deals with classification. Whether it is a supply of the good or a supply of service will be taken care by this 7, subsection 1a. Just like I will show you the overview of section 7, subsection 1a. So, this is the overview of the topic section 7, subsection 1a. What does section 7, subsection 1a deals with? It deals with classification. Whether it is a supply of the goods or a supply of service will be taken care by 7, subsection 1a. Okay. So, but keep it in mind, section 7, subsection 1a does not deals whether the particular transaction amounts to supply or not. If at all it is a supply as per section 7.1, whether it amounts to supply of the goods or supply of service will be taken care by 7 subsection 1a. So simply 7 subsection 1a deals with classification, whether it is a supply of the good or a supply of service. In that, the first point is transfer. In the transfer, if you observe there, with respect to first point transfer, point A deals with transfer of title in the goods and point C deals with transfer of title in the future. Transfer of title in the goods or transfer of title in the future. Okay. So with respect to that point, transfer of title in the goods or transfer of title in the future, what is the position, ma? Here, what is meant by the word title? Ownership. If the ownership is going to be transferred immediately as per point A, or ownership is going to be transferred at a future date. In both cases, what is the position, ma? It is the supply of the goods. Without transfer of ownership, only rights in the goods is transferred, just like possession. In those cases, it will be treated as supply of service. So, point A deals with transfer of ownership immediately. Point C deals with transfer of ownership at a future date. But here the transfer of ownership is there. Therefore, whether it is point A or point C, it will be treated as supply of the goods. But without transfer of ownership, only the possession or right in the goods is transferred. It is a supply of service. Next, second point is land and buildings. So with respect to land and buildings, what is the position, ma? Tenancy of the land or letting out of the building. Tenancy of the land or letting out of the building. What is the position, ma? Definitely tenancy of the land or letting out of the building. Here the ownership is not going to be transferred. Therefore, is it a supply of the goods or a supply of service? Supply of service. That is the second one. And third one is treatment or process. This is technically called as job work. What is meant by the word job work, ma'am? Treatment or process applied on another person's goods. It is known as job work. In job work, the ownership is not going to be transferred. Here the thing that is going to be transferred is the possession. That's why, is it a supply of the good or a supply of service? Supply of service. Fourth one, transfer of business asset. In that the first point will be when the business asset is going to be transferred permanently, or if at all there is any disposal of the business asset, definitely it is a supply of the good. In the same way, when the business assets are used for private purpose by the owner, or the owner makes them available to any other person for his personal use on a temporary basis, definitely it will be treated as supply of service. And in that, the third point is whenever the business is closed, definitely whatever the closing stock that was there, it is deemed to be sold. Because it is deemed to be sold, the word sold is there, deemed to be supplied. That means, is it a supply of the goods or a supply of service? Definitely it is a supply of goods. In the same way, fifth one, printing of immovable property other than land and buildings. Definitely here the ownership is not going to be transferred. Therefore, it is a supply of service. Construction. So, construction can be here divided into two types. While the property was under construction, some part of the consideration was paid. It comes under supply of service. But whereas the total consideration was paid, after the certificate of completion, it comes under sale of building. If at all it is a sale of building, what is the position, ma? Definitely on that there will not be any GST. So it will be covered under this point B only when some part of the consideration was paid while the property was under construction. Definitely it is a supply of service. Next one, IPR. What is meant by this IPR? Intellectual property rights, like patents, copyrights, trademarks, etc. So regarding that, what is the position, ma? If this IPR is going to be transferred permanently, it is a supply of the goods. If this IPR is going to be transferred on a temporary basis, it is a supply of service. IPR is going to be transferred on a permanent basis. It is a supply of the goods. This IPR is going to be transferred on a temporary basis. It is a supply of service. Okay. Next one is IT software. With respect to IT software also, it can be divided into 2 points. One is pre-packed software. Second one is tailor-made software. If at all it is a pre-packed software, means ready to install, definitely it is a supply of goods. Second one is tailor-made software. What is meant by this tailor-made software? Tailor-made means tailor-made software. What is meant by this tailor-made softwares? Tailor-made software means what we can say customized softwares. The softwares that are designed as per the specifications of the customers, definitely it is a supply of service. Pre-packed software is the supply of the good. Tailor-made software is the supply of service. Tolerance or forbearance both are treated as supply of service, and transfer of right to use without the transfer of ownership, it is also a supply of service. And this is the fifth point. And sixth point will be composite supply. In that, only composite supply means where goods plus services both are there. Generally, as per GST law, only two items are treated as composite supply. One is works contract, second one is catering. In this works contract as well as catering, even though the goods element was involved, law specifically declares works contract as well as catering as supply of services only. Okay. And previously there was a seventh point, see this supply of the goods by AOP to members. Now that word was removed. Okay. Now there are only in 7.1a 6 points is there, and seventh one now incorporated as a separate clause under section 7.1. Now we will see that 7.1. Okay, the clause AA. Okay. So with respect to this is section 7, subsection 1a, para 7, which was there previously, which is now omitted. What it was saying is any unincorporated association or body of individuals supplying the goods for cash or for deferred payment to any members is deemed to be a supply of the goods. But the question arises here whether the association and its members are different persons or not. This is the question. Is association different from its members? Is association different from its members? Answer is yes. But as per one case law, court specifically said that association and members are the one and the same. That's why in order to avoid the confusion, retrospectively, that is with effect from 1st July 2017, a new clause was inserted and 7.1AA. As per this clause, any person other than individual. Any person other than individual. Example, association. Okay, any transaction or activity that happens between this association and the members who constituted that particular association for any consideration. The consideration may be cash or any other valuable consideration. Definitely it will be treated as supply. So any transaction that happens between association and its members, any activity that happens between association and its members, for whatever the consideration, it is a supply. And for that, there is explanation. So what is the explanation that is there? For the above provision, persons other than individual and its members are deemed to be two separate persons. For the above provision, persons other than individual and its members are deemed to be separate persons. That means association and members are treated as two separate persons. Now, the transaction between association and the members is taxable. That is the point one need to remember. Okay. Okay, my dear students, now we are going to discuss about 7 subsection 2. After completion of 7.1 as well as 7 subsection 1e, the next thing we need to see is 7 subsection 2. Sir, what does 7 subsection 2 deals with? 7 subsection 2 deals with negative list of GST. That means the activities which are neither the supply of the goods nor the supply of service. Those things are specified under 7 subsection 2. Okay. As per 7 subsection 2, read with schedule 3, deals with negative list of GST. In that, there will be 6 points. So the first point is, whatever the services that are provided by employee to the employer in the course of employment for what he receives salaries or wages, it is neither the supply of the goods nor the supply of service. Already we know this point very well, because as per 7 subsection 2, the point will be, as per 7 subsection 2, the point will be, whatever the services the employee will do in the capacity of employee and in the course of employment, and for that, what is the consideration he must receive? Salary. Then it is neither the supply of the goods nor the supply of service. Okay. And in the same way, second point will be services by court or tribunal. Whatever the services that are provided by the court or tribunal, generally whatever the fee that is paid to the court in order to admit a case, it is neither the supply of the goods nor the supply of service. Okay. And in the same way, the following persons in their respective capacity, that means it is no employment contract will be there with MPs, MLAs, person holding a position by the virtue of constitution, person holding a position in a body that is established by the government. So whatever the services these people generally will provide, it is neither the supply of the goods nor the supply of service. First one, MPs, MLAs, keep it in mind. Whatever the services the MPs or MLAs will do in the capacity of MP, in the capacity of MLA, it is neither the supply of the goods nor the supply of service. But whatever the other things they will provide, other than in the capacity of MP or MLA, those are liable to GST if at all they are covered under 7 subsection 1. Let's say MP purchased a BMW car. So around that there will not be any GST. Answer is no, because it is not the duty or the function of the MP to purchase a BMW. Na? Whatever the constitutional entrusted functions that will be there, those are neither the supply of the goods nor the supply of service. But not in the capacity of MP or MLA, it is neither the supply of the goods nor the supply of service. Okay. And in the same way, constitutional post holders. Sir, constitutional post holders like President of India, Governor, Chief Minister, Prime Minister, Chief Election Commissioner, all these people will be treated as that means whatever the services they will do, they are neither the supply of the goods nor the supply of service. And in the same way, person holding a position in a body established by the government, simply the government regulatory bodies like SEBI, IRDA, and Telecom Regulatory Authority of India. In those bodies, as a chairman, as a member, as a director, whatever the position you will hold, it is also neither the supply of the goods nor the supply of service. Say, as a SEBI director, as a SEBI member, as a SEBI chairman, what is the thing you will do? It is neither the supply of the goods nor the supply of service. Okay. And in the same way, fourth point will be any funeral, burial, crematorium, mortuary services, including transportation of the deceased. It is neither the supply of the goods nor the supply of service. So what does this mean? Generally, these things, any activities in relation to a deceased person, generally human emotion will be involved there. So government don't want to touch those human emotions. That's why whatever the activities in relation to a deceased person, like burial, crematorium, mortuary, all those services are neither the supply of the goods nor the supply of service. In the same way, sale of the land and buildings, whereas with respect to sale of land, it is not a supply. If at all it is in relation to sale of the land, it is not a supply. If at all is a sale of building, it depends upon when the consideration was paid. If the total consideration was paid after the certificate of completion, then it is not a supply. Where some part of the consideration was paid before obtaining the certificate of completion, definitely it comes under supply of service. What is the thing with respect to building? If at all some part of the consideration that is paid by the consent party, some part of the consideration that is paid by the party, okay, some part of the consideration paid before certificate of completion that is issued by Urban Development Authority, then definitely it is a supply of service, you are liable to pay the GST. But whereas the total consideration was paid after the certificate of completion, it is not a supply, there is no need to pay any GST. That is the thing you need to remember. Okay. So what is this sale of building? With respect to this sale of building, what is the position? Full or part of the consideration is received before obtaining certificate of completion. Definitely it is a supply of service and you are liable to pay the GST. But whereas full consideration is received after obtaining certificate of completion from the Urban Development Authority, UDA, it will be called as it is neither the supply of the goods nor the supply of service and we are not liable to pay any GST on it. Okay. And last but not the least, actionable claims. I think in that there is an amendment also. We will see the amendment now. So with respect to the actionable claims, other than specified actionable claims, they are neither the supply of the goods nor the supply of service. And now we will see what is that particular amendment. I think already we had a discussion in the goods and services. Once again we are having a discussion here. So already we had a discussion on this point. Although the actionable claims are the goods, but the supply of only specified actionable claims like betting, casinos, gambling, horse racing, lotteries, online gaming, on those services only GST is leviable. That means what are the actionable claims? Now they are named as specified actionable claims. In that how many points are there? In that 6 points are there. Betting, casinos, gambling, horse racing, lotteries, online gaming. With respect to these 6 actionable claims, we are liable to pay the GST. Except them, rest of the actionable claims, they are neither the supply of the goods nor the supply of service. Therefore, we are not liable to pay any GST. Okay. So, these are the 6 points we should remember with respect to 7.2. And the last but not the least, we need to see now is composite or mixed supply. Section 8, if the item is going to be supplied individually, in those cases, Section 7 is applicable. If the item is going to be supplied as a bundle, in those cases, Section 8 will come into C. If the item is going to be supplied individually, in those cases, Section 7 is applicable. If those items are going to be supplied as a bundle, in those cases, what is the section that will be applicable? Section 8 is applicable. In that Section 8, again the supplies can be divided into two types. One is composite supply, second one is mixed supply. Sir, what is meant by the word composite supply? If all these three conditions are satisfied, then it is a composite supply. First one, minimum two or more taxable supply is there. Second one, they shall be naturally bundled. Third one of the supply should be a principal supply. If all these three conditions are satisfied, it is neither the supply of the goods, it is a composite supply. First condition, minimum two or more taxable supply shall be there. Second one, it is a natural bundle. Third one of the supply should be a principal supply. If all these three conditions are satisfied, it is a composite supply. The best example for that is, let's say, mobile phone with charger. First condition, minimum two or more taxable supplies shall be there. Mobile phone is a taxable supply as well as charger is also a taxable supply. Second one, they are naturally bundled. What is meant by the word natural bundle there? Natural bundle means? What is meant by the word natural bundle, ma'am? That means those supplies shall be done in conjunction with each other. Simply, what we can say is, if at all there is a tradition in that particular business to supply them together, or customers expect them in such a way, or without the other, the total bundle will be purposeless. In all these three cases, they will be termed as natural bundle. If at all it is a natural bundle, then it can be a composite supply. And third condition is, one of the supply should be a principal supply. Sir, what is meant by that? Principal supply means which covers the predominant portion of supply. Simply the purpose of contract. Take the example of mobile phone with charger. Then what is the purpose of contract? Mobile. Mobile is the principal supply. Let's say hotel accommodation with breakfast. In that, hotel accommodation will be the principal supply. Like that. So, what is the predominant portion of the supply? It will be called as principal supply. So, if all these three conditions are satisfied, it will be called as composite supply. First one, minimum two or more taxable supplies shall be there. Second one, they are naturally bundled. And third one of the supply should be a principal supply. If all these three conditions are satisfied, then definitely it is a composite supply. Sir, in that case, what is the rate that will be applicable to the bundle? If the supply is a composite supply, then it will be treated as supply of principal supply. And what is the rate that is applicable to the principal supply will be applicable to entire supply or entire bundle. So simply, composite supply rate is equal to principal supply rate. That is the thing we need to remember. Okay. The next point will be mixed supply. To treat any supply as a mixed supply, first one, minimum two or more individual supplies will be there. You can observe the words that are there in composite supply or mixed supply. In composite supply, two or more taxable supply shall be there. But to be treated as a mixed supply, minimum two individual supplies is sufficient. Those supplies can be either taxable ones or non-taxable ones. It does not make any difference to treat it as a mixed supply. Okay. Whether it can be a taxable supply or exempted supply, both can be covered under this mixed supply. Okay. And the condition is, those two or more individual supplies shall be done for a single price. Take the example of celebrations box. On the celebrations box, individual prices will not be there now. Dairy Milk, Gems, 5-star, all the three will be there in celebrations box. But the price will be 125 rupees. Okay. In that, there is a single price. In that case, automatically it is artificial bundle. If at all it is artificial bundle, it can't be a composite supply. So these are the three conditions that are required to be satisfied. First one is, what is the first one, ma? Minimum two or more individual supply shall be there. Second one, this shall be supplied for a single price. Third one, it is not a composite supply. If all these 3 points are satisfied, it is a mixed supply. In that case, what is the rate that is applicable to mixed supply? Highest rate. If the supply is a mixed supply, it will be treated as the supply of such individual supply which will attract the highest rate of GST. Simply, mixed supply rate is equal to highest rate. So, these are the important points you need to remember with respect to chapter number 2. That is supply. So, the next topic will be chapter number 3. In old syllabus, it will be called as levy and collection. In the new syllabus, it will be called as charge of GST. In that 9.1, 9.2 नाम के वास्ते, the 9.1 generally deals with FCM and 9.2 deals with GST on the petroleum products. Whenever GST Council approves from that particular date, GST will be levied. Now we are going to see 9.3 RCM. In that RCM, not everything I will cover here. What are the most important things under RCM? From the examination point of view, those are the things I am going to cover in this particular point. Generally, what is meant by FCM and what is meant by RCM? FCM means forward charge mechanism and RCM means reverse charge mechanism. Okay. So, FCM means forward charge mechanism, RCM means reverse charge mechanism. Under FCM, the recipient will pay to the supplier. In return, supplier will pay to government. Under RCM, recipient will pay the amount directly to the government. So, when FCM and when RCM will be followed, it depends upon government. When the government feels convenient to collect the tax from the supplier, it will follow the FCM. If the government feels convenient to collect the tax from the recipient, it will follow RCM. Okay. Under RCM, the first point is we know that is this is the reverse charge mechanism. Normally, supplier is liable to collect and pay the tax to the government. That is called FCM, forward charge mechanism. In RCM, recipient is liable for the same. Previously, all the burden which was on the supplier is now on the recipient in RCM for the compliance and tax deposit. Okay. So, in that RCM, we are going to see, first one is GTA, Goods Transport Agency. With respect to GTA, we are having the two options. With respect to GTA, we are having the two options. One is, with respect to GTA, Goods Transport Agency, it can follow either FCM or RCM. See the case 1. With respect to case 1, supplier is GTA and recipient is Reliance Limited, which is there in Bangalore, is the recipient. So, Reliance Limited means which is a body corporate and body corporate is a specified person. If you observe with respect to GTA, supplier is GTA and recipient is specified person, then only the concept of RCM will be applicable. Sir, who are those specified persons? Factory, society, cooperative society, registered person, CTP, partnership firm, all these persons will be treated as specified persons. If any one of these people are the recipient, then only the concept of RCM will be applicable. If the recipient is not a specified person, then RCM will not be applicable. Okay, based on that, with respect to case 1, who is the supplier? GTA. And he is transporting the goods and issues a consignment note. Therefore, definitely will be a GTA. And who is the recipient? Reliance Limited, which is there in Bangalore. So, Reliance Limited is a body corporate, which is a specified person. In that case, there are two options. One is it can follow either FCM or RCM. In our example, they are following the RCM. If at all they are following the RCM, what is the rate of tax that will be applicable? 5%. So, based on that, being a RCM 1, recipient needs to pay the GST and rate of tax will be 5%. And what is the freight amount? 1 lakh. 1 lakh into 5%, it will be 5,000. This 5,000 will be paid by the recipient there. And see the example of case 2. Who is the recipient there? Radha of Kochi is the recipient there. In that case, what is the position? This recipient is a unregistered individual and not a specified person. In that case, FCM will be applicable technically, but it is exempted. There is no need to pay any GST on it. Okay. There is no need to pay any GST on it. This is the point you need to remember. Okay. And we can see another example here with respect to this. That is, if you observe there, with respect to the previous one also, with respect to GTA, you're having the two options. If the recipient is liable to pay the GST, rate of tax will be 5%. Whereas, if at all they just want to follow the FCM, in that case, the rate of tax will be 12%. Sir, in that case, everybody will follow RCM only now. But there is a twist here. If you want to follow the FCM, rate of tax is 12%, but you can claim the ITC. But whereas if you want to follow the RCM, the rate of tax is 5%, but you cannot claim the ITC. See the example here. This supplier who is a GTA, just a previous example, who is the recipient, Reliance Industries, okay, who is a specified recipient, RCM is applicable, and what is the freight, 1 crore, as per RCM, at the rate of 5%, what is the rate of tax, 5 lakhs. On the file, so that means 1 crore into 5%, it will be 5 lakhs. Okay. But this particular GTA purchased a new truck of Bharat Bench. Value is 20 lakhs. GST at the rate of 18%, it will be 3,60,000. Sir, is it possible for the GTA to claim the ITC of that particular new truck that was purchased? Answer is no. Whenever you are following RCM, the GTA cannot avail the ITC. So on the inverse applies, no ITC can be claimed by the GTA. When no ITC is allowed, the tax portion will be added to the cost. Now the total cost of the truck will be 23.60 lakhs. That is the point you need to remember. Okay. And second one is, GTA can, by intimation, opt for FCM. In that case, what is the position? If he opted for FCM, what is the rate of tax that will be applicable? 12%. Take the example of Reliance Limited. What is the freight? 1 crore. And what is the rate of GST? 12%. Now, what is the tax you need to pay? 12 lakhs. And same, a new truck was purchased from Bharat Bench. What is the purchase value? 20 lakhs. What is the rate of GST? 18%. And on the 20 lakhs, 18% means it will be 3.60 lakhs. In that case, what is the position? What is the output tax payable? 12 lakhs. What is the ITC you are having? 3.6 lakhs. After deducting that, what is the remaining amount that will be there? 8.4 is the net GST that is needed to be paid in cash. This is the way how the things will follow. Okay, based on that, this is the summary. If he wants to follow the FCM, the benefit of ITC will be available on inward supplies, but the rate of tax will be 12%. But sometimes exemptions can be there. If at all the person is an individual, like that, in some cases exemptions can be there. Do not opt for FCM. Okay, then you can go for RCM. The demerit is no ITC on inward supplies. If at all is a specified person, RCM, the rate of tax will be 5%. And exempted case is TDS or specified goods. That means the person who has taken the registration exclusively for deducting the TDS, means simply government organizations, society established by the government, PSUs. Those people are required to deduct the TDS as per section 51 whenever the contract price is more than 2.5 lakhs. For that sake, as per section 24, they are required to take the compulsory registration. That's why those people who are exclusively taken the registration for the purpose of TDS only, it is exempted. there is no need to pay any GST. Okay. And other than specified persons, it is exempted. There is no need to pay any GST. And now there is the amendment also. Generally FCM 12% with ITC, RCM 5% without ITC. Now along with that, a new point that was inserted is nowadays you can follow the FCM also 5% without ITC. So now FCM two rates, 12% with ITC, 5% without ITC. Under RCM there is only one rate, that is 5% without ITC. This is the important point in the entire RCM GTA. And after that few other services can also be there, like legal services. The service is legal service. Supplier is individual advocate or partnership firm of advocates or senior advocate. And the recipient is a business entity, then RCM can be applied. In the same way, supplier is arbitral tribunal. Recipient is business entity, then also RCM can be applied. And sponsorship services, supplier can be any person. Recipient is body corporate or partnership firm, then also RCM is applied. And fifth one is government. Okay, supplier is government. Recipient is registered person. In case of renting of immovable property, what is the service? Renting of immovable property. Supplier is government. Recipient is a registered person, then RCM. In any other services that are provided by the government, supplier is any person. Supplier is any person. Supplier is government and recipient is business entity, then RCM is applicable. And sixth one is supplier is director. Okay. And recipient is a company or a body corporate, then RCM is applicable. Okay, like that. And another important one is with respect to this RCM, renting of motor vehicle designed to carry the passengers. Renting of a motor vehicle designed to carry the passengers. Regarding this, if services are provided by a body corporate, FCM is applicable. That means supplier is a body corporate with respect to car travels like that, then FCM is applicable. Sir, when the concept of RCM is applicable, if the supplier is any person other than body corporate, then only RCM is applicable. Okay. So, supplier should be any person other than body corporate and recipient is a body corporate. Then only RCM is applicable. So, in order to apply the RCM with respect to renting of passenger vehicles, supplier should be any person other than body corporate and recipient is a body corporate. Then only RCM is applicable. But if the recipient is any person other than body corporate, then also FCM is applicable. Okay. Here also there are two options. They can follow either FCM or RCM. If at all they want to follow the FCM, the rate of tax will be 12%. If they just want to follow the RCM, the rate of tax will be 5%. Okay. But there is a difference between renting of motor vehicle designed to carry the passenger. Second one, service of transportation of passenger. Renting of passenger vehicle is covered under RCM. But passenger transportation service is not covered under RCM. It is covered under FCM. Say, RCM apply when a company hires a bus on a rental basis to transport its employee, then it is covered under RCM. But whereas the company simply buys a ticket and gives it to the employee for his journey, in that case, it is a passenger transportation service and it will be covered under FCM. That is the point. Okay. And another important point is in RCM concept. Supplier is any person. What is the service? Renting of residential dwelling to any registered person. In that case, the liable to pay tax will be the recipient. Simply, Infosys has taken any building on a rental basis to give that particular house as a rent-free accommodation to its employees. In that case, supplier can be any person. Service is renting of residential dwelling. And who can be the recipient? Any registered person. In that case, who is liable to pay? Who is liable to pay? Recipient. Infosys is liable to pay the GST. Okay. And in the same way, another important ones with respect to RCM is, even though I did not cover in this particular slide, yes, I will show you our organization's material for that. You can check it out. See, these are the points what we have covered, and legal services, sponsorship, supplier government, like that. So, and this is the point what I have covered also regarding the directorship. Here, directors can be divided into two types: executive directors and non-executive directors. Executive directors are employees of the company. Therefore, whatever the remuneration paid to them, it will be covered under the word salaries. No GST will be there. But if at all is a non-executive director, that is independent directors, nominee directors, like that, whether the remuneration paid to them will be covered under GST or not, we need to check under which head the TDS is going to be deducted. Okay, if the TDS under income tax is going to be deducted as per section 192, definitely that one comes under salary, employer-employee relation. No GST will be there. If TDS is deducted under section 194J, it is not a salary, definitely is not an employee. In those cases, RCM will be applicable. And director sitting fee always taxable under RCM. And with respect to agency services also, like insurance agent to do insurance company, recovery agent to do bank, these things are also covered under RCM, and recipient is liable to pay the GST. In the same way, music composer to the music company, photographer or artist to the producer, in those cases also RCM is applicable. And who is liable to pay the GST? Recipient is liable to pay the GST. In the same way, author to the publisher. But here the two options will be there. One is FCM, second one is RCM. If he wants to follow the FCM, 4 conditions are required to be satisfied. What are the 4 conditions that are required to be satisfied, ma'am? First one, recipient is a registered person. Second one, he should file a declaration that is willing to pay the GST under FCM. Third one, once the option was selected, it shall not be withdrawn for the remaining part of the year. And third one, he should make a declaration in the invoice. All these points are satisfied. In that case, what is the position, ma'am? Definitely, FCM can be followed. If any one of these conditions are not followed, in those cases, what is the position, ma'am? RCM is needed to be followed. Next one. Supplier of overseeing committee. Members of overseeing committee to RBI, individual direct selling agents to bank, NBFC, then also the RCM is applicable, and business facilitator to bank, or agent of business correspondent to business correspondent. In those cases also, the RCM concept is applicable. And security services, supplier can be any person other than body corporate, and the recipient is a registered person, then RCM is applicable. That definitely registered person is liable to pay the GST. If security services are provided by a body corporate, in those cases FCM is applicable. Supplier is liable to pay the GST. And with respect to lending of securities, then supplier is the lender of those shares, recipient is the borrower of those shares. In those cases, definitely what is the position? RCM is applicable. Borrower is liable to pay the GST. Okay. If you observe here with respect to entire concept of this RCM, RCM is applicable practically in 3 cases. If the supplier is from unorganized sector, if the supplier is an individual, and the supplier is government. Majorly in these 3 cases, the government followed the RCM. In rest of the cases, FCM is followed. That's why I told you. From whom the government feels it convenient to collect the tax, then based on that the concept of FCM or RCM is there. If the government feels to collect the tax from the supplier, then FCM will be followed. If the government feels that definitely it is easy to collect the tax from the recipient than the supplier, then RCM will be followed. This is 9.3. And there are few amendments regarding this RCM concept here with respect to GTA. Now, an additional point that was inserted with respect to GTA is required to exercise the option of paying the GST under forward charge by making declaration on or after the 1st January of the preceding financial year, but not later on 31st March of the preceding financial year. So that means what is the option that was there? Say for example, if you want to exercise this option from the next financial year, that is 24-25 onwards. In that case, what is the position? So 1/4/2024. In order to exercise this before that, from 1st January 2024 to 31st March 2024. Up to this, in this particular period of time, you need to give intimation to the department that you are willing to follow the FCM. GTA is required to exercise the option of paying the GST under forward charge by making declaration. What is the time limit? On or after 1st January of the preceding financial year up to 31st March of preceding financial year. That means 3 months. In the last quarter simply. In the preceding financial year, last quarter, you need to give the intimation. Okay. Once the option to pay the GST under FCM has been taken by the GTA, it shall be deemed to have been exercised for future financial years as well, unless GTA files a declaration to shift back to RCM mechanism. Okay. What is the point here, ma? Once you have taken the FCM option, it is deemed that you have taken that particular option for the entire portion of your life. Okay. That means next financial years also. So that means is it not possible to get back to the RCM? 100% it is possible. What the law is saying is, once you have given the declaration, every year it is not required to give the declaration if you want to follow the FCM. Sir, if you want to follow the RCM, sir, then you need to give the intimation. That is the thing only said by the department. Okay, this is the amendment you need to remember with respect to RCM here. Okay. And another point is there in RCM. So just now had a discussion that if the supplier is director and recipient is the company, then RCM is applicable. Definitely the recipient company or body corporate is liable to pay the GST. Sir, that means every service by the director to the company is liable under RCM? Answer is no. Whatever the services the director will do in the capacity of director to the company, those are covered under RCM. Whatever the other services in the personal capacity will do, like renting of immovable property to the company, it is not the service of a director. That service was done in its individual capacity. In those cases, FCM will be applicable. Okay. That is the point you need to remember with respect to amendments. So this is the concept you need to remember with respect to 9 subsection 3. Okay, ma, the next concept we need to see is here 9.5 e-commerce operator. Sir, who is an ECO? ECO means any person who runs, operates, manages the digital facility or the platform for electronic commerce. That fellow will be treated as ECO. ECO is neither the aggregator, ECO is an aggregator. He is neither the supplier nor the recipient, but brings both these persons onto a common platform, either by using website or mobile app. That person is known as ECO. Sir, that means every ECO is notified under 9.5? Answer is no. only if the supplier of services are notified under 9.5. Okay. ECO of the goods are not notified under 9.5. Only ECO of services are notified under 9.5. So that means ECO of every service is notified under 9.5. Answer is no. Only 4 services are notified here. Only 4 services are notified here. In that, the first point will be passenger transportation. With respect to passenger transportation, I think there is one amendment also with regarding that. We will see that. So passenger transportation means, example, Ola, Uber, like that. The passenger transportation can be done either by way of radio taxi or motor cab or motorcycle. With respect to omnibus, there is an amendment. We'll discuss it later on. Always ECO is liable to pay the GST generally with respect to transportation of passengers. And what is the amendment that is there in this? We need to see now. So the general rule is with respect to ECO, the general rule will be, say for example, with respect to transportation of passengers. The previous point is whether the supplier is registered or unregistered. In both cases, ECO is liable to pay the GST. But now there is an amendment with respect to omnibus. With respect to omnibus, if the supplier is a company, then who is liable to pay the GST? Supplier itself is liable to pay the GST. Previously, what is the position? Whether the supplier is registered or unregistered, whether the supplier is individual, partnership firm or company, it does not make any difference. Every case, who is liable to pay the GST, ECO is liable to pay the GST. Okay. With respect to this, there is an amendment in this point is, in case services by way of transportation of passengers by omnibus are supplied through ECO, ECO shall be liable to pay the GST only if the supplier is any person other than company. That means if the supplier is a company, in that case, ECO is not liable to pay the GST. Supplier himself is liable to pay the GST on that. This is with respect to omnibus. Rest of the cases, the point remains the same. That means whether the supplier is registered or unregistered, whosoever is the supplier, in all these cases, who is liable to pay the GST? ECO is liable to pay the GST except omnibus. Okay. Respect to omnibus, if the supplier is a company, supplier will pay the GST. If the supplier is any person other than company, in those cases, who is liable to pay the GST? ECO is liable to pay the GST. Okay. So this is first point, passenger transportation. Second one, hotel accommodation for residential or lodging purpose. The example is OYO rooms, make my trip, like that. If the supplier is a registered person, supplier himself will pay the GST. If the supplier is an unregistered person, in those cases, ECO is liable to pay the GST as per 9 subsection 5. Next one, housekeeping services, urban company, like plumbers, carpenters, electricians, etc. With respect to this housekeeping services, same point, if the supplier is a registered person, supplier himself will pay the GST. If the supplier is an unregistered person, in those cases, ECO is liable to pay the GST. If the supplier is a registered person, supplier will pay the GST. If the supplier is an unregistered person, in those cases, ECO is liable to pay the GST. And now the fourth one, latest added item is restaurant service. With respect to restaurant service, Zomato or Swiggy is liable to pay the GST. That means food aggregators, except restaurant service through specified premise. What is it, specified premise? Where the hotel accommodation tariff is more than 7,500 rupees per day. In that case, hotel itself will pay the GST. In rest of the cases, Zomato or Swiggy are liable to pay the GST on that. This is the point you need to remember. Okay. Next one is Section 10, Composition Scheme. So what does this composition scheme deals with? Generally, this particular composition levy scheme is available for intrastate supplies for easy and simple compliance. Simply, this particular scheme is designed for small-scale business units who are making only intrastate supplies. For them, in order to give them the edge of lower rate of tax as well as the procedural simplification, this composition levy scheme was introduced. And what are the advantages? Is it optional or mandatory? It is optional. It is optional. Sir, why it is optional, sir? Because if you see what the first, why it is option, before going further, first you need to see what are the advantages. There are two advantages with respect to this composition levy scheme. Easy compliance, lower rate. Easy compliance and lower rate. So easy compliance means generally if at all you follow section 9, that is regular scheme, then every month you are required to file GSTR 1 and GSTR 3B. And yearly basis GSTR 9 is also required to be filed. That means per month 2 into 12, 24 plus 1, total 25 returns are required to be filed. But if at all you are eligible for this composition scheme, then CMP 08 is needed to be filed on a quarterly basis. That means per annum 4 plus GSTR 4 plus GSTR 9A, only 6 returns. If at all you are eligible for this composition scheme. So that's why easy compliance will be there. A quarterly payment of tax instead of monthly payment. And after making the payment, you need to file a statement, that is CMP 08, a statement on or before 18th of subsequent month from the end of the quarter. Okay. Say with respect to first quarter, April, May, June, July 18th. Second quarter, October 18th. Third quarter, January 18th. Last quarter, April 18th. Okay. And regarding that, financial year, along with the year end, GSTR 4 is needed to be filed on or before 30th April of the next financial year. That's why that much simple, easy compliance will be there. And along with that, lower rates will be there. If at all you follow section 10.1, that is normal composition scheme, what are the lower rates that are applicable, ma'am? Manufacturer, 1% of aggregate turnover. Trader, 1% of taxable turnover. Restaurant, 5% of aggregate turnover. These are the lower rates that are applicable. For the benefit that is foregone is ITC, input tax credit. That's why the scheme is optional. If you don't want to break the chain of ITC, you will choose normal scheme. If you don't care about the ITC, definitely you can go for this particular normal composition scheme. Okay. So the next point will be, what is the eligibility criteria? So the eligibility criteria for section 10.1 normal composition scheme will be, the basis is aggregate turnover. But here we can divide the states into 2 points. One is general category and second one is special category. With respect to general category, the threshold limit is 1.5 crore in the preceding financial year. And with respect to the special category, the threshold limit will be 75 lakhs. Sir, what are the special category states where the limit is 75 lakhs? Sikkim, Arunachal Pradesh, Tripura, Nagaland, Uttarakhand, Mizoram, Manipur, Meghalaya. With respect to these 8 special category states, instead of 1.5 crore, the limit will be 75 lakhs. So, for example, in order to be eligible for this composition scheme under 10.1, the point is simple. Say, for example, in the current financial year 23-24, if we want to go for composition scheme, Then in the preceding financial year, that is 22-23, in the preceding financial year, 22-23, what is the position, ma? Definitely with respect to 22-23, in the preceding financial year, 22-23, if your aggregate turnover is less than or equal to 1.5 crore, if at all it is a general category state, if at all it is a special category state, in the preceding financial year 22-23, your aggregate turnover is less than or equal to 75 lakhs. In that case, what is the position, ma? In the current year, you are eligible for this composition scheme. Okay, that means the eligibility criteria will be based on preceding financial year. If in the preceding financial year, if the aggregate turnover is less than or equal to 1.5 crore in the general category states, or in the special category states what we have discussed, if at all it is less than 75 lakhs, less than or equal to 75 lakhs, in the current year we will be eligible for this composition scheme. Okay. And the next one is, sir, what is meant by the word aggregate turnover? The question is here, what is meant by the word aggregate turnover, ma'am? Aggregate turnover means taxable supplies plus exempted supplies plus exports plus interstate supplies minus GST minus RCM purchases minus exempted interest. What is the amount we will get? It is known as aggregate turnover. This aggregate turnover shall be taken on all India basis for a single PAN. Not state-wise turnover will be considered here. On all India basis for a single PAN, this aggregate turnover will be calculated. And what is the formula that it includes? Taxable supplies, exempted supplies, non-taxable supplies, exports, interstate supplies, excludes GST, inward supplies, even if it is taxed under RCM. So simply the formula will be taxable supplies plus exempted supplies plus exports plus interstate supplies minus GST minus RCM purchases minus exempted interest. So what is the amount we will get? It is known as aggregate turnover. If this aggregate turnover is less than or equal to 1.5 crore or 75 lakhs in the preceding financial year, then in the current year you can be eligible for this composition scheme. Okay, the next point will be, sir, what are the conditions or disadvantages regarding this? First point is the conditions, or sometimes we may call also these can be the disadvantages. First one is supplier cannot collect tax on supplies from recipient. That means whatever the tax like that 1% or 5%, the composition rates that are there, those amounts are needed to be paid by the supplier out of his own pocket. Okay. Supplier cannot collect the tax from the recipient. This is the first one. Second one, supplier is not eligible for ITC on inward supplies. Already I told you now, that's why this scheme is optional. If you want to go for composition scheme, you cannot claim the ITC. You cannot claim the ITC. Okay. If you want to go for ITC, you cannot choose the composition scheme there. Next one. Supplier is not allowed to make interstate outward supplies. That means once you opted for composition scheme, while you are there in the capacity of composition dealer, in that capacity, you cannot make any interstate outward supplies. But keep it in mind, interstate outward supplies are prohibited, but interstate inward supplies are allowed. In our simple language, interstate sales are prohibited, interstate purchases are allowed. Okay, next one. Supplier cannot choose the composition levy scheme. If one of the business segment or vertical wise, choice is for a PAN basis. Simply, if you want to go for composition scheme, go for all or go for none. If you want to go for composition scheme, go for all or go for none. That is the point you need to remember. Supplier cannot choose CLS, composition levy scheme, for one unit. That means simply if you want to go for composition scheme, go for all or go for none. That is the point you need to remember. Okay. And the next point will be the negative list of this composition scheme. That means these persons cannot opt for composition levy even if the turnover is less than the prescribed limit. First one, CTP, casual taxable person. Sir, what is meant by the word CTP? The person who is having a fixed place of business in one state and making occasional supplies in some other states, then that person is known as CTP. CTP is not eligible to take any composition scheme. Next one, NRTP. What is meant by the word NRTP? The foreigner who is making occasional supplies in India. That person is known as NRTP. This NRTP is also not eligible for composition scheme. Next one, person supplying the goods through ECO. There is an amendment in this. We will discuss this point later on. And manufacturer of notified goods. Sir, what are those notified goods? Ice cream, pan masala, tobacco, aerated water, building bricks, fly ash bricks, roofing tiles. With respect to these notified manufacturers, they are not eligible for this composition scheme. But keep it in mind, manufacturers of these notified goods are not allowed for composition. Traders are eligible. Okay. And in the same way, person making non-taxable supplies. What is meant by person making non-taxable supplies? Simply, if at all you are doing any liquor supply, alcohol or petroleum products, something like that, if one of the unit is making a non-taxable supply, then automatically the remaining units, even though they are making the taxable supplies, but still, what is the position, ma? But still, they are unable to take the composition. Why, sir? There is one slogan I told you previously. If you want to go for composition scheme, go for all or go for none. If one of the unit is making non-taxable supplies, automatically remaining units also will become ineligible. Okay. Next point is here. Supplier of services other than restaurants. Supplier of service other than restaurant. Okay. That means this particular composition scheme is normal composition scheme under 10.1 is exclusively designed for supplier of the goods. The one and only service that was eligible for this composition scheme will be restaurant service. Okay. So except restaurant service, no other service providers are eligible for this normal composition scheme under section 10.1. Okay. Next point will be, sir, that means there is no scheme that it was designed for exclusive supplier of service. Yes. There is one scheme that was there which is exclusively reserved for service providers. That particular scheme is known as concessional rate scheme under section 10.2a. That one is concessional rate scheme under section 10.2a. Sir, what does this concessional rate scheme under section 10.2a deals with? It has an option to choose this particular scheme. This scheme means here concessional rate scheme under section 10.2a. Okay. What is eligibility criteria? Provided their previous year aggregate turnover is less than or equal to 50 lakhs. If at all it is 10.1, what is the criteria, ma? What is the criteria? With respect to 10.1, what is the criteria, ma? In the preceding financial year, the turnover shall be less than or equal to 1.5 crore or 50 lakhs. Okay. So, this concessional rate scheme under section 10.2a. Sir, what are the eligibility criteria? Thus, one and only eligibility criteria will be, in the preceding financial year, if your aggregate turnover is less than or equal to 50 lakhs, In the current year, you can be eligible for this concessional rate scheme. Okay. And second one is, sir, what are the advantages or what are the rates, lower rates that are applicable? The concessional rate of tax will be CGST at the rate of 3% and SGST at the rate of 3%. In total, GST rate will be 6%. Okay. That is the point you need to remember. Sir, what are the conditions? Same as in normal composition levy scheme under section 10(1). Persons not eligible is same as in a normal composition scheme, except supplier of service, because this scheme was designed for supplier of service. Now, except that point, whatever the points you learned in previous slide, same conditions are applicable to this concessional rate scheme also. And with respect to some special points which are applicable for this composition schemes are interest or discount income not to be included in the aggregate turnover. Sir, that means what is the position here? Already I told you, while computing the aggregate turnover, what is the formula I told you? Taxable supplies plus exempted supplies plus exports plus interstate supplies minus GST minus RCM purchases minus exempted interest. So exempted interest will be excluded while computing the aggregate turnover for this composition scheme. Okay. And if the scheme is opted in the same year in which registration is obtained, then what is the procedure we need to follow? Because the year in which we started the business, automatically we will be eligible for this composition scheme. Why, sir? Because in the preceding financial year, the organization is not there. If the organization is not there, then what is the position, ma? If organization is not there, then the turnover is 0. 0 is less than or equal to 1.5 crore. In that case, what is the position, ma? So the year in which we started the business, what is the position, ma, in that case? Definitely there is no previous year. No previous year means no turnover. No turnover means less than the prescribed limit. Therefore, the year in which we started the business, always we will be eligible. Sir, in that case, how to compute the rates and tax payables? We will see that. This is the point you need to remember here. Okay. So, the turnover till the registration, no GST is needed to be paid. Registration to the total financial year turnover up to 50 lakhs, being we are discussing about concessional rate scheme under 10(2)(a), the composition rates are applicable. Beyond 50 lakhs, the normal rates are applicable. Say for example, your current year turnover is 90 lakhs. In that 90 lakhs, you just started the business in this year. Just started the business in this year. In that case, being a service provider, the registration criteria will be 20 lakhs. Therefore, turnover till registration, that is up to 20 lakhs, there is no need to pay any GST. And from the registration date up to the turnover of 50. Okay, that means 50 minus 20 on 30 lakhs, composition rates 6% is applicable. In excess of 50, how much is the turnover that is there? 40 lakhs. On that 40, normal rates are applicable. So, up to the registration date, what is the position, ma? No GST is payable. Because you are an unregistered person, therefore you are not liable to pay any GST on it. Therefore, in the 90 lakhs, up to 50 composition rates are applicable. In excess of that, that means 90 minus 50, 40 lakhs, normal rates are applicable. In that up to 50 lakhs, first 20 lakhs you have done in the capacity of unregistered person. In that case, GST payable or not payable? GST not payable. Because you are unregistered person. In excess of 20, up to 50, the 30 lakhs will be there now. For that 30 lakhs, what is the position? 6%. What is the position, ma? 6% is applicable. That is 3% CGST and 3% SGST. Concessional rate is applicable. If the turnover is more than 50, how much excess that was there? On that excess, definitely you are liable to pay the GST at normal rates. Okay. Next one is, what is the procedures? Simply, public notice is required. There is a signboard that I am a composition taxable person must be specified at the place of business. And what is the procedure for opting for composition levy? If at all you are already a registered person and it is a running business, then intimation must be given before the commencement of financial year. If at all it is a new registration, there is no need for separate application form. You can make the option together with the registration while filling Part B of REC 01. Answer, is it possible to withdraw from the composition scheme? Yes. The first one is voluntary withdrawal. Definitely you can exit from the composition scheme, but before such withdrawal, you should make the application. And breach of any conditions like CDP, NRDP, interstate sales, like that, those conditions are there now. If those conditions are not met, if at all there is a breach of condition, in that case, intimation within 7 days of event. Intimation within 7 days of the event must be given to the department. But if any person irregularly avails that, that means even though he is not eligible for composition, but still he climbed the composition scheme, then definitely penalty will be levied and 73, 74 proceedings will be applicable. That is the point you need to remember. Okay. So there ends the topic with respect to this composition levy. These are the important areas you need to keep focus on in this particular topic of composition levy. So the next topic we need to see is composition scheme. After completion of composition scheme, the next topic we need to see is exemptions. So with respect to exemptions, the first service will be healthcare service. Sir, what is meant by the word healthcare service? Healthcare service means any diagnosis, treatment, care, DTC, in a recognized system of medicine in India, it is a healthcare service and it is exempt. So what is meant by the word healthcare service? Any diagnosis, treatment or care in a recognized system of medicine in India, it is healthcare service exempted. Okay, sir, what are the recognized systems of medicine in India? Allopathy, yoga, naturopathy, Ayurveda, homeopathy, Siddha, Unani. Those are the recognized system of medicines. If those recognized system of medicines are there, in that case, it is exempted. And any unrecognized systems like acupuncture, acupressure, Reiki healing, Chinese medicines, Rudraksha therapy, urine therapy, color therapy, like that, they are unrecognized ones. Regarding that, definitely it is taxable. Sir, what about hair transplantation or cosmetic surgery? Whether they are exempted or taxable? If at all this hair transplantation or cosmetic and plastic surgery was done as a part of medical treatment or restore the structure of any body part due to any defect or injury, in that case it is exempt. Rest of the cases it is taxable. So simply hair transplantation or cosmetic or plastic surgery, if it was done as a part of medical treatment, it is exempted. If it was done as a part of medical treatment, it is exempted. For the sake of beautification, it is taxable. And sir, who will provide these healthcare services, sir? These people will provide healthcare services: hospitals, doctors and paramedics. Hospitals, doctors and paramedics. These people generally will provide the healthcare services. Hospitals, okay. Doctors, okay. What is meant by this? Paramedics. Paramedics means pre-hospitalization, like lab technicians, during hospitalization like nurses, and post-hospitalization like physiotherapists. All these people will come under this word paramedics. Whatever the services that are provided by these people, definitely it will come under healthcare service. Okay. Sir, what about the room charges with respect to hospital? Whether they are exempted or taxable? What is the answer for that? The answer is simple here. If at all it is an emergency ward, then it is exempted, like ICU, that is intensive care unit, CCU, critical care unit, ICCU, intensive cardiac care unit, NICU, neonatal intensive care unit. Like that, these things will come under emergency wards. With respect to emergency ward, it is exempt irrespective of the amount. But other than this, normal room charges more than 5,000 rupees per day is taxable. That means up to 5,000 room rent is exempted. More than that, full amount will be taxable. More than that, full amount will be taxable. And with respect to this one here, senior doctors or consultants, technicians hired by the hospital, and remuneration paid to them by the hospital is exempt. Simply, a doctor avails the services of senior consultant doctors. He will not work there. In the case that senior doctor is providing service to the hospital. So the services by senior consultant doctors to the hospital, is it also a healthcare service? Yes. Sir, is it exempt? Yes. Therefore, the remuneration paid to the senior consultants or doctors by the hospitals is exempt because it is also covered under the word healthcare service. And sir, say for example, in a hospital, the hospital charged 10 lakhs from the patient and 8 lakhs was paid to the senior doctor there and 2 lakhs was retained by the hospital. The 2 lakhs retained by the hospital is known as retention money. Sir, whether that retention money is taxable or exempt, retention money charged from the patient is exempt. Retention money charged from the patient is exempt. Okay, that means the 2 lakhs retained by the hospital is also exempt. And another one. Sir, what about the renting of shops, auditoriums in the hospitals, display of advertisements? They are nothing to do with healthcare service. Definitely, is it exempted or taxable? Taxable. So, any place of the hospital was given on a rental basis to a coffee shop or conference halls or display of the hoardings at their place of business, that means at their hospital premises. They are not in relation to healthcare services. Therefore, whether it is exempted or taxable. Sir, what about the ambulance services? Whether they are exempted or taxable? With respect to ambulance services, definitely what is the position, ma'am? Exempted or taxable? Ambulance service, transportation of a patient in an ambulance is exempt. In the same way, services by the veterinary doctors or veterinary hospitals is also in relation to healthcare. Those are also exempted. So what is food provided by the So what is the food that is provided by the hospitals, whether it is exempted or taxable is the question. If the food services are provided by the hospital to the inpatient, it is exempted. In all other cases, it is taxable. If at all this canteen was outsourced to some third party, always it will be taxable. If food services are provided by the hospital itself, then to the inpatients, it is exempt. To the others, it will be taxable. And if at all it is outsourced to some third party, definitely it is taxable. outsource it to some third party, definitely it is taxable. That is the point you need to remember. Okay. The next service is agriculture. So with respect to agriculture, whatever the agricultural operations that are carried on by the cultivator, all those things are exempted. Definitely you are not liable to pay any GST. So the agriculture means not only cultivation of the plants, so breeding of fish, rearing of silkworms, cultivation of ornamental flowers, forestry, even the plantation crops like rubber, tea, coffee, cereals, pulses, jaggery, all these things definitely will be treated as agro-based ones as long as they are done by the cultivator. The one and only thing that was excluded from this is rearing of horses. Rearing of horses is taxable, and except that whatever the other things that are there, definitely they are exempted or taxable, exempted. In the same way, the process which do not alter the essential features of agriculture produce, definitely those things are also exempted. Like trending, pruning, cutting, harvesting, drying, sun drying. Previously, fumigation was exempted, but now the fumigation is taxable. Okay, curing, sorting, grading, bulk packing, all these processes are definitely exempted. Simply, the process which do not alter the basic nature of agriculture produce is exempt. For example, potatoes, agriculture, exempt. Potato chips, the basic nature was changed. Definitely it will be taxable. Tomatoes, agriculture, exempt. Tomato ketchup, changed the basic nature of agricultural produce, therefore it will be taxable. And in the same way, agricultural extension services like scientific research, soil testing, seed testing, farmers related training, education, all these services will be covered under this agricultural extension services, and those are also exempted. In the same way, commission agent. Commission received on purchase or sale of paddy. See this. Paddy is agriculture produce. Commission agent in relation to agriculture produce is exempt. Okay. See this, the things which are covered under taxability. Process which alter the essential features of agriculture produce are taxable. I told you. Process of fast food snacks items like potato chips, tomato ketchup, and packing in retail packs of agriculture produce for the sale in the retail market, those things are definitely taxable. And services by an agricultural produce marketing committee. The services provided by these marketing committees are not directly relating to agriculture, like renting of a shop or other property to the commission agents there. Here the service is renting of immovable property. If at all the service is renting of immovable property for the particular merchants, definitely it will be taxable because it is not directly in relation to agriculture. Next one is renting or leasing of agro machinery. Take the example of rice mill. Rice mill owner will be treated as a business person but not as a agriculturist. Therefore, it is taxable. And see the commission agent. Commission of paddy is exempt. Commission received on purchase or sale of rice. Rice is a non-agriculture one. Definitely in that case, is it exempted or taxable? Taxable. This is with respect to agriculture. The next point is renting of a premises of a religious place like mandir or gurudwar, something like that, by a charitable or a religious trust. In that case, if the room rent is up to 999 per day, that is less than 1,000, or the premises or the halls, kalyana mandaps, open area, rent up to 9,999, simply less than 10,000 rupees per day, it is exempt. In the same way, with respect to a religious place, any shops are given on rent. The rent is less than 10,000 rupees per month, it is exempt. In first two cases, it is per day. In the last case, it is per month. Less than 10,000, it is exempted. Okay. And in the same way, any fitness camps, dance, music classes are generally taxable. And in the same way, with respect to the services by the entities that are registered under 12AA or AB of income tax, that is trust, whatever the charitable activities that are done by the trust are exempt. Whatever the charitable activities that are done by the trust are exempt. That is the thing you need to remember. Okay. By way of charitable activities, exempt. Next one is, any service provided to trust is not exempt. Keep that point in mind, ma. Any service provided to trust is not exempt. By charitable trust, any charitable activity is exempt. But any service provided to trust is not exempt. Definitely it will be taxable. In the same way, conduct of any religious ceremony by any person. Conduct of any religious ceremony by any person, whether it is exempted or taxable, exempted. In the same way, with respect to training or coaching in relation to arts or culture, like any recreational activities like music, painting, etc., in that case, by an individual also, it is exempt. But if that one is sports, then the training that is given by charitable entities are only exempted. That means trust is only exempted. Any sports training that was provided by the individual, definitely it will be taxable. Any sports training for coaching or something, if at all it is provided by the charitable trust, then only it is exempted. That is a point you need to remember. Okay. So the next point will be education services. With respect to education services, supplier is educational institution and recipient is students, faculty and staff. And any consideration that is received from students, faculty and staff is exempt. There is no need to pay any GST. Sir, that means is the word educational institution was defined under our GST? Yes. Generally, three types of organizations are covered under this educational institution. First one, preschool plus schools. Second one, occasional training centers. Third one, courses recognized by Indian law. Courses recognized by Indian law. First one, preschool plus schools. Second one, vocational training centers. Third one, courses recognized by Indian law. These three are treated as educational institutions. If these three organizations receives any consideration from the students, faculty and staff, definitely what is the position? It will be exempt. And second one is supplier, any person. Recipient is educational institution. In that case, fifth one is also there. Online educational journals. Okay. Then with respect to that, transportation, food facility, security and housekeeping, admission test, online educational journals. In this, first three are exemption will be given to the school, and here exemption is given to all, and online educational journals, courses recognized by Indian law is exempt. Okay. So, who is the supplier? Any person. And who is the recipient? Educational institution. Then, with respect to school, first three services are exempt. Transportation of the students, faculty and staff. Second one, catering and food facility. Third one, security, cleaning, housekeeping services performed in educational institution. These three are exempted. If provided to school. Other than school, like vocational training centers or courses recognized by Indian law, those two are taxable. First three are exempted only to a school. In rest of the cases, it will be taxable. Next one, admission test. With respect to admission test by such institution, exemption is given to all the three, like preschool and schools, vocational training centers, and courses recognized by Indian law. And last one, online educational journals. Here exemption will be given to the courses recognized by Indian law. Courses recognized by Indian law. Okay, that means ICA. Courses recognized by Indian law, for that example will be ICA. So in ICA student journals, articles will be there, mama. So with respect to them, definitely online educational journals, is it exempted or taxable, ma? Definitely it is exempted to the courses recognized by Indian law. Okay. And next one will be so, sir, private coaching, say for example, private coaching in CS, exempted or taxable? Taxable. Here exemption is given to ICA only, but not to the coaching centers. Therefore, private coaching is exempted or taxable? Definitely it is taxable. In the same way, courses recognized by Indian law is only exempt. If the qualification is recognized by a foreign law, definitely is it exempted or taxable? Taxable. In the same way, sir, the fee that is received from the present student is only exempted, or proposed student or a past student is also exempted. Proposed student, for him we will charge the admission fee. Past student, like we will charge for TC, migration certificate, those things are also exempt. There is no need to pay any GST. Fee charged for admission or eligibility certificate for the proposed student or migration certificate for the past student, those are also exempted. And keep it in mind, only services provided by school is exempt, but not the goods. That means schools is providing stationery to the students, definitely it will be taxable. Here exemption was given to the services provided by the educational institutions. Whenever any goods are supplied, like school providing stationery to the students, whether it is exempted or taxable, definitely it will be taxable. Okay. The next one is with respect to this any circus, dramas, dance shows, circus, drama, dance shows. Okay. Music shows, award functions, sports events. With respect to them, definitely what is the position? With respect to them, if the ticket price is less than 500 rupees, it is exempted. More than that, full amount will be taxable. If the ticket price is less than 500, it is exempted. Then definitely more than 500, it is taxable. Okay, but whereas, see this, services by way of right of admission to entertainment events, that is circus, dance, the dramas, award functions, pageants, musical performance, sporting events, whether they are recognized or unrecognized, planetarium. Regarding that, if the amount is up to 500 rupees, it is exempted. More than that, full amount will be taxable. In the same way, with respect to zoo, museum, tiger reserve, national park, like that, irrespective of the ticket amount, it is exempted. Irrespective of the ticket amount, it is exempted. Okay. Zoo, museum, national park, wildlife, tiger reserves, protected monuments like historical places, irrespective of the amount. Any amount, it will be exempted. Any amount, it will be exempted. Okay. And in the same way, with respect to performance of artists, like any classical ones or folk ones, you will get the exemption up to 1.5 lakhs. If it is a Western one, always full amount will be taxable. Let's say the person is singing a classical song. Definitely will get the exemption up to 1.5 lakhs. If it is a Western one, always full amount will be taxable. Same point will be applicable to musical instruments also. The traditional ones like veena, violin, tabla, like that you will get the exemption. If it is the Western ones like keyboard, guitar, something like that, definitely they will be taxable. But what about this one? Whether it is exempted or taxable? This is called puppet show. Puppet show comes under folk. In that case, whether it is exempted or taxable, definitely it is exempted up to 1.5 lakhs. Sir, what about this one? Whether it is exempted or taxable? Definitely this will come under Western ones. With respect to Western ones, always what is the position, ma? Full amount will be taxable. Okay. Like any folk music, folk dance, folk theatre, up to 1.5 lakhs, you will get the exemption. And in the same way, classical music, classical dance, classical dramas, then also will get the exemption up to 1.5. Sir, in excess of 1.5 lakhs, only excess amount is taxable or full amount is taxable. Full amount will be taxable. Okay. And see the third one. If at all these activities are performed as a brand ambassador, definitely it is taxable. Take the example. Zakir Hussain, famous for his tabla. He conducted his own musical program. He will get the exemption up to 1.5 lakhs. If at all he performed the same show on behalf of Taj Mahal tea, Wah Taj. In the case, definitely what is the position, ma? Is it exempted or taxable? Definitely it will be taxable. Okay, ma. Next, Western music, mimicry, modern theatre, magic shows, all these things are taxable. And artists of cinema, TV, these things are also taxable. And artists of painting, sculptures, etc., these things are also taxable. Okay. So this is the point you should remember with respect to performance of artists. And next one is passenger transport service. With respect to passenger transport service, any first point is with respect to air. Journey embarking from or terminating to batsman. So what is meant by the batsman here? Bagdogra, Assam, Tripura, Sikkim, Manipur, Meghalaya, Mizoram, Arunachal Pradesh, Nagaland. Whether origin or destination is from any of these states, the economy class is exempted. Then economy class is exempt. That is the point one need to remember. Okay. And with respect to by road, what is the position, ma? It can be divided into two types. One is stage carriage and second one is contract carriage. What is meant by the word is stage carriage, ma? In every stage the bus will stop. It is known as stage carriage. And contract carriage means is more like of a non-stop bus. Okay. But whether it is stage carriage or contract carriage, AC is taxable and non-AC is exempt. AC is taxable and non-AC is exempt. And with respect to metered cabs, auto rickshaws and e-rickshaws, it is exempt. And with respect to water facility, water transportation of passengers, inland waterways like river, etc., it is exempt. Public transport within India's sea routes, it is also exempt. But if that vessel is used for tourism purpose, it is taxable. And transportation outside India is definitely taxable. Okay. With respect to water transportation, inland waterways or public transport, it is exempt. And tourism purpose or transportation outside India, with respect to waterways, definitely it is taxable. And in the same way with respect to railways, metros, monorail, tramway and non-AC. In non-AC, two things are exempted. These are exempted. And in the non-AC, sleeper and second class are exempt. And first class or the AC, definitely those things are taxable. This is with respect to passenger transportation, you should remember. And next one is, see this. If these exempted services are provided through ECO, definitely they are taxable. All exempted are provided through ECO, definitely those services are taxable. Next one is transportation of the goods. If the transportation of the goods by road, what is the position, ma? If at all it is by GTA or courier agency, taxable. And whereas with respect to others, it is exempt. Whereas with respect to others, it is exempt. Okay. And through pipelines, always it will be taxable. Like gas or petrol is transported through pipelines, definitely it is taxable. And railways. With respect to railways, random goods, definitely it is exempt. And others are taxable. With respect to railways, random goods means R means relief materials, A means agriculture related, N means newspapers, D means defense, O means organic manures, and M means milk like that products. These random goods are transported through railways, it is exempt. With respect to others, definitely it is taxable. Okay. And in the same way with respect to air transportation, always taxable. And with respect to waterways, inland waterways, any goods and other routes, random goods are exempted and definitely others are taxable. With respect to inland waterways, any goods are exempted. With respect to other routes, random goods are exempted. Definitely others will be taxable. Okay. These are the random goods. If anybody wants the list, this is here. Okay. You can check it out. So the next point will be legal service, ma. So with respect to legal service, what is the position, ma? With respect to legal service, what is the position? These people are the suppliers or service providers, junior advocate or partnership form of advocate, arbitral tribunal, person representing arbitral tribunal, and senior advocate. Okay. In this, junior, so I will call him individual advocate as junior. Okay, simply, for the sake of simplicity, that's it. Junior lawyer 2, this is individual for personal use. This is unregistered person. This is registered person. This is 10, 40 also can be there. So 10 also 40 can be there. Okay. So junior to individual for personal use. Junior to individual for personal use, exempt. Junior to unregistered person, exempt. Junior to registered person, taxable. Junior to tribunal, not applicable. Junior to junior, exempt. Junior to junior, exempt. Okay. Next, arbitral tribunal to individual for personal use, exempt. Tribunal to unregistered person, exempt. Tribunal to registered person, taxable. Tribunal to tribunal, not applicable. Tribunal to lawyers, not applicable. And person representing arbitral tribunal means he will provide the service only to the tribunal, therefore it is taxable. And senior to individual for personal use, exempt. Senior to unregistered person, exempt. Senior to registered person, taxable. Senior to tribunal, not applicable. Senior to junior, it is taxable. And apart from this, any legal services provided to government, whether they are exempted or taxable, definitely those are exempt. This is the point with respect to legal service you must remember. And the next point will be services provided to a recognized sports body. With respect to that, any individual as a player, as a referee, as an umpire, as a coach, as a team manager, even though he provides service to a recognized provides services to a recognized sports body like BCCI, it is exempt. If the same person, see the fourth point, any individual as a player, as a referee, as an umpire, as a coach, as a team manager, if he provides services to a unrecognized sports body like IPL, definitely it will be taxable. Same way, one recognized sports body to another recognized sports body, exempt, like BCCI to ICC. BCCI to ICC. In the same way, any individuals as a selectors, as a commentators, as a curator, as a technical expert, even though he provided services to a recognized sports body, definitely it is taxable. See, any individual as a player, as a referee, as an umpire, as a coach, as a team manager, provides the services to a recognized sports body. What is the position, ma? It is exempt. If the same services are provided to an unrecognized sports body like IPL, taxable. And if one recognized sports body to another recognized sports body is also exempt. In the same way, any individual as a selector, as a commentator, as a curator, as a technical expert, even though he provides the services to a recognized sports body, but still it is taxable. Okay. So now the next one will be in exemptions is with respect to government related services. So supplier is central government or state government or UT, and the service is renting of immovable property. Then we need to check who is the recipient. If the recipient is either the non-business entity or the government itself, in those cases it will be exempted. If the recipient is either the non-business entity or the government, in those cases, it is exempt. If the recipient is business entity, so what is the thing we need to see? If the recipient is business entity, then we need to check what is the consideration. So consideration is less than or equal to 5,000, it is exempt. Consideration is more than 5,000, it is taxable. So if at all the service is renting of immovable property, what is the thing we need to check, ma? Who is the recipient? If the recipient is either the non-business entity or the government, in that case it is exempt. If the recipient is business entity, then we need to check the consideration. If the consideration is less than or equal to 5,000, it is exempt. If the consideration is more than 5,000, it will be taxable. Sir, it is taxable under FCM or under RCM. If at all the recipient is the registered person, RCM, recipient is the unregistered person, FCM. So just now you said that if the consideration is less than or equal to 5,000, it is exempt, and more than 5,000, it is taxable. How to compute that 5,000? That means in normal case or a continuous basis. With respect to normal case, it is needed to be checked on a transaction basis. If at all it is a continuous supply, you need to check on a yearly basis. Okay. If at all it is a normal supply, if at all it is a normal supply, in that case, what is the position, ma? It is the 5,000 is needed to be checked on a transaction basis. If at all it is a continuous supply on a yearly basis. And if at all it was any service other than renting of immovable property, you need to see the right side chart. If the recipient is either the non-business entity or the central government, it is exempt. If the recipient is business entity, then we need to check whether it is registered or unregistered. If at all that person is an unregistered person, it is exempt. If at all is the registered person, then we need to see what is the consideration. If the consideration charged is less than or equal to 5,000, it is exempt. Consideration charged is more than 5,000, it is taxable under RCM. That is the point you need to remember with respect to government related services. Okay. Next one is renting of conveyance. Here the conveyance can be divided into two types. One is passenger vehicle and second one is goods vehicle. If at all it is a passenger vehicle, then if manually operated means either based on diesel, petrol or something, and electrically operated means EV vehicles. If at all it is the manually operated one, we need to check who is the recipient. If the recipient is the transporter, who is providing transportation services to educational institutions or being preschool or higher secondary school for the transportation of the students, faculty and staff, in that case it is exempt. Simply, recipient is the transporter. Who is providing transport facility to a school, it is exempt. Second one, if the seating capacity is more than 12 and the recipient is a state transport undertaking, then also that renting service is exempt. Take the example, I am having a Volvo bus. That Volvo bus was given to APSRTC. That Volvo bus was given to APSRTC. In that case, what is the position, ma? If the recipient is state transport undertaking like APSRTC, it is exempt. Next one, if at all it is an EV vehicle, then the seating capacity must be more than 12. And if the recipient is a local authority like municipality, then it is exempt, just like city bus. In order to encourage the pollution-free vehicles within the city buses that are hired by the municipalities or EVs, then definitely it is exempt. On the renting service, they are not liable to pay any GST. Next one is goods vehicle. If the recipient is GTA, that means any person who is giving on hire Any trucks to GTA, it is exempt. There is no need to pay any GST. Okay. Our next one is already we know that with respect to the transactions in terms of money, it is neither the supply of the goods nor the supply of service. But use of money, definitely it comes under supply of service. Interest, that means. In that, interest on credit card only taxable. All other interest incomes are exempted. Interest on credit card only taxable. All other interest incomes are exempt. Okay. Next point is with respect to conversion. Conversion of currency from one currency to another currency. Conversion of currency from one currency to another currency. In that case, what is the position? If at all it happens for a separate consideration, definitely GST is needed to be paid. But this conversion of currency, that means interstate purchase or sale of foreign currency among the banks, that means one bank with another bank, among the authorized dealers, that is one authorized dealer to another authorized dealer, or between the banks and authorized dealers. In all the three cases, it is exempt. Sir, when it is taxable, sir, either it is bank to the customer or the authorized dealer to the customer, then only it will be taxable. That is the point you need to remember. So there ends exemptions topic. These are the most important areas from the examination point of view. You need to keep more focus on these areas with respect to examination. So the next topic will be time of supply. So with respect to time of supply, sir, what is meant by this time of supply? At what point of time a recipient is liable to pay the GST? It will be decided by time of supply. That means the liability to pay the GST arises at the time of supply. With respect to goods, section 12, and with respect to services, section 30. Deals with time of supply. In that section 12, there are 6 subsections: 12.1, 12.2, 12.3, 12.4, 12.5, 12.6. 12.1 नाम के वास्ते. It simply says that time of supply shall be determined as per the following provisions. 12.2 deals with FCM, 12.3 deals with RCM, 12.4 deals with vouchers, 12.5 deals with residual cases, 12.6 deals with additional consideration. Same point will be applicable with respect to services also. Okay. Now we need to see 12.2. So with respect to 12.2, FC. So under FCM, what is the time of supply? The first question arises in the student mind, sir, what is the use of finding the time of supply? Definitely you will know what is the rate of tax you need to apply. That means the date of time of supply. What is the date? On that particular date, what is the rate of tax that is applicable? Definitely we need to remember that particular date, whatever the rate that was prevailing, those rates are applicable while computing the GST. Okay. Now with respect to 12.2 FCM, what is the time of supply? Date of invoice or last date for the issue of invoice, whichever is earlier, that is the time of supply as per 12.2 FCM. What is the time of supply as per 12.2 ma? Date of invoice or last date for the issue of invoice, whichever is earlier. But keep it in mind, POS is not the receipt of advance, not applied to composition supplier. That means with respect to goods, whenever any advance is received, you are not liable to pay any GST. You are liable to pay the GST only when the invoice is generated. Okay. POS is not only on the receipt of advance. Sorry, not on the receipt of advance. You are liable to pay the GST only when based on the date of invoice or last date for the issue of invoice, whichever is earlier. But with respect to composition supplier, this 12.2 is this amendment is not applicable, is liable to pay GST even when the advance is received. Next one is 12.3 RCM. With respect to 12.3 RCM, what is the time of supply? The time of supply will be date of receipt of the goods or date of payment or from the date of invoice 31st day, whichever is earlier will be the time of supply under RCM. Date of receipt of the goods, date of payment from the date of invoice 31st day. These are the 3 dates in that whichever is earlier will be the time of supply. If it does not work out, then the date when the supply was entered in the books of accounts of recipient, that one will be the time of supply. So what is the time of supply as per 12.3? Date of receipt of the goods, date of payment from the date of invoice 31st day, in that whichever is earlier will be the time of supply. If it does not work out, the date when it is entered in the books of accounts of recipient, that one will be the time of supply. And with respect to online money gaming, there is one amendment, because even though it is the supply of the goods. So with respect to this online money gaming, even though it is the supply of the goods, what is the position? The time of supply shall be triggered if the payment has been received in advance. That means with respect to remaining goods, at the time of receipt of advance, the time of supply will not be triggered. But with respect to online money gaming, even though it is the supply of the goods, but still time of supply will be triggered at the time of receipt of advance. This is a point you need to remember. And another point is here. With respect to this forward charge mechanism, that is 12.2, just now we discussed that. What is the time of supply? Date of invoice or last date for the issue of invoice, whichever is earlier. Sir, date of invoice can be found out from the invoice itself. How to find out the last date for the issue of invoice? How to find out the last date for the issue of invoice? That point, last date for the issue of invoice will be there under section 31. As per section 31, if at all there is any physical movement of the goods involved, what is the last date for the issue of invoice? On or before removal or on or before dispatch of the goods. If at all there is no physical movement of the goods involved, in that case, what is the last date for the issue of invoice? The goods, when they are made available to the recipient, simply the date of delivery will be the last date. If at all physical movement was involved, what is the last date for the issue of invoice? On or before date of dispatch or on or before date of removal. If there is no physical movement of the goods involved, what is the last date? The date when the goods are available to the recipient. And what is the second thing? The date when they are made available to the recipient or date of delivery. Okay. And another point is, with respect to continuous supply of the goods, what is the last date for the issue of invoice? So with respect to continuous supply of the goods, what is the last date for the issue of invoice? Date of periodic statement or date of payment. Whichever is earlier, that one will be the last date for the issue of invoice with respect to continuous supply of the goods. Like example is gas supplied through pipelines and supplies to the builders of some construction. This one will come under continuous supply of the goods. With respect to continuous supply of the goods, what is the last date for the issue of invoice? Date of periodic statement or date of payment, which one is earlier? And next thing is, with respect to sale or return basis, goods sent on approval or return basis. In that case, what is the last date for the issue of invoice? The date of approval or from the date of removal 6 months, which one is earlier? At the time of goods sent on approval or return basis, so the date of approval or from the date of removal 6 months, whichever is earlier, that one will be the last date for the issue of invoice. All these points are the last dates. These last dates will be compared with what we can say the date of invoice. In that, which one is earlier, That one is the time of supply as per 12.2. Now we need to see with respect to services. And what is the section that is applicable to services? What is the section that is applicable to services? 13. In that 13 also, 6 subsections are there. 13.1, 13.2, 13.3, 13.4, 13.5, 13.6. 13.1, नाम के वास्ते. 13.2, FCM. 13.3, RCM. 13.4, vouchers. 13.5, residual cases. 13.6, additional consideration. In that 13.4, 13.5, 13.6, 12.4, 12.5, 12.6 are same, and that's why they are there in the common topics. So that's why with respect to section 13, now we are seeing 13 subsection 2 FCM and 13 subsection 3 RCM. 13.2 this one is, this I just wrote it as, okay. 13 subsection 2. So what does section 13 subsection 2 deals with? The FCM. With respect to FCM, the topic can be divided into 2 types. From the date of provision of service, as per a statutory requirement, invoice is needed to be issued within 30 days. From the date of provision of service, invoice is needed to be issued. Invoice is needed to be issued within a period of 30 days. In that case, if invoice is issued within the time of the 30 days, then what is the time of supply? Date of invoice or date of payment, whichever is earlier. If invoice is not issued, that answer is no. That means invoice is not issued within 30 days. In that case, what is the time of supply? Date of provision of service or date of payment, whichever is earlier, that one will be the time of supply. Sir, if at all it is not possible to find out the time of supply as per the above, then the date when the recipient show the receipt in his books of accounts, that one will be the time of supply. What is 13.2 deals with? 13 subsection 2 deals with if the invoice is issued within the prescribed time limit. Sir, what is the prescribed time limit for the issue of invoice? What is the prescribed time limit for the issue of invoice, ma'am? Date of invoice or date of payment, whichever is earlier. Date of invoice or date of payment, which one is earlier. That one will be the time of supply. If invoice is not issued within the prescribed time period of 30 days, then what is the time of supply? Date of service or date of payment, whichever is earlier. If at all it does not works out, in that case, what is the position? If the above is not possible, then the date when the supply is entered in the books of accounts of recipient, that one will be the time of supply. Next point is payment up to 1,000 rupees in excess of invoice. That means whenever you paid in excess of invoice value, that excess value is less than 1,000 rupees. In that case, less than 1,000 rupees. In that case, what is the position? There is no need to issue a separate invoice for that present bill cycle invoice date. That is the date when that excess amount is received, or with respect to such excess, the date when the invoice is issued. So, at the option of the seller, that can be the date of invoice. Okay, let's take the example. Let us assume that I am using Airtel postpaid. Every month my bill is fixed at 1,600. Due to some reasons, I am unable to pay online. That's why I just went to the customer care relations center and paid 2,000. He just told me that, sir, there is no change with me. I will do one thing, sir. I will take the total 2,000 payment and this excess 400 will be adjusted in next month bill. I said okay with that. Here, what is the invoice value? 1,600. What is the actual supplied value? What is the invoice amount? 1,600. What is the actual amount that was paid? 2,000. How much excess that was paid? 400. 400 is less than 1,000? Yes. In that case, there is no need to issue a separate invoice for that. For that 400, the month in which that excess payment is received, let's say with respect to March, that one, or with respect to date of invoice, or with respect to date of invoice. With respect to date of invoice. That means for this 400, what is the date of invoice, ma'am? Generally, next month, na? That one. It depends upon the supplier intention whether to take the current bill cycle invoice date or the next bill cycle invoice date. Okay. And this is 13.3. So with respect to 13.3, what does 13.3 deals with, ma? RCM. Under RCM, what is the time of supply? The date of payment or from the date of invoice, 61st day, whichever is earlier. What is the time of supply as per 13.3 RCM? Date of payment or from the date of invoice, 61st day, whichever is earlier. And in the same way, 13.3 covers another point, that is, in case of associated enterprises, where the supplier is located outside India, the time of supply will be the date when it is entered in the books of accounts of recipient, or the date of payment, whichever is earlier, that one will be the time of supply. In case of associated enterprises, where the supplier is located outside India, then what is the time of supply here as per 13.3? Date of entry in the books of accounts of recipient or date of payment, which one is earlier? Okay, ma'am. So the next one will be, sir, what is the last date for the issue of invoice with respect to section 31? What is the general rule? Generally, from the date of provision of service, invoice is needed to be issued within 30 days. But with respect to few cases, in case of bank, financial institutions, NBFCs, like that, instead of this 30 days, what is the number of days we will consider, ma? 45 days we will consider there. Okay. 45 days we will consider. But with respect to continuous supply of service, what is the last date for the issue of invoice? The last date for the issue of invoice will be, if due date is ascertainable, on or before due date. If the due date is not ascertainable, on or before date of payment. Where payment is linked with completion, on or before completion. These are the dates we shall consider, ma. What is the point here, ma? What is the general rule? From the date of invoice, from the date of provision of service, invoice is needed to be issued within 30 days. Second one. If invoice is not issued within 30 days, then what is the position, ma? With respect to banks, financial institutions or NBFCs, these 30 days are going to be replaced by 45 days. And if at all it is a continuous supply of service, if the due date can be ascertained on or before due date, if the due date cannot be ascertained on or before date of payment, payment is linked with completion on or before completion. Okay. These are the last dates for the issue of invoice with respect to services. The next point is common points with respect to goods and services. In that, the first one will be vouchers for the goods or services. With respect to vouchers for the goods or services, in that case, what is the position? With respect to the vouchers for the goods or services, time of supply will be, if at the time of issue of voucher, supply can be identified, issue of voucher. If at the time of issue of voucher, supply cannot be identified, redemption of voucher will be the time of supply. At the time of issue of voucher, supply can be identified, issue of voucher will be the time of supply. If at the time of issue of voucher, supply cannot be identified, redemption of voucher will be the time of supply. Okay. And with respect to 12.6 or 13.6, contractual penalties like interest, penalty for a delayed payment, like that, in those cases, what is the position, ma? It is called as contractual penalty. With respect to contractual penalty, what is the position, ma? What is the time of supply? The date when the additional consideration is received. The date when the additional consideration is received. That one will be the time of supply. With respect to residual cases, that is 12.5 or 13.5. What is the position, ma? If periodic return is filed, the due date of filing the return will be the time of supply. If no return was there, then date of payment will be the time of supply. This is 12.5 or 13.5. And with respect to date of payment, what is the time of supply, ma? Sorry, with respect to date of payment, which date can be considered as a date of payment? With respect to the money that is received by the supplier, the date of payment will be the date of book of entry or the money credited to the bank, whichever is earlier. With respect to the date of payment, under RCM, from the point of view of the recipient, the date when the payment is entered in the books or debited in the bank, whichever is earlier. And with respect to the services ceased, on or before that cancellation, definitely what is the thing you need to do, ma? Before completion, the service is ceased. In that case, raise the invoice before that seizure of service. So these are the important points you shall remember with respect to time of supply. The next topic is value of supply. So with respect to value of supply, sir, what is the need of learning this particular value of supply? The need is here, with respect to value of supply. Because from the time of supply, you can find out the rate of tax. But in order to apply the rate of tax, definitely there must be some value. How to compute that value will be decided by this section 15, value of supply. In that there are 5 subsections, 15.1, 15.2, 15.3, 15.4 and 15.5. In that 15.4 and 15.5 is not in the syllabus. 15.4 and 15.5 is not in the syllabus. Okay. So with respect to this value of supply, 15.4 and 15.5 is not in your syllabus. Therefore, only 3 subsections are there. First, you enter here 15.1, 15.2 and 15.3. First one is 15 subsection 1. As per 15 subsection 1, accessible value is equal to transaction value. As per 15 subsection 1, accessible value is equal to transaction value if 2 conditions are satisfied. What are those 2 conditions that are required to be satisfied? Okay. The first point is here. The supplier and recipient should not be related parties. Second one, price is a sole consideration. If these 2 conditions are satisfied, then the sale price actually paid or payable can be the transaction value along with some adjustments. What is the first condition, ma? Supplier and recipient should not be a related party. Second one, price should be the sole consideration. If these 2 conditions are satisfied, then as per 15 subsection 1, taxable value is equal to transaction value. What is the first condition? Supplier and recipient should not be related parties. Sir, when the supplier and recipient can be termed as related persons? When they can be termed as related persons, ma'am? They can be termed as related persons which are there in supply chapter, like common directors, partners, employer and employee, more than or equal to 25% of voting power, holding and subsidiary, these two controlling a third party, or third party controlling these two, same family members, sole agent. If any one of these relations are there, then the supplier and recipient will be termed as related parties. So there should not be any related parties. Second one, price is the sole consideration. What is meant by the word? Price is the sole consideration, ma? What is meant by the word price is the sole consideration? Price is the sole consideration means whatever the consideration that is moving from recipient to the supplier, whatever the consideration that is moving from recipient to the supplier, in that case, what is the position, ma? Whatever the consideration that is moving from recipient to the supplier, it should be in terms of money only. If at all any non-monetary consideration is moving, it is, then 15.1 cannot be applied. So in order to apply 15.1, these are the two conditions that are to be satisfied. Then transaction value. Actual accessible value is equal to transaction value. Sir, what is meant by the word transaction value then? Transaction value is equal to sale price plus 15.2 adjustments are needed to be added to that, and 15.3 adjustments are needed to be deducted. And what is the amount we will get? It is known as transaction value. On the transaction value, we are liable to pay the GST. Okay. In that, the first one is 15 subsection 2, inclusions in the transaction value. Sir, what are the inclusions that can be there in the transaction value? There are 5 inclusions in the transaction value. The first 3 tips is the total story regarding that. 3 means third party payment. T means taxes and duties. I means incidental expenses. P means penalty, interest, late fee and penalty. And S means subsidy. These are the 5 inclusions as per 15 subsection 2. The first one is supplier obligation was met by the recipient. Supplier obligation was met by the recipient. So what is meant by the supplier obligation was met by the recipient? It is the responsibility of the supplier to make the payment. But on behalf of the supplier, recipient made the payment. In that case, what is the position? Those amounts are also includable in the taxable value. Second one, taxes and duties. Any taxes other than GST that is paid separately by the recipient, those amounts are also needed to be includable in the taxable value. Any taxes other than GST that is paid is includable in the taxable value. Third one, incidental expenses up to the stage of delivery that is incurred by the supplier shall be includable in the taxable value. Incidental expenses means like designing charges, weighment charges, packing charges, commission, freight, insurance. All these amounts are going to be included up to the stage of delivery. Whatever the expenditure that was incurred by the supplier, all those amounts are needed to be added to the taxable value. Next one is interest, late fee and penalty. With respect to interest, late fee and penalty, these are known as contractual penalties. So, statutory penalty is not a consideration. There is no need to pay any GST. But contractual penalty is a consideration. Definitely we are liable to pay the GST on that. But there is one speciality with respect to this contractual penalty, which is in the nature of interest, late fee or penalty. Whatever the contractual penalty you receives, law assumes that it is inclusive of GST. You need to segregate the GST component there. What is the formula for that backward computation? Amount received into 100 by 100 plus tax rate. Based on that particular formula, value shall be segregated. Next one, subsidy. Subsidy from government excludable. Subsidy from any person other than government includable. These are the 5 inclusions as per 15 subsection 2. First one, supplier obligation was met by the recipient. Second one, taxes and duties paid. Third one, incidental expenses up to the stage of delivery. Third one, interest, late fee and penalty. Fourth one, subsidy by any person other than government. These are the 5 inclusions as per 15 subsection 2. Now we need to see 15 subsection 3 exclusions. So with respect to these exclusions, the point will be, generally discounts can be divided into 2 types. One is pre or on supply discount, that is during supply discount. Second one is post supply discount. For this pre-supply discount, in reality, in maximum cases, the discount will be of major cases pre-supply discount. In order to allow this pre-supply discount, the one and only condition will be, must be shown in the invoice. And next one, post-supply discount. What is meant by this post-supply discount? First one, there should be a prior agreement. Second one, it must be linked with the invoice. And third one, proportionate ITC is needed to be reversed. If all these 3 conditions are satisfied, then post-supply discount is allowed. Next one, staggered discount, that is buy more, save more. In those cases, technically they are volume discounts. These discounts will be shown in the invoice, hence they are excluded from the taxable value. And another one is there, that is secondary discount. Sir, what is meant by this secondary discount? The discount that is not known at the time of entering into the agreement, those type of discounts are known as secondary discounts. These secondary discounts are not allowed. Generally, later on they are given due to the price revaluation or for any other reason. But these discounts are not known at the time of making the agreement. In those cases, they are known as secondary discounts, and these secondary discounts are not allowed. Okay. And last but not the least, this deduction of no claim bonus. So, no claim bonus is definitely in the nature of discount, because it is the discount that is given before or making the supply, pre-supply discount, and that particular no claim bonus is actually indicated in the invoice. That is shown in the invoice, and they are deductible from taxable value. So these are the important points with respect to value of supply. You should remember. Okay. So the next topic will be input tax credit. So with respect to input tax credit, 2 terms are normally used in our ITC chapter. The first one is ITC availment, and second one is ITC utilization. Sir, what is meant by ITC availment and what is meant by ITC utilization? ITC availment means the taxpayer claimed the ITC and credited to his electronic credit ledger. Let's say the process will be, first the supplier uploads the data in GSTR1, thereby it will be reflected in recipient GSTR2A as purchases and 2B as ITC. Based on the GSTR2B, recipient will file the GSTR3B. Therefore, there will be a confirmation of the ITC and the amount will be credited to electronic credit ledger. Okay. So, the amount when entered in the electronic credit ledger of the recipient, it is known as ITC availment. It is known as ITC availment. Second one is ITC utilization. What is meant by this ITC utilization? Using the ITC availed to make the payment. Simply, what is meant by this utilization of ITC? That means whatever the ITC that was previously claimed, if we use that particular ITC to set off the output tax, then it is known as ITC utilization. Okay. The point is here, sir, on which items we can claim the ITC. Further, there are 3 sections we need to see in our CA inter syllabus, section 16, 17 and 18. Initially, we need to start with section 16. Section 16, eligibility and the conditions for taking the input tax credit. In that, the eligibility criteria to claim the ITC will be, it should be a registered person and goods or services are to be used for the purpose of business. What is the eligibility criteria, ma? The eligibility criteria will be, it should be a registered person. That means, sir, why ITC is allowed only to a registered person? The reason is simple, ma. Because only a registered person is liable to pay the output tax. That's why ITC is allowed only to a registered person. Second one. Sir, on which items ITC is allowed? Whether it is on the goods or on the service, both. Sir, what is meant by the word goods and services here? Goods means here capital goods and inputs. Services means input services. Sir, what is meant by the word capital good? The items that are reflected in the balance sheet are known as capital goods, and the items that are reflected in the trading and P&L account are known as inputs. So, on the capital goods as well as on the inputs, definitely we can claim the ITC. Same point will be applicable to the input service. Input service means the service which is used for business purpose, which is used to provide the outward supply. The common condition for inputs, capital goods and input services is they should be used or intend to be used in the course or furtherance of business. Okay, that is the point you need to remember. Okay, ma'am. The next point is here, sir, what are the conditions that are required to be satisfied in order to claim the ITC? The first one is there should be a documentary evidence. Second one, the goods or services shall be received. Third one, tax shall be paid to the government by the supplier. Fourth one, filing of return, that is GSTR 3B, is needed to be filed by the recipient. Third one, it should not be a restricted ITC as per Rule 36(4). These are the conditions that are needed to be satisfied in order to claim the ITC. And along with that, some other point is also there. ITC in respect of the said supply has not been blocked as per 17 subsection 5. Okay, based on the, definitely you can claim the ITC. So what are the conditions, ma? First one, documentary evidence. That means possession of tax paying document is one of the conditions, ma. The question is here, sir, what are the documentary evidences? What are the documentary evidences that must be there in order to claim the ITC? The first point will be tax invoice or debit note. Already we know what is meant by the word tax invoice. What is meant by the word debit note? Simply, where the invoice value is less than actual value. Where the invoice value is less than. So what is meant by the word debit note, ma? Where invoice value is less than actual supplied value. In those cases, for the difference, what is the document we will issue, ma? A debit note will be issued by the supplier. That can be a supporting document to claim the ITC. And the next document is revised tax invoice. Sir, what is meant by this revised tax invoice? What is meant by this revised tax invoice? That means if you apply for RC within 30 days from the date when you become liable for registration, then even though RC was subsequently granted to you, the effective date will be the date when you are liable for registration. Let's say on March 1st, your turnover crossed the specified limit. March 10th, you applied for RC. March 14th, RC was granted to you. In that case, even though RC was granted on March 14th, what is the effective date, ma? March 1st will be the effective date. Okay. Therefore, in that case, Even though RC was granted to you on March 14th, effective date will be March 1st. But you comes to know this point only on March 14th. Therefore, whatever the supplies that happens, whatever the supplies that happens, so whatever the supplies that happens between March 1st to March 14th, again we need to issue an invoice. That particular invoice is known as revised tax invoice. Based on revised tax invoice also definitely we can claim the ITC. And the next document will be self-invoice based on RCM, reverse charge mechanism. So with respect to self-invoice that is under reverse charge mechanism, if the supplier is a unregistered person and recipient is a registered person, if the supplier is a unregistered person, recipient is a registered person, and the supply is notified under 9 subsection 3, in those cases, recipient will issue himself an invoice. That particular invoice is known as reverse charge invoice. Based on reverse charge invoice itself, the recipient definitely can claim the ITC. The next document will be bill of entry in case of import. That means even the IGST that is paid on imports can also be claimed as ITC. But in order to claim the ITC on that IGST, first you need to prove that the goods are imported. The evidence for the importation of the goods will be bill of entry. If you submit that particular document, definitely you can claim the ITC. And the next document will be ISD. Document issued by the ISD that is called as ISD invoice. What is the full form of ISD? Input Service Distributor. Whenever there is a centralized billing system or a centralized accounting system, whatever the input tax credit that was accumulated at one place, it is going to be distributed to the branches also. Let's say, for example, by the head office. In that case, the head office will issue a ISD invoice. Based on that, their respective recipients can claim the ITC. So, but in order to claim the ITC, there are some mandatory details that are required to be there on the tax-paying document. Then only you are able to claim the ITC. What are those points there? First one is details of tax. Second one is description of goods or services. Third one is value of supply. Fourth one, supplier and recipient GST numbers. Fifth one, place of supply. If all these all these points are there in that particular document, then only the recipient is able to claim the ITC. So what are the documents that should be there in order to claim the ITC? Tax invoice, debit note, revised tax invoice, RCM invoice, bill of entry in case of import, and ISD invoice. And what are the minimum particulars that shall be there in order to claim the ITC? Details of tax, description of goods or services, value of supply, supplier GST number and recipient GST number, place of supply. So the next point will be, the second condition is receipts of goods or services. So in order to claim the ITC, the next condition will be the goods or services must be received. Then only we can claim the ITC. If the goods are to be received, then we cannot claim the ITC. Therefore, in order to claim the ITC, what is the condition? The second condition will be the goods or services must be received. In case of the goods received in lots or installments, sir, when we can claim the ITC? The point is simple, ma. ITC can be availed on the receipt of last lot or installment. When you receive the last installment, then only you are able to claim the ITC. Okay. And what about bill to ship to model? If at all it is a bill to ship to model. What is meant by bill to ship to model? Where the goods are actually ordered by one person, but whereas goods are going to be delivered to some other person. This model is known as bill to ship to model. In a bill to ship to model, the goods are delivered to a third party on the direction of a registered person. In this case, the goods are deemed to be received by that registered person who has given the direction. Even though the goods are not received by the person who has given the direction, the goods are deemed to be received by that particular person. Okay. This is known as bill to ship to model. Okay, the next condition will be, in order to claim the ITC, tax paid to the government. So this is also one of the most important conditions for claiming the ITC. So tax paid to the government by the supplier. That means a recipient can take the ITC on self-assessment basis based on his filing of GSTR 3B of recipient, and later on, if the amount is not paid by the supplier, then whatever the ITC that was taken by the recipient, they need to reverse it. Okay. So if that amount is not paid by the supplier, then whatever the ITC that was previously claimed by the recipient, it must be reversed. Okay. Supplier subsequently makes payment of the tax. The recipient may re-avail the ITC. That means whenever the supplier pays back the amount to the government, then in that particular month, definitely the recipient can claim the ITC. So the first thing is the supplier must pay the GST to the government, and only the recipient can claim the ITC. That is a fundamental story. Okay. The next point will be Rule 36.4. As per Rule 36.4, if the details furnished by the supplier in GSTR 1 or the invoice furnishing facility, then only the recipient, those amounts will be reflected in recipient GSTR 2B. How much of the supplies that are reflected in GSTR 2B of the recipient, up to that extent only, we can claim the ITC. Say for example, a supplier made total 10 supplies to the recipient. But in that particular month, only 8 supplies are uploaded by the supplier in his GSTR 1. Thereby, recipient can claim the ITC that was reflected in GSTR 2B, that is in relation to 8 invoices. With respect to those 2 invoices, what is the position? He cannot claim the ITC. How much number of those invoices are uploaded, up to that extent only, what they can do, they can claim the ITC. If those invoices are not reflected, then ITC is not allowed. That is the point you need to remember. Okay. Next point is, sir, we are having the documentary evidence. We received the goods, but we did not make the payment to the seller. Is it possible for the recipient to claim the ITC? Answer is yes. If at all we are having the documentary evidence and goods are received by the recipient, even though the payment is not made, but still recipient can claim the ITC. But the condition is, from the date of invoice, recipient must make the payment to the supplier, within 180 days. What is the fundamental rule, If at all you are having the documentary evidence and the goods are received even though the payment is not made to the seller, but still you can claim the ITC. But the condition is, from the date of invoice, within 180 days, we must make the payment to the seller. Otherwise, whatever the ITC that was previously claimed, it is needed to be reversed. That is the point here. The payment to the supplier shall be made within 180 days from the date of invoice. Otherwise, failure to pay the amount by the recipient, value plus tax to the recipient, how much ITC that was previously claimed, amount equal to the ITC availed by the recipient, plus interest at the rate of 18% per annum is needed to be reversed. Again, sir, if subsequently the amount is paid by the recipient to the supplier, again, is it possible to claim the ITC back? Yes, definitely we can regain the credit when the payment is made, no time limit. Okay, that means there is no time limit restrictions will be there here. But this rule is not applicable with respect to the following cases. That means this 180 days rule is not applicable. So what are the cases there? First one, tax payable under RCM. Tax payable under RCM. Debit supplies. Addition to the value being payment made by the recipient to the third party. In these three cases, 180 days rule will not be applicable. What is the first point, ma? Tax payable under RCM. That means whenever the recipient is liable to pay the GST under RCM, definitely he will get the ITC only after making the payment. That's why there is no logic in applying this 180 days rule. In the same way, deemed supplies happens generally without consideration. If deemed supplies happens without consideration, in those cases, what is the position, ma? Definitely, what is the position? There is no need to pay any GST. If at all there is no need to pay any GST, in those cases, what is the position, ma? In those cases, also 180 days rule will not be applicable. In the same way, when supplier obligation was already met by the recipient, again there will not be any payback from the recipient to the supplier. In those cases also, this 180 days rule will not be applicable. That is the point you need to remember. Okay, ma'am. What is the general rule? From the date of invoice, you must make the payment to the seller within 180 days. Otherwise, whatever the ITC that was previously claimed, so that amount is needed to be reversed along with interest at the rate of 18% per annum. Okay, but whenever he again pays the amount to the supplier, he can regain the credit. But this 180 days rule is not applicable in three cases. First one, RCM purchases. Second one, deemed supplies. Third one, supplier obligation was met by the recipient. Okay. Next point is GST part on the purchase of capital goods. Sir, what does this point says? This point is actually 16 subsection 3. As per 16 subsection 3, what is the position, ma? Whatever the GST you paid on those capital goods, you are having the two options. You are having the two options. Option 1, capitalize the entire amount inclusive of GST and take depreciation as per Income Tax Act. Second option, take ITC on the GST portion. You can claim the depreciation on the remaining portion. Let us assume that the capital goods value is 100 rupees, tax is 10 rupees. If at all you are claiming depreciation on the total 100 rupees plus 10 rupees GST, on the total 110 was capitalized in the books of accounts, and on 110 you are claiming the ITC, then that particular 10 rupees is not allowed as ITC. Okay, but if at all you are claiming depreciation only on the 100 rupees, and that 10 rupees is not included therein, in that case, that 10 rupees is allowed as ITC. So that means any one option can be taken. If taken depreciation on the full amount inclusive of GST, then ITC not allowed. Simply no double benefit is available. Whether you can claim the depreciation or you can claim the ITC. Next point is 16 subsection 4, time limit for claiming the ITC. Sir, what is the time limit for claiming the ITC there? The time limit is 30th November of the next financial year to which such invoice pertains, or the date of filing of annual return, whichever is earlier. Okay, that means what is the position here, ma'am? Let's say with respect to current financial year 23-24, the maximum time limit to claim the ITC will be next financial year, November 30th, that is November 30th, 2024, or date of annual return, whichever is earlier. (23-24). With respect to the financial year 23-24, what is the position, ma? Next financial year, November 30th, or date of annual return, whichever is earlier. Whichever is earlier. So that is the cutoff date to claim the ITC. Next point is section 17. With respect to section 17, apportionment of credit and blocked credits is the topic. What does section 17 deals with here? First point is ITC, whether is it on the input service or capital goods. If at all they are exclusively used for taxable supplies and zero rated supplies, ITC is allowed. Okay. If at all they are exclusively used for non-business purpose or exempted supplies, ITC is not allowed. If at all it was used commonly for exempted, non-business, business, taxable and zero rated supplies, commonly it was used, then ITC is only available for the portion of taxable supplies and zero rated supplies. This is a point you need to remember. Okay, ma'am. This is 17.1 technically. If at all it is exclusively used for taxable supplies and zero rated supplies. What is meant by the word zero rated supplies, ma'am? Exports plus deemed exports. Exports plus deemed exports. Okay. Exclusively for taxable supplies and zero rated supplies. In those cases, what is the position, ma'am? Exclusively used for taxable supplies and zero rated supplies, ITC is allowed. And if at all it is exclusively used for non-business purpose or exempted purpose, ITC not allowed. If at all it is used commonly, then ITC is only available for the portion of taxable and zero rated supplies. Okay, this is a point you need to remember. Next important one is 17 subsection 5, blocked credits. Sir, what is meant by this blocked credits? Even though it is used for business purpose, even though it is used for taxable supplies, but still we cannot claim the ITC. Those things are listed as 17 subsection 5, blocked credits. In that the first point is motor vehicles. Generally, with respect to motor vehicles, if at all these motor vehicles are exclusively designed for the supplier of the goods, 100% ITC is allowed. If these motor vehicles are designed for the supplier of supply of these persons, in that case we need to see the seating capacity. Seating capacity is more than 13, 100% ITC is allowed. Seating capacity is less than or equal to 13, ITC not allowed. Seating capacity more than 30, ITC allowed. With respect to passenger transportation vehicles, seating capacity less than or equal to 13, ITC not allowed. But in 3 exceptional cases, even though the seating capacity is less than or equal to 13, ITC is allowed. So what are those exceptional cases where IDC is allowed even though the seating capacity is less than or equal to 30? What is that first one? What is the first one, ma'am? With respect to that first one, inward supply, outward supply is the same. Second one, if their main business is itself transportation of passengers. Third one, driving school. These are the three cases where even though the seating capacity is less than or equal to 13, IDC is allowed. First one, inward supply, outward supply is the same. Second one, their main business is transportation of passengers itself. Third one, driving school. And sir, what about the vessels, aircrafts, etc.? Transportation of the goods, IDC allowed. Exclusive transportation of passengers, IDC allowed. Flying school or navigation school, IDC allowed. Inward supply, outward supply is the same, IDC allowed. In rest of the cases, IDC not allowed. Okay. Sir, what about the RSI? RSI means repairs, R means repairs and maintenance, S means servicing, I means insurance. On these services, IDC is allowed or not allowed. It will depend upon whether on that motor vehicle IDC is allowed or not allowed. If on that motor vehicle IDC is allowed, on these services also IDC allowed. If on the motor vehicle IDC is not allowed, then on these services also IDC not allowed. But few exceptions are there. If at all you are a manufacturer of such motor vehicle, then IDC is allowed on these services. In the same way, you are the service provider of such insurance, let's say, for example, insurance here. Service provider of insurance, your main business is insurance itself. In those cases, also definitely IDC is allowed. Okay. What is the general rule, ma? If on that motor vehicle IDC is allowed, on the services also IDC allowed. Okay. And what is the second one? If on that motor vehicle IDC is not allowed, on the services also IDC not allowed. But two exceptions, manufacturer and your main business is itself insurance. In those cases, definitely IDC is allowed. Next one is any goods or services in India purchased by NRDP except the goods imported by him. NRDP means non-resident taxable person. This NRDP, whatever the goods imported by him, on that IGST will be paid. That particular IGST is allowed as ITC. But whereas, whatever the local purchases that are made by the NRDP, on those local purchases, definitely we cannot claim the ITC as per 17 subsection 5. So the next point will be goods or services used in business not eligible for IDC. Generally, most of the cases they are for the sake of employees, like food and beverages, outdoor catering, beauty treatment, healthcare services, cosmetic or plastic surgery, membership of a club, health and fitness centers, leave travel benefits. Generally regarding them, what is the position, ma? We cannot claim the IDC. But with respect to few cases like food and beverages, beauty treatment, healthcare services, in those cases, if inward supply, outward supply is the same, then definitely we can claim the IDC. In the same way, if it already was supplied as a part of composite or mixed supply, then also IDC is allowed. Or if it already is a statutory obligation, then also IDC is allowed. With respect to membership of a club, health and fitness centers, if it already is a statutory obligation, IDC is allowed. Other cases, IDC is not allowed. And LTC, no relaxation was there, it is not allowed any ITC on it. Okay. Next one is goods that are lost, stolen, destroyed, written off or disposed by way of gift or free samples. Generally, no output tax will be there on these items. That's why whatever the IDC, if at all IDC was not taken, IDC is not allowed. If IDC was already taken, whatever the IDC you taken, you need to reverse that. And the tax paid under section 74, fraudulent cases, 129, seizure of the goods, 130, confiscation. In these cases, whatever the taxes you pay, on them also definitely we cannot claim the ITC. So these are the block credits in total items. It's a few items are there. We will see in the next slide. So even though they are used for business purpose, even though they are used for taxable supplies, but still we cannot claim the ITC. So the next point is works contract. Sir, what is meant by the word works contract first of all? Construction of immovable property is known as works contract. Generally on the works contract, IDC is not allowed. But if at all it is a plant and machinery, in those cases, IDC is allowed. So what is meant by works contract? For any immovable property, the end result is IDC is not allowed except plant and machinery. That means with respect to plant and machinery, whether it is movable or immovable, in both cases IDC is allowed. And any exceptions are there? Yes, except obtained to make further supply. Simply what is the position there? That means inward supply, outward supply is the same. In those cases, definitely IDC is allowed. Let's say, for example, Guntur to Vijayawada, road construction contract was given to me. In the construction contract, from Mangalagiri to Vijayawada, I subcontracted to somebody else. What is my outward supply? Works contract. What is my inward supply? Works contract. In those cases, definitely IDC is allowed to the tax that was paid on that subcontract. Next one. These items are not considered as plant and machinery. Well, that's why no IDC is there. Land, buildings, other civil structures, cell phone towers, okay, pipelines laid outside the factory premises. But keep it in mind, inside the factory premises will be considered as a plant and machinery. And in the same way, with respect to repairs or construction cost is capitalized in the books of accounts, no IDC is allowed. Repairs or construction not capitalized in the books, then definitely IDC is allowed. In the same way, with respect to buy one, get one free, supply of two items. Supply of two items. That is, buy one, get one offer will not be treated as one item given as free to another, free for another item. Okay, ma. What is the position? Definitely, buy one, get one offer is a bundle which are supplied for a single price. Which are supplied for a single price. In those cases, what is the position, ma? Definitely IDC is available. Next point is section 18. With respect to section 18, total section 18 deals with credit in special circumstances. These are the four circumstances where we can claim the ITC. First one, normal registration. That means the date when you become liable for registration. The date when you become liable for registration. If you apply for RC within 30 days, then the date when RC was granted, on the preceding day, whatever the closing stock of raw materials, semi-finished goods, finished goods that were there, in that particular proportion, definitely we can claim the ITC. Same point will be applicable to voluntary registration also. What is meant by voluntary registration, ma? Even though he is not required to take any registration, but still he took the registration, in those cases, he is liable to pay just like a normal taxable person. Therefore, the date when RC was granted to him. On the preceding day, whatever the closing stock of raw materials, semi-finished goods, finished goods that were there, in that particular proportion, you can claim the ITC. Next one is composition scheme to regular scheme. Previously, we are there in composition scheme. That's why no ITC is allowed. The next one is regular scheme. With respect to regular scheme, definitely ITC is allowed. Therefore, on this particular date of conversion, whatever the previous, on the preceding day, whatever the closing stock of raw materials, semi-finished goods, finished goods, along with that, even on capital goods also, ITC is allowed. Even on capital goods also, ITC is allowed. Okay. And same point will be applicable to exempted supply to taxable supply. Previously, it is a exempted supply. That's why no ITC is allowed. Now this exempted supply was converted to taxable supply. In those cases, definitely ITC is allowed or not allowed, ma? Allowed. Along with inputs, even on capital goods also, ITC is allowed. But there is a special procedure with respect to capital goods, ma. From the date of invoice, a quarter or part thereof, 5% is needed to be reduced. And what is the amount that was there, remaining amount, that amount is allowed as ITC. Let us assume that plant and machinery value 1 lakh, rate of GST 18%. After using it for 1 year, 6 months in the composition scheme, now we shifted to normal scheme. How much ITC we can claim it down now? What is the input tax we paid, ma? 1 lakh into 18%, that will be 18,000. Okay. And in this, 1 year means 4 quarters and 6 months means 2 quarters, it will be 6 quarters. Per quarter 5% we need to reduce. 6 into 5, 30%, it is 5,400. After deducting that, remaining 12,600 is allowed as ITC. Remaining amounts, 12,600 is allowed as ITC. Okay. So, but if you observe with respect to first two, normal registration and voluntary registration, you can claim the ITC only on the inputs. But whereas with respect to last two cases, composition scheme to normal scheme or exempted supply to taxable supply, in these two cases, along with the inputs, even on the capital goods also, definitely we can claim the ITC. Next one is special cases of reversal of ITC. So regarding that, in all these three cases, the same procedure, that is cancellation of RC, regular scheme to composition scheme, and taxable supply to exempted supply. Okay. In these three cases, when your RC is cancelled, when your RC was cancelled on the on that particular date, how much amount of ITC to be reversed? Raw materials, semi-finished goods, finished goods, and along with that, even on capital goods also, ITC is needed to be reversed. In the same way, regular scheme to composition. At present, you are there in normal scheme. Now, you just shifted to composition scheme. In that case, definitely you need to reverse the ITC on raw materials, semi-finished goods, finished goods, and along with that, even on capital goods also, definitely we need to reverse the ITC. Next one is taxable supply to exempted supply. Taxable supply to exempted supply. In that case, amount to be received. So amount to be reversed is raw materials, semi-finished goods, finished goods. Along with that, even on capital goods also, we need to reverse the ITC. Okay. Sir, with respect to raw materials, semi-finished goods, finished goods, that means the inputs, how to reverse the ITC? If invoices are available, On a proportionate basis, we need to reverse the IDC. If invoice is not available, market price on that particular date will be considered to reverse the IDC. But whereas with respect to capital goods, reversal of IDC will be for remaining useful life in months. Generally, as per GST law, always 5 years is the total life of a capital asset. Okay. In that case, for how many number of days it was unutilized, in that particular proportion, we need to reverse the ITC. In that particular proportion, we need to reverse the ITC. Okay. Let's take the example. Same story, the plant and machinery value 1 lakh, rate of GST 18%. After using it for 1 year, 6 months in normal scheme, we shifted to composition scheme. Sir, in that case, how much IDC that is needed to be reversed? That is 1 year, 6 months means total it will be 18 months. Therefore, 18,000 into what is the remaining useful life month? 60 months minus 18 months. It will be 42. Therefore, 42 by 60. How much amount we will get? That is the amount we need to reverse. You can calculate that 12,600. 12,600 is IDC that is needed to be reversed. Okay, ma. And this reversal amount, if at all IDC balance is available, it will be reduced, or the reversal amount will be added to the output tax liability. Okay, and the balance amount will lapse. The day when this particular option of composition scheme was opted, or your supplies becomes exempted, whatever the remaining IDC balance that was there, it will lapse. That is the point you need to remember. Okay, ma'am. This is 18 subsection 4. Next one is supply of capital goods on which IDC taken. That means if the plant and machinery is sold as second-hand plant and machinery, in that case, what is the position? That is 18.6. First point is you need to compute how much IDC you claimed. From that, per quarter or part thereof, 5% is needed to be reduced. This amount will be compared with GST on the sale value. In that, whichever is higher, that amount is needed to be. Whichever is higher, that amount is needed to be reversed. Take the example, a plant and machinery value 10 lakhs, rate of GST 18%, and it was sold for some 6.5 lakhs. In that case, how much IDC that is needed to be reversed? How much IDC you claimed previously? 10 lakhs into 18%, 1,80,000 minus per quarter or part thereof, 5% is needed to be reduced. That means, okay, let us assume that 1 year, 6 months, it will be 6 quarters. Per quarter, 5%. 6 quarters means 6 into 5, 30%. 1,80,000 into 30%, it will be 54,000. After reducing that, what is the remaining amount that is there, ma? 1,26,000. This amount will be compared with GST to be paid on sale value. What is the sale value? 6,50,000 into 18%. 1,17,000. In that, which one is higher? 1,26,000 is the amount that is needed to be reversed. Okay. And in the same way, in case of brakes, modules, dies, jigs, fixtures supplied as a scrap. When any item is supplied as a scrap, straight away on the transaction value, you can compute the GST. There is no need to compute that 5% per quarter. Any brakes, molds, dies, jigs, fixtures, if it all they are supplied as a scrap. In those cases, there is no need to compute that IDC minus 5%. Straight away on the sale value, we can compute the GST needed to be paid. Okay. So there ends the topic with respect to our IDC. The next topic will be we need to discuss is registration. So what is meant by the word registration here? So in this registration chapter, the most important areas is 22, 23, 24, 27 and 29. These are the important areas what we are going to discuss now. Okay. The first one is here. GST registration needs to be taken state-wise and PAN-based. That means in how many number of states you are having the place of business, that many number of RCs you are required to take. GST registrations needs to be taken state-wise and PAN-based. In how many number of states? In how many number of states you are having the place of business, that many number of RCs you are required to take. Okay. Simply number of states is equal to number of RCs. Second one. Sir, let's say for example, Masterminds is there in two states, AP and Telangana. In that case, what is the position? Definitely Masterminds is required to take two registrations. Okay. Sir, in that case, what is the registration that is taken by Is it a CGST registration or a SGST registration? Definitely it is a GST registration. That means single registration for all the taxes. Whether it is CGST, SGST, IGST, for all these, there will be a single registration. Sir, if at all we are having multiple places of businesses within the same state, in that case also single RC is sufficient. Yes, normally one state, one registration is required. Even more than two places of businesses are there in your state. But however, a taxable person wants, he can take separate registration. He can take the separate registration. Okay. Now we are seeing section 22. As per section 22, the persons who are making intrastate supply of the goods or service are required to take the registration only if the aggregate turnover exceeds the threshold limit. What is the threshold limit? We need to see. With respect to small states like TNM2, what is meant by this TNM2, ma'am? That means Tripura, Nagaland, Manipur, Mizoram. Whether it is a supply of the goods or a supply of service, the registration limit will be 10 lakhs. With respect to SAP, TUM, Sikkim, Arunachal Pradesh, Pondicherry, Telangana, Uttarakhand, Meghalaya. With respect to these states, for all the supplier of the goods or services, if the limit cross, it is 20 lakhs. If the limit is 20 lakhs, what is the position in those cases? Required or not required, ma? Definitely, you are required to take the registration. Except these 4 plus 6, 10 states, in rest of the states, you are required to take the registration. When, ma? If it all is a supplier of notified goods like pan masala, tobacco, ice cream, building bricks, fly ash bricks and roofing tiles, the registration limit will be 20 lakhs. In rest of the exclusive supplier of the goods, the limit will be 40 lakhs. If at all you are a supplier of service or a supplier of goods plus service, automatically the limit will be reduced to 20 lakhs. Okay. And with respect to registration, another points. Sir, if at all you are making supplies from 2 places, from place 1, you are making a taxable supply. from place 2, you are making a non-taxable supply. In that case, what is the position? In that case, the position is simple. From the state where you are making a taxable supply, from that particular state only, you are required to take the registration. Registration is required only for a place of business from where we are making a taxable supply. Okay, second one. Sir, if the business is sold, transferee is required to take any registration? Yes. Why, sir? GST registration is PAN based. That's why PAN will be different from transferor to transferee. Therefore, in those cases, transferee is required to take the compulsory registration. Person liable for registration. In case of transfer of business, transferee is liable to be registered with effect from the date of such transfer. Okay. Sir, what is the time limit to make the registration? Within 30 days. And same point is applicable for amalgamation or demerger? Yes. For amalgamation or demerger, also transferee is required to take the registration from the date of certificate of incorporation within 30 days. Okay. The next point is section 24, compulsory registration. So as per section 24, compulsory registration. In these cases, what is the position, ma'am? So the next point will be section 24, ma'am. As per section 24, compulsory registration. That means even if the aggregate turnover does not exceed the threshold, but still you are required to take the registration. In that, the first point will be person making interstate taxable supply of goods. If the person is making any interstate supply of the goods, then he is required to take the compulsory registration. In the same way, second point is person required to pay tax under RCM. That means the 93 RCM recipients are compulsorily liable to get the registration irrespective of their turnover. Third one, CTP or NRTP. CTP means casual taxable person, NRTP means non-resident taxable person. These people are also required to take the compulsory registration irrespective of their turnover. With respect to ECO, every ECO is liable for TCS under section 52. Every ECO is liable for TCS under section 52. In that case, what is the position? The TCS collectors are required to take the compulsory registration. Second one, the persons who are supplying the goods or services through these ECOs are also required to take the compulsory registration. And ECO notified under 9 subsection 5. All these ECOs are required to take the compulsory registration. In the same way, TDS deductors, ISD, ISD means Input Service Distributor, is also required to take the compulsory registration. And in the same way, person making taxable supply on behalf of others, that is agents. Sir, that means which type of agents are covered under this compulsory registration? The answer is simple. If the invoice is issued in the name of the agent, that agent is covered under deemed supplies. Therefore, those agents who are issuing the invoices in their own names, they are covered under section 24 and they are required to take the compulsory registration. And in the same way, every person supplying OIDR services from outside India to an unregistered person in India. Example, Netflix. OIDR services means online information and database access or retrieval services. Regarding them, what is the position? Every person who is supplying OIDR services like OTT platforms, cloud services, something like that. Okay. In those cases, what is the position? Definitely, if at all they are supplying to an unregistered person in India from outside India, in those cases, they are required to take the compulsory registration. Next one, every person supplying online money gaming from a place outside India to a person in India. That means with respect to online money gaming services, which are providing from outside India to a person within India, in that case, those suppliers are also required to take the compulsory registration. Okay. Next point will be section 23, persons not liable for registration. In that the first point will be persons engaged exclusively in non-taxable or exempted supplies like alcohol. That means if at all you are making exclusive exempted supplies or exclusive non-taxable supplies, in those cases also, what is the position? You are not required to take any registration. In the same way, agriculturist, to the extent of supply of produce from cultivation of land, is also not required to take any compulsory registration or any registration at all. And persons making only RCM supplies. That means under RCM, recipient is the person who is required to take the compulsory registration and liable to pay the GST. Therefore, what is the position? Exclusive RCM suppliers is not required to take any registration. And in the same way, persons making interstate supplier of service up to 10 lakhs or 20 lakhs. This point will be interlinked with section 24. Per section 24, any person who is supplying the goods in interstate is required to take compulsory registration. If the person is making interstate supply of service, then he is not required to take compulsory registration as per 24. He is required to take the registration as per section 22. Okay. That means when his turnover crosses 20 lakhs or 10 lakhs. The next point is CTP or the person making interstate supply of handicraft goods is also not required to take compulsory registration as per section 24. But he need to take the registration as per 22 when the threshold limits exceeds. And another condition also there with respect to this CTP. Or that means the supplier of handicraft goods, that person should have obtained the PAN, and wherever required, he is required to generate e-way bill also. And in the same way, we had a discussion in 24 that persons making supplies through ECO is also required to take the compulsory registration. My question is, so here, along with supply of the goods, supplier of service is also covered. Further, the relaxation was given here that the person making supply of services through ECO other than 9.5, those ECOs are not required to take any compulsory registration. They are required to take the registration only when the threshold limit exceeds. Okay. So exclusive RCM suppliers, along with them, the handicraft goods and the persons making the services through EC. That means point number 4, 5, 6. In all these three cases, I am not saying that they are not required to take any registration. I am simply saying that they are not required to take the registration as per section 24. they are required to take the registration as per 22. Okay, that means when the limit is crossed, that is the thing you need to remember. Okay. The next point is procedure for registration. In this, the first point is PAN is mandatory for registration, except NRDP can be granted registration on the basis of passport. So what is the point here, ma? Generally, with respect to the remaining cases, PAN is mandatory for registration. But whereas with respect to few cases, what is the position, ma? Definitely, like NRDP, non-resident taxable person, RC can be granted even on the basis of passport also. The next one is, if the person takes registration voluntarily, he is not liable to pay the tax. He is not liable or liable? Liable to pay the tax. So that means, what is meant by this voluntary registration? Even though he is not required to take any registration, but still he got the registration. In those cases, he is liable to pay the GST or not? Yes, he will be treated as just like a normal taxable person. Whatever the rules, whatever the regulations, whatever the provisions that are applicable to a normal registered person will be applicable to this voluntary registered person also. And he is also liable to pay the GST. Okay. If any one unit is there in special economic zone area and another unit is there in non-special economic zone area, even though they are in the same state, separate registration is required for both place of businesses. Why, sir? Because once an area has been notified as special economic zone, it will be treated as outside India for all taxation purposes. That's why, even though that size unit is therein within the same state, the unit in special economic zone, the unit in domestic tariff area needs to apply for separate registrations, even though they are a part of same state. That is another important point you need to remember. The next point is Shumoto registration. Sir, what is meant by this Shumoto registration here? Shumoto registration means person who is liable for registration but fails to obtain the registration, then the department may register such person Shumoto, that is himself, on a temporary basis. What is this point here, ma? If the person is liable but fails to obtain the registration, the proper officer may register such person Shumoto himself on a temporary basis. That means even though he is required to take the registration as per 22 or 24, but still he applied for registration. But still he did not apply for registration. In those cases, department Shumoto basis will grant you a RC on a temporary basis. The date when the temporary RC was granted to you, within 90 days, you need to submit the application for registration. If you at all, you also feels the same thing. But if you feels that you are not required to take the registration, but department is forcing you to take it, then definitely you can file the appeal. If the appeal is in favor of you, then there is no need to take any registration. If the appeal is against you, then from the date of court order, you need to apply within 30 days. And interestingly, registration shall be effective from the date of order by the proper officer granting the registration. That means what is the point here, it will be? The answer is simple. The registration effective from the date of order by the proper officer granting the registration. The date when temporary RC was granted, from that particular date, what it will be, registration will be granted. That is the thing you need to remember. Okay. The next point will be, what is the effective date of registration? The effective date of registration will be, if you applies for RC within 30 days, if you applies for RC within 30 days, then even though RC was granted to you subsequently, the effective date will be the date when you are liable for registration. Let's say on March 1st, turnover was crossed. March 10th, we applied for registration. On March 14th, RC was granted to us. Even though RC was granted to us on March 14th, what can be the effective date, ma'am? What can be the effective date, ma'am? March 1st. Even though RC was granted to you on March 14th, the effective date will be March 1st. Sir, if we applied instead of March 10th, we applied on April 10th. And RC was granted to us on April 15th. In that case, what can be the effective date? That means here we applied for RC after 30 days. If you applies for RC after 30 days, what is the effective date, ma? Date of grant of registration. In our example, April 15th is the date when RC was granted to you. That will be the effective date. Next one is voluntary registration. Sir, what is meant by this voluntary registration? Already I told you that even though you are not liable to take the registration as per 22 or 24, but still you applied for it, then it is known as voluntary registration. In the case of voluntary registration also, what can be the effective date? The date of grant of RC will be the effective date. Okay. The next point is section 26, deemed registration. So that means the registration granted under SGST or UDGST is deemed to be registration under CGST also. Cancellation under SGST is deemed to be the cancellation under CGST also. That means your registration is approved under SGST. It is deemed to be approved under CGST also. If your application is rejected under SGST, it is deemed to be rejected under CGST also. This is section 26, as simple as that. The next point will be section 27. Special provisions with respect to CDP and NRDP. Okay. Section 27, special provision for CDP and NRDP. A person who casually undertakes transactions, whether as a principal or an agent or in any other capacity, in the state where he has no fixed place of business, in the course or furtherance of business, that fellow is known as CTP. That means the person who is having a fixed place of business in one state and making occasional supplies in some other states, then in the state where he is making an occasional supply, in that state, it will be called as CTP. And NRDP means has no fixed place of business or residence in India and still doing the business in India, that person is known as NRTP. Whether it is CTP or NRDP, they are required to take the compulsory registration as per section 24. In the same way, that means remaining people generally are required to take the registration from the date they become liable within 30 days. But whereas with respect to the CDP and NRDP, they need to apply for RC even before commencement of business 5 days. And what is the form number that is required? REC01. And with respect to NRDP, REC09. And CDP PAN-based GST registration. And whereas with respect to NRDP, passport-based registration. And in both cases, composition scheme is not applicable. And whereas with respect to CDP, input services on the capital goods, ITC is allowed. And with respect to NRDP, only on the imported goods, ITC is allowed. In rest of the cases, ITC not allowed. Next one. Required to submit advance tax at the time of application, both these people. Remaining people generally will pay GST either on a monthly basis or on a quarterly basis. But whereas with respect to our CDP or NRDP, they are required to pay the GST in advance. Then only they will get the registration certificate. That is the point you need to remember. Okay. The next point is here. Sir, for how much period the registration is valid here? The registration that is granted to the CDP or NRDP is valid for a period that is specified in the application, that is minimum 1 day, 3 days or something like that. The maximum period is 90 days. Time period applied or 90 days, whichever is lower. Sir, is it possible to extend the time period? Yes. For how much period? Another 90 days. Sir, for extension also, are we liable to pay the advance tax? Yes. For extension also, you are liable to pay the advance tax. Sir, that means from max to max, 90 plus 90, up to 180 days only, what we can do, ma? Up to 180 days only, what we can do, ma? We can up to 180 days only can continue in the capacity of CDP, ma. Okay. Sir, if at all it is a long running exhibition which you want to run for more than 180 days, what is the position? That fellow cannot be treated as a CDP and you need to obtain the registration as a normal taxable person. But you can surrender the RC once the exhibition is over. Okay. Simply what we can say is, ma, with respect to remaining people or CDP and NRDP, the difference is, the first difference, the remaining people will apply for RC. The date when they become liable for registration, from that particular date, within 30 days they need to apply. But whereas with respect to CDP and NRDP, they are required to apply for registration even before the commencement of business, 5 days before. Second difference, with respect to the remaining people, once RC is granted to them, it is permanent unless they cancels it or department you surrenders it. But whereas with respect to CDP and NRDP, the maximum validity period will be 90 plus 90, 180 days. This is the second difference. And third difference is, generally the remaining people will pay the GST either on a monthly basis, if at all you are a normal scheme person, and if at all you are a composition supplier, you will pay on a quarterly basis. But whereas with respect to CDP and NRDP, they are required to pay the advance tax. Then only they will get the registration. Without paying advance tax, they will not get the RC. That is the point you need to remember. This is all about section 27. So, after completion of that CDP and NRDP topic, the next thing we need to see is section 29. So, what does section 29 deals with? Cancellation or suspension of registration. Voluntary cancellation by the registered person. So, with respect to voluntary cancellation by the registered person, that means section 29 will have two subsections, 29.1 and 29.2. Whereas with respect to 29(1), it deals with the cases where voluntary cancellation of registration by the registered person. So what are the circumstances that may trigger cancellation by the registered person? The first point will be when the business is discontinued or transferred. When the business is discontinued or transferred. In those cases, what is the position, ma? When the business is discontinued or transferred. That means when the business is closed or when the business is sold, then definitely, say for example, if the business is sold, the transferee need to apply for a old RC can be cancelled by the transferor. And in the same way, the next one is when there is a change in the constitution of the business. Let's say partnership firm converted to company, company to LLP, or partnership firm to company, like that. If at all there is a change in the constitution, in those cases also, what is the position, ma? Definitely, RC can be cancelled by the registered person. And next one will be no longer liable to be registered. That means your taxable supplies becomes either exempted supplies or non-taxable supplies. In those cases, as per section 23, you are not required to take any registration. Okay. And whereas in the same way, intends to opt out of voluntary registration. That means you are a voluntary registered person, but you don't want to do the business. So definitely your RC can be cancelled by making the application to the department. Okay, so these are the cases where when applied by the registered person, your RC can be cancelled. When the business is closed, when the business is sold, when there is a change in the constitution, when we are no longer liable to get registered, or when the voluntary registered person wants to cancel his RC. In all these cases, definitely our RC can be cancelled by submitting application to the department. There is another subsection, that is 29 subsection 2, where your RC will be cancelled suo motu by the department. This is suo motu cancellation by the department. That means even though there is no application on the part of the registered person, but still your RC can be cancelled. What are those cases? RC was obtained by fraud. When RC was obtained by fraud and department knows about that particular thing, then also your RC can be cancelled. A voluntary registered person does not commence the business within a period of 6 months, then also your RC can be cancelled by the department. In the same way, non-filing of returns by the composition taxpayer, simply GSTR 4, is not filed from the due date within 2 months, then also your RC can be cancelled by the department. What is the due date of GSTR 4? Next financial year, April 30th. From that particular date within 2 months, you need to file this GSTR 4. Otherwise, by invoking 29 subsection 2, your RC can be cancelled by the department. In the same way, violates anti-profiteering measures. Generally, anti-profiteering measures are created for the sake of what we can say to have the to prevent the unhealthy trade practices. The concept of anti-profiteering rules were created. Anybody who violates these anti-profiteering measures, then also their RC can be cancelled by the department. In the same way, does not provide the bank details. That is Rule 10A. So what does Rule 10A deals with? From the date of RC within 30 days or the actual date of filing of GSTR 1, whichever is earlier one, on or before that particular details, definitely the details, the bank details are needed to be submitted by the concerned registered person to the department. Otherwise, your RC can be cancelled. So does not provide the bank details within the stipulated time of Rule 10A. Sir, what is the statutory time limit? From the date of RC within 30 days or the date of filing of GSTR1, whichever is earlier date, on or before this particular date, the bank details are needed to be submitted to the department. Otherwise, the whatever the RC that was previously granted to you, it can be cancelled by the department. Okay, in the same way, issues invoice or bill without supply of goods or services. Technically, it is known as fake invoice. If department notes that this person is issuing fake invoices, in those cases also your RC can be cancelled. In the same way, monthly return filer fails to file the return for a continuous period of 6 months. That means periods. That means if you are there in QRMP scheme, then for continuous 2 quarters, GSTR 3B was not filed and avoids IDC in violation of the Act. That means 16(2) conditions will be there now. Without documentary evidence, you cannot claim the IDC. Goods are, these are the cases where sumoto cancellation can be done by the department. Okay. Next point is suspension of registration. That means the date when you applied for cancellation, meanwhile the proceedings are pending. While the proceedings are pending in relation to cancellation, on the temporary basis, your RC will be suspended. If at all it is a case of 29(1) and this is a case of 29(2). 29 deals with when registered person applied for cancellation. What is the effective date of suspension? Date of submission of application or the date when you are seeking the department to cancel your RC, whichever is latter date. From that particular date, your suspension will be effective. Let's take the example. You just put an application on March 22nd to cancel the RC from April 1st. Then what is the date of submission of application? March 22nd. What is the date of cancellation? What is the date of cancellation? From which date you are seeking the cancellation? That is April 1st. So March 22nd or April 1st, whichever is latter date, April 1st. So April 1st is the effective date of suspension. And 29(2). What does 29(2) deals with? Cancellation initiated by the department. Cancellation initiated by the department. Okay. Then sumoto cancellation by the department. In those cases, what is the effective date of suspension will be determined by the proper officer. Okay. The next point will be the other points. While registration has been suspended, what are the consequences? A registered person shall not make any taxable supplies. Therefore, he cannot issue any tax invoice. That's why he is not required to file any GSTR1, GSTR3B also. The next point is here. Suspension shall stand revoked upon the completion of cancellation proceedings. Because once the cancellation proceedings are concluded and the cancellation order was passed, automatically suspension will stand revoked and cancellation order will replace the suspension. The registration is suspended due to the non-filing of returns shall be deemed to be revoked upon furnishing of all the pending returns. Just now we discussed in GSTR 3B continuously 6 months not filed. If at all you are there in QRMP scheme, then continuous 2 quarters it was not filed. In those cases, what is the position? Definitely in those cases, what is the position? Your RC can be cancelled by the department. But once you receive the notice, you file all those pending returns. In those cases also, the cancellation proceedings are deemed to be concluded. Okay. A taxpayer not allowed to file the returns post cancellation period. Once cancellation order is passed, you cannot file the returns relating to post cancellation period. So what is the procedure for cancellation? The procedure is just like this. If the cancellation was initiated by the registered person as per 29(1), you need to apply within 30 days of occurrence of such event. If everything is okay, department will cancel your RC within 30 days. And after your cancellation order is passed, you need to submit the details of your stock with the department in order to reverse the ITC, like what is the closing stock of raw materials, semi-finished goods, finished goods, and capital goods. On the date of cancellation of registration, all these details are needed to be submitted to the department. And if the cancellation is going to be done by the department as per 29(2), then department will issue a show cause notice. At least 7 days notice shall be given to you, and opportunity of being heard shall be provided. If satisfactory explanation was given, department will drop the proceedings. If the explanation is not satisfactory, then from the date of receipt of reply, within 30 days, cancellation order will be passed. But however, if the return is filed, because due to non-filing of returns, which the action has taken, then whatever the returns that are required to be filed was filed by the concerned person, then proceeding shall be dropped. Okay. Next point will be registration can be cancelled by retrospective effect. It depends upon the department intention from which date they need to cancel the RC. It can be cancelled from a retrospective date also. Cancellation will not affect the liability of the registered person prior to cancellation. That means whatever the liabilities that are there prior to the RC cancellation, same liabilities will be continued even after RC cancelled also. That means before cancellation of RC, you are liable to pay any GST. Even after cancellation of RC also, definitely the same liability will continue. Cancellation does not affect the liability of the registered person prior to the cancellation. The next point is here, Section 30. What does Section 30 deals with? Revocation of cancellation of registration. So the procedure for revocation of cancellation, when suo motu cancelled by the registered person, it is not available to the cases. It is not available to the cases where you applied for cancellation, that is 29(1), revocation facility may not be available. Revocation facility is available only to the cases with respect to 29 subsection 2. This time limit was now changed to 90 days. Now not ACRJC, Commissioner. 90 days, yes, it can be extended to another 180 days by the Commissioner due to sufficient cause. Okay, you need to apply for revocation to the proper officer within 30 days. If proper officer is satisfied, you will revoke the cancellation. Proper officer is not satisfied, he will issue the show cause notice. Then for that show cause notice, you must give a reply within 7 days. If your clarification is acceptable, that is okay. Within 30 days, department will accept or dispose the application. Where the registration was cancelled due to the failure to file the return, person has to file all the pending returns along with all the dues before filing application for revocation. You make the loss good before going for revocation. This is a topic you need to remember with respect to registration. So the next topic will be tax invoice and e-way bill. So with respect to tax invoice and e-way bill, the first topic will be tax invoice. So what is the manner of issuing the tax invoice is the thing we need to see. So how many copies of invoices are needed to be issued? If at all it is a supply of the goods, triplicate, original for the recipient, duplicate for the transporter, and third copy is for the supplier. Original is for the recipient to claim the ITC. Duplicate is for the transporter for transit check. Third copy is for the supplier to file the GSTR1. And with respect to supply of services, duplicate, 2 copies are sufficient. Original copy to the recipient, duplicate for the supplier. Duplicate for the supplier. Okay. So why with respect to goods 3 copies are there? Why with respect to services only 2 copies are there? What can be the reason? The reason is simple by here. Because with respect to goods being tangible ones, they are needed to be transported. So services being intangible ones, there is no requirement for this transporter. That's why with respect to goods, triplicate is required. With respect to services, only duplicate is there. Okay. That means with respect to this one, here it is not no invoice it is no separate invoice. No separate, generally what is the rule is, how many number of taxable supplies you are making, that many number of tax invoices you need to issue. Simply number of taxable supplies is equal to number of tax invoices. Okay, but no separate tax invoice is required if the following 3 conditions are satisfied. First one, value of the supply shall be less than 200. Recipient is a unregistered person. And third one, recipient does not require invoice. First one, value of the supply is less than 200. Recipient is an unregistered person. Third one, recipient does not require invoice. If all these 3 conditions are satisfied, in those cases, what is the position? No separate tax invoice is issued. Instead of that, a consolidated invoice can be uploaded at the end of each day. So, what are the 3 conditions that are required to be satisfied? Value of the supply is less than 200. Second one, recipient is a unregistered person. Third one, recipient does not require an invoice. If all these 3 points are satisfied, in those cases, what is the position? Definitely there is no need for separate invoice. Instead of that, a consolidated invoice can be issued at the end of each day. The next point is revised tax invoice. Sir, what is meant by this revised tax invoice? So generally, if you observe, with respect to registration chapter, from the date when you become liable for registration, from that particular date, if you apply for RC within 30 days, then even though RC was granted to you subsequently, the effective date will be the date when you are liable for registration. So in our example, March 1st, the liability arised. March 10th, we applied for RC. March 14th, RC was granted. In those cases, what is the position? Even though RC was granted to you on March 14th, the effective date will be the date that is March 1st. Okay. In that case, the effective date is March 1st. Actual date of RC is March 14th. Therefore, whatever the supplies that happen between in these 2 dates, that is effective date of registration, that is March 1st, up to actual date of registration, that is March 14th, again we need to issue an invoice. That particular invoice is known as revised tax invoice. Every registered person granted registration from the earlier date, not from the actual date of RC, shall issue a revised tax invoice. Sir, what is the time limit to issue this revised tax invoice? Within 1 month from the date of issue of registration certificate. The next point is consolidated revised tax invoice. What is this consolidated revised tax invoice? Say for example, while continuing the previous example, let us assume that from March 1st to March 14th, I made total 4 supplies to a single person. In that case, for all these 4 supplies, separate revised tax invoices are needed to be issued, or a consolidated revised tax invoice can be issued. It depends upon whether those supplies are B2B or B2C. If at all those supplies are B2B supplies, in that case, always separate revised tax invoice is needed to be issued. We can't issue a consolidated one. But if at all it is a B2C supply, we need to check whether it is intrastate supply or interstate supply. If at all it is an intrastate supply, then a consolidated revised tax invoice can be issued. If at all it is an interstate supply, we need to check the value. value less than or equal to 2.5 lakhs, a consolidated revised tax invoice can be issued. Value is more than 2.5 lakhs, separate revised tax invoice is needed to be issued. When a consolidated revised tax invoice can be issued, only if it is an intrastate supply or interstate supply value less than 2.5 lakhs, which is made to unregistered person. In those cases, only a consolidated revised tax invoice can be issued. And a consolidated revised tax invoice never be issued in case of a registered person, whether intra or inter. That is the point you need to remember. Okay. And another document is here after completion of tax invoice, bill of supply. Sir, what is meant by this bill of supply? Whenever the person is making either non-taxable supply or a composition supply, in those two cases, instead of tax invoice, what is the document that is issued by the supplier? Bill of supply. Person making supplies on which tax is not to be collected, that is, no invoice, just issue bill of supply. Whenever person is making any supply on which tax is not to be collected, in those cases, no invoice will be issued. Instead of that, a document called bill of supply will be issued. What are the cases where the tax cannot be collected? One is composition supply, second one is exempted supply. Therefore, in these two cases, whether it is a composite supply or a exempted supply, instead of tax invoice, what is the document we will issue? A bill of supply. Generally, sir, how to differentiate between the bill of supply issued for exempted supply and bill of supply issued for composition supply? The bill of supply issued by the composition supplier shall contain the words, I am a composition taxable person, not eligible to collect the tax. In those cases, what is the position? The other one will be in relation to exempted supply. Okay. The next point is here. Sir, to a single person, I made both taxable supplies as well as exempted supplies. In those cases, a separate documents are needed to be issued or a single document can be issued. That means to a single person, we made both taxable supplies as well as exempted supplies. What is the general rule? With respect to taxable supply, a tax invoice is needed to be issued. With respect to exempted supply, what is the thing we need to do, ma? With respect to exempted supplies, what is the position, ma? So for the taxable supply, a tax invoice needed to be issued. For an exempted supply, bill of supply is needed to be issued. Okay, but the question is here, is it possible to issue a single document? That means in case supplier is making taxable and exempted supplies together. In those cases, if at all it is a B2C supply, then in such a case, there is no need to issue a separate tax invoice for the taxable supply and bill of supply for the exempted supply. A single document called invoice cum bill of supply can be issued. A single invoice cum bill of supply can be issued. But if at all it is a B2B supply, always you need to issue two separate documents. With respect to taxable supplies, tax invoice is needed to be issued. With respect to exempted supplies, definitely bill of supply is needed to be issued. This is the point you need to remember with respect to bill of supply. And apart from that, some other points can also be there like receipt voucher and refund voucher. So now we are going to discuss about the other aspects of this tax invoice and debit notes, credit notes chapter. Next topic is debit notes and credit notes. What are the circumstances where a credit note can be issued? Generally, there are four circumstances where a credit note can be issued. So, there are four circumstances where a credit note can be issued. First one, supplier declared value is more than actual value of supply. Supplier declared value is more than actual value of supply. That means invoice value is more than actual value. Invoice value is more than actual value. In those cases, a credit note can be issued. Second one, supplier declares high rate of tax rather than the applicable rate. Simply, tax indicated in the invoice is more than actual tax payable. Tax indicated in the invoice is more than actual tax payable. Third one, goods received in less quantity, deficiency in the quantity. Fourth one, sales returns. In all these four cases, a credit note is going to be issued by the supplier. But once a credit note is issued by the supplier, it will reduce the output tax liability. That is the point you need to remember. Okay. Sir, what is the time limit to issue the credit note? What is the time limit to issue the credit note, ma? The time limit will be 16/4 time limit, ma. That means next financial year, November 30th, or date of annual return, whichever is earlier. So what is the time limit, ma? Details of credit note declared in the return for the month during which such credit note is issued, but not later than 30th November following the end of the financial year in which supply was made, or date of filing of annual return, whichever is earlier. Simply 16/4 time limit, next financial year November 30th, or date of annual return, whichever is earlier. That is the last day to issue the credit note. Next one is debit notes, ma. So in the following cases, a debit note can be issued with respect to the two circumstances. One is supplier declared value is less than actual value. Supplier declared value is less than actual value. And second one, supplier declared low rate of tax than applicable rate. Third one, goods received in more quantity by the buyer. First one, actual invoice value is less than actual value. Second one, tax indicated in the invoice is less than actual tax payable. Third one, when the goods are received in more quantity. In all these cases, a debit note will be issued. A debit note is issued by the supplier will increase the tax liability. Keep it in mind that word, ma. Credit note will reduce the output tax liability of the supplier. A debit note will increase the output tax liability of the supplier. That's why with respect to debit note, there is no time limit for showing the debit note in the return. Okay. And the next point is e-invoicing. So what is meant by this e-invoicing? E-invoicing applicability. When this e-invoice is applicable, supplier is a notified person, and the supply is of B2B supply or exports. Even the exports are done to unregistered persons, then also definitely invoicing is required. And who is that notified person? The notified person will be registered person having the aggregate turnover of more than 5 crores based on the PAN in any preceding financial year from 2017-18 onwards. So what is the point here, ma? Applicability. Supplier is a notified person and supply of B2B or export. In those cases, invoicing is applicable. What is the first point, ma? Registered person having the aggregate turnover of more than 5 crores based on PAN starting from financial year 17-18 onwards. In those cases, the concept of invoicing will be applicable. Sir, who are the people to whom this invoicing is not applicable, or what are the cases where invoicing is not applicable? Not required. When invoicing is not required, ma? If at all it is a B2C supply. Second one, invoice issued by the ISD. Third one, import of the goods, that is bill of entry. In all these cases, invoicing concept will not be applicable. When invoicing concept is not applicable, ma? If at all it is a B2C invoice or invoice is issued by the ISD or import of the goods. In all these three cases, invoicing is not applicable. The next point will be obtaining IRN. Invoices will be reported to Invoice Registration Portals, IRPs. That means with respect to normal case, there is no prescribed format for tax invoice. But whereas with respect to invoicing, there is a prescribed format that is known as INV01. So with respect to INB01, what is the position, ma? Invoices will be reported to invoice registration portals. So once such reporting is done on this invoice registration portals, they will generate a unique number that is known as IRN, Invoice Reference Number. A GST e-invoice is not valid unless it is having a valid IRN, which is a 64-digit hash mark. Okay, that is the point you need to remember with respect to invoicing. And next point is here. So when this invoice is not required, or what are the exemptions from e-invoicing? So what are the exemptions from e-invoicing, ma? First one is says units, not says developers. Not says units, that means says developers are required to issue the e-invoice, ma, but says units are not required. What is the difference between says unit and says developer, ma? With respect to says developer, what is the position, ma? With respect to says developer, what is the position? Generally, the persons who will develop infrastructural facility, those people are known as develop infrastructural facility. Those people are known as says developers. Once the area was developed, the unit that will be started there is known as says unit. Okay, first one is says units, ma. Second one, insurance, bank, financial institutions and NBFCs. Insurance, bank, financial institutions and NBFCs. In those cases, what is the position, ma? Definitely, they will be having huge number of transactions, ma. They will be having huge number of transactions. In those cases, what is the position, ma? Definitely these insurance, bank, financial institutions, NBFCs, those people are also not required to issue invoices even though their aggregate turnover is more than 5 crores. GTA, transportation of the goods by road, generally this point will, why GTA was excluded, ma? Being unorganized sector. Fourth one, passenger transportation services. These people are also exempted from invoicing, I think because of huge number of transactions. And admission to exhibition, cinema or multiplex movie theaters, exemption was given. As per my opinion, huge number of transactions can be there. And government departments and local authorities, in all these cases also, what is the position, ma? In all these cases also, what is the position, ma? Definitely government departments and local authorities, what is it's self-government now. That's why in those cases also, they have been given exemption from invoicing. So these are the 6 category of people who are actually given relaxation from invoicing, even though their aggregate turnover is more than 5 crores. The next one is dynamic QR code. The next topic we need to discuss is, so what is this dynamic QR code? What is the difference between dynamic QR code and QR code? Dynamic QR code means, say for example, there is a QR code. If you scan it, you need to manually enter the amount. That is known as QR code. What is meant by dynamic QR code? Scan and pay in one go is possible. It is known as dynamic QR code. Okay. So the first one is supplies made by the notified person and supply is B2C. And supply is B2C. Sir, who is that notified person? The registered person having the aggregate turnover more than 500 crores in any preceding financial year starting from 17-18 onwards. In those cases, what is the position, ma? Definitely, dynamic QR code is applicable if at all it is a B2C supply. And who are the people that are exempted from this dynamic QR code? First one, insurance, bank, financial institution, NBFC. These people are exempted. In the same way, GTA for the transportation of the goods, passenger transportation service, multiplex movie theaters, OIDR service providers, exporters, supplies to UIN, unique identification number holders, invoice to the recipient outside India for the supply of services for which amount to be received in forex. Invoice to recipient outside India for the supply of services for which the amount to be received in forex. Okay. That means simply it is export of service. In all these cases, what is the position? In all these cases, what is the position? Dynamic QR code is not required. Dynamic QR code is not required. That is the point you should remember. Okay. The next point is vouchers. Sir, what is meant by the word vouchers here? Vouchers here means one is receipt voucher and the second one is refund voucher. What is meant by this receipt voucher? A registered person shall on the receipt of advance with respect to any goods, services or both issues a receipt voucher. Simply, whenever any advance is received by the supplier from the recipient, as evidence of that, what is the document that will be issued? A receipt voucher will be issued. But with respect to goods, whenever advance is received, you are not liable to pay any GST. But with respect to services, definitely whenever advance is received, you are liable to pay the GST. Okay. So based on that, what is the position? So issues a receipt voucher whenever you are liable to pay the GST and advance, and rate of tax is not determinable. In that case, what can be the rate of tax that can be applied? 18%. And if at all the nature of supply is not determinable, in that case, what is the position? It should be assumed to be interstate supply. And IGST is needed to be paid. And what is meant by this refund voucher? Refund voucher means due to any reason, initially advance was received, receipt voucher is also issued, but due to any reason we are unable to make the supply. Due to any reason we are unable to make the supply. That means if no supply or no tax invoice can be issued against such advance received, whatever the advance that was received, it is needed to be refunded. That one is known as refund voucher. That one is known as refund voucher. That is the point you need to remember. Okay. The next point we need to see is delivery challan. With respect to delivery challan, when a DC is required, generally the fundamental rule is whenever there is a physical movement of the goods involved, whenever there is a physical movement of the goods involved, it should be accompanied either by a tax invoice or by a DC, delivery challan. Okay. Generally, when a DC or a delivery challan will be issued, sometimes at the time of removal of the goods, the quantity is not clear. In that case, the delivery challan to be issued and tax invoice can be issued later on. Sometimes at the time of the removal of the goods, quantity is not clear. Sometimes at the time of removal of the goods, quantity is not clear. In those cases, initially a delivery challan will be issued. Later on, when the quantity was confirmed, a tax invoice can be issued. The cases can be supply of liquid gas, where the quantity at the time of removal is not known. In the same way, with respect to transportation of the goods for job work or for the reasons other than supply, in those cases, what is the document that shall be accompanied by? It shall be accompanied by a DC, delivery challan. Okay. Sir, if the goods are sent on semi-knockdown condition or complete knockdown condition or sometimes in lots, in those cases, how to deal with this delivery challan? If the goods are going to be sent in installments or in CKD or SKD form, supplier shall issue the complete invoice before the dispatch of the goods itself. Second one. a delivery challan for every consignment along with the copy of original invoice. A delivery challan for every consignment along with copy of original invoice. Okay. Delivery challan for every consignment along with copy of original invoice. Simply, let's say for example, the goods are going to be sent in 4 installments. In that case, what is the position? First 3 installments or first 3 lots, when they are going to be sent, they shall be accompanied by the DC delivery challan along with Xerox copy of the invoice. When the last installment or the last consignment is going to be sent, original copy of the invoice to be sent with the last consignment. This is the procedure you need to follow regarding when the goods are sent on in the CKD or SKD form, or the goods are going to be sent in installments. Okay. The next point is e-way bill. Who and when e-way bill is required to generate? The first point will be who is required to generate the e-way bill. Every registered person who is causing the physical movement of the goods is required to generate the e-way bill. Sir, who is causing the physical movement of the goods there? Who is causing the physical movement of the goods, ma? The person who is arranging the transport. The person who is arranging the transport is known as that person is causing the physical movement of the goods. Let's say if the transportation was arranged by the supplier is causing the physical movement of the goods. If recipient is arranging the transport, recipient is the person who is causing the physical movement of the goods. That's why every registered person, either that can be consignor, that is supplier, or consignee, that is recipient, who causes the physical movement of the goods is required to generate the e-way bill. Next one. Sir, when e-way bill is required, consignment value exceeds 50,000, then e-way bill is mandatory. Sir, what is meant by the word consignment value? Transaction value plus GST minus exempted supplies value is equal to consignment value. If that consignment value is more than 50,000, what is required, ma? E-way bill is mandatory. That is the point you need to remember. Okay. So the next point will be, sir, when e-way bill is mandatory, when e-way bill is voluntary. If you observe here, mandatory generation, when e-way bill is required to be generated mandatorily, ma? If the consignment value is more than 50,000. In the same way, if you observe there, one is job work and second one is handicraft goods. One is job work and second one is handicraft goods. In these two cases, whether the goods are sent by the principal to the job worker or job worker to the principal. In the same way, with respect to handicraft goods, where the person exempted from obtaining the registration. In these two cases, whenever there is an interstate physical movement is required, even though the consignment value is less than 50,000, what is required? E-way bill is required irrespective of consignment value. If at all it is a job work or a handicraft goods, whenever interstate physical movement was involved, e-way bill is required irrespective of the consignment value. Okay. Sir, voluntary generation, when e-way bill is required to be generated voluntarily, that means if the consignment value is less than or equal to 50,000, e-way bill generation is optional. Who will generate the e-way bill? I told you already. Every registered person causing the movement of the goods is required to generate the e-way bill. Okay, this is the point you need to remember regarding this. Who is required, when it is required. So the next point will be, so already we discussed at this point here that if there is a physical movement of the goods involved, And so now if the consignment value is more than 50,000, in that case, e-way bill is required. The question is here, so what is meant by the word consignment value? I told you already that what is meant by the word consignment value? The value determined as per section 15, that is what we can say, the transaction value plus GST minus exempted supplies value is equal to consignment value. Based on that consignment value, if at all it is more than 50,000, e-way bill is compulsory. The next point is here, sir, what are the particulars of this particular e-way bill? Generally, the form number which is used to make this, generate this e-way bill is EWB01. With respect to EWB01, there will be two parts, part A and part B. With respect to part A, the major details will be invoice details, and with respect to part B, the details will be majorly transport details. Like in part A, details of the goods supplied, supplier GST number, recipient GST number, place of dispatch, place of delivery, document number means invoice number, value, all these things will be there in part A. And part B generally will contain transport details, transport document number, vehicle number, all these details will be there in part B also. Okay, with respect to part A, what is the position? Who will fill this part A? The person causing the physical movement. Generally, the consignor or consignee will fill part A, whereas part B will be generally filled by the transporter. Okay, but if at all any authorization that is received from consignor or consignee, in those cases, the transporter or the e-commerce operator or the courier agency will also fill part. So generally, part A details will be filled by the consignor or consignee. But if at all any authorization that is received from either consignor or consignee, even the transporter, ECO or courier agency can also fill part A. So part B details will be generally filled by this transporter, if at all it is in the case of road, and whereas if the transportation is done through rail, air or vessel, in those cases part B is also needed to be filled by Part B is also needed to be filled by the consignor or consignee only. That is the thing you need to remember. Okay. So already we had a number of times the word person causing the movement. Sir, what is meant by the word person causing the movement is required to generate the e-way bill? The point is simple here. If the supplier is registered and undertakes to arrange the transport, then supplier is the person who is causing the movement. If the recipient is arranging the transport, then the recipient is the person who is arranging the transport. That fellow is causing the physical movement of the goods. And if at all, supplier is an unregistered person, recipient is a registered person, in those cases, the registered recipient is the recipient registered, then the registered person is required to generate the e-way bill. Okay. So the next question is here, when e-way bill is required to be generated, whether it is before commencement of physical movement or after commencement of physical movement. In case of rail, air or vessel, the information in part B can be filled even before or after the commencement of physical movement. But whereas with respect to transportation of the goods by road, in those cases, e-way bill is required to be generated before the commencement of physical movement. But if that means by roadways, e-way bill is required to be generated before commencement. With respect to railways, airways and waterways, e-way bill can be generated either before or after the commencement of physical movement. But in order to deliver the goods, e-way bill must be produced at the time of delivery with respect to these three cases. And if the goods are going to be transported in its own conveyance or a hired conveyance or a public transport, in those cases, the part B is also filled by registered person himself. If the goods are going to be transported in his own vehicle or a public transport, then part A as well as part B is needed to be filled by either consignor or consignee who is a registered person. Okay. Sir, if the consignment value is more than 50,000, neither the consignor nor the consignee is a registered person. Therefore, they did not generate this e-way bill. In that case, what is the consequence? Where the e-way bill is not generated either by the consignor or by the consignee, it shall be the responsibility of the transporter to generate the e-way bill if the value is more than 50,000 rupees. Sir, if the transporter is an unregistered person, then also the responsibility falls on transporter. By using unique transit ID, he need to generate the e-way bill. Sir, my question is, let's say the goods are transported through a vehicle and the e-way bill was generated. Later on, the vehicle was met with an accident and it is unable to move. Somehow the goods are safe. Now the goods are shifted to another vehicle. The question is here, is it possible to continue under the old e-way bill or new e-way bill is required to be generated? Answer is, general rule is e-way bill cannot be edited or modified, but it can be cancelled. Okay, what is the general rule, ma? E-way bill cannot be edited or modified, but it can be only be cancelled. But with respect to vehicle details, when the goods are shifted from one conveyance to another conveyance, then part B details can be updated any number of times. Okay, who can update the details? The person who is making the physical movement, or the transporter can update the conveyance details in part B any number of times. Except the conveyance details, the e-way bill cannot be edited or modified, but the only option left is it can be cancelled. The next point is here. The e-way bill is generated in one state, is valid in another state also. Answer is yes. E-way bill is a central document, not a state specific. So it is valid throughout the journey. E-way bill is the invoice specific. That means, let's say the seller is the same, buyer is the same, address of delivery is also same, but there are 10 invoices. If at all there are 10 invoices, in those cases, what is the position? If at all there are 10 invoices, what is the position? When there are how many number of invoices, that many number of tax invoices we need to, e-way bills required to issue. E-way bill is invoice specific. Every invoice requires separate e-way bill. E-way bill is invoice specific. Every invoice requires a separate e-way bill. Even the vehicle, transporter, supplier, recipient is the same. But still, how many number of invoices are there? That many e-way bills we require to make. Okay. Generally, if you fill part A as well as part B, then only a valid e-way bill is generated. That means an e-way bill is valid only when part B is filed. Okay, but there are two exceptions to that. That means even though the part B was not filled, but still the e-way bill is a valid one. What is that, sir? That means the goods transported for a distance of up to 50 kilometers within the state, from consignor place to transporter place, or transporter place to consignee place, from consignor place to transporter place, or transporter place to consignee place, if the distance is up to 50 kilometers, in those cases, what is the position, ma? Definitely part B is not required. Part B is not required. But I am not saying that e-way bill is not required. I am simply saying that part B is not required. When? consignor to transporter place, or transporter place to consignee place. A transporter place to consignee place. In these two cases, what is the position? If the distance is up to 50 kilometers, part B is not required. That is a point you need to remember. Okay. So once the e-way bill is generated, the details of e-way bill will be made available on the GST Common Portal to all the three parties, supplier, recipient and the transporter. In case information is provided by transporter or recipient, the details will be made available to the supplier if at all is a registered person. In case the information is provided by the transporter or the supplier, then it shall be communicated to the recipient if it all is a registered person. And the other party shall communicate acceptance or rejection within a period of 72 hours. But if it is neither accepted nor rejected within 72 hours, in those cases it will be considered as accepted. In those cases it will be considered as accepted. If nothing was heard from that either supplier or recipient to whom the intimation was sent, within 72 hours nothing was actually heard from them, then it is considered as accepted. And what is the validity period of e-way bill? Here the cargo can be divided into two types. One is a over-dimensional cargo and second one is a normal cargo. If at all it is a over-dimensional cargo, what is meant by over-dimensional cargo? Heavy vehicles in simple sense. So what is the validity period of e-way bill if at all it is a over-dimensional cargo? For every 20 kilometers or part thereof, 1 day validity period will be there. For every 20 kilometers or part thereof, 1 day validity period will be there. Okay. And second one is, if at all it is a normal cargo. If at all it is a normal cargo, that is other than over-dimensional cargo, for every 200 kilometers or part thereof, 1 day validity period will be there. Let's say with respect to a journey, let us assume that it is a over-dimensional cargo. If at all it is a over-dimensional cargo, in that case, the journey is 30 kilometers. In that case, what is the validity period of e-way bill? The validity period of e-way bill will be, the validity period of e-way bill can be for every 20 kilometers or part thereof 1 day. Therefore, what it will be now? 30 kilometers na distance for 21 or part thereof further 20 also another 1 day. The total validity period of e-way bill will be 2 days. If at all it is a over-dimensional cargo. If at all it is other than over-dimensional cargo, simply normal cargo, lightweight vehicles, in those cases, for every 200 kilometers or part thereof, 1 day validity period will be there. Okay. And if at all it is a multimodal shipment, where some part of the journey involved in ship, in those cases, both options are available to that particular person. He can treat it as a over-dimensional cargo or a normal cargo. Sir, is it possible to extend the validity period of e-way bill? Yes, the validity period of e-way bill can be extended within 8 hours from the time of its expiry, and by showing the reasons to the commissioner, commissioner may extend the time period. Sir, what is the time period where the e-way bill can be cancelled? Within 24 hours. E-way bill can be cancelled within 24 hours of its generation. But if the physical movement started, while if it verified that the physical movement was started then cancellation is not possible. The next point is blocking of e-waybill. The following persons can be blocked from generation of e-waybill. See this as a supplier. That means in the supplier capacity only your e-waybill generation will be blocked. If your name is mentioned as the recipient, then that is okay. Okay. That means here the composition payer not furnished the statement for 2 consecutive quarters. That means CMP 08 was not filed for continuous 2 quarters. Regular taxpayer has not furnished for returns for 2 tax periods. Simply GSTR 3B is not filed for continuous 2 months and GSTR 1 was not filed for any 2 months and your RC was suspended. In all these cases, your e-waybill can be blocked by the department. In those cases, Commissioner will have the authority to unblock it. Okay. Commissioner may allow generating the e-waybill on sufficient cause and reason in writing, may unblock your e-waybill later on. So these are the important points you shall remember with respect to the chapter tax invoice, debit notes and credit notes. So the next topic will be payment of tax. So with respect to payment of tax, the first thing we need to see is there are 3 electronic ledgers maintained in common portal for every registered person. The 3 ledgers will be here. Electronic liability register, electronic credit ledger and electronic cash ledger. So generally electronic liability register will reflect the payables. The debit side will be payables and credit side will be paid. Okay. Generally this electronic liability register will show all the dues of the registered person to the government in the debit side, and it can be set off with the payments that are done through electronic credit ledger, that is ITC, or electronic cash ledger. Okay. And what is the order of discharge of liability with respect to electronic liability register? First priority will go to previous tax period amounts. Second priority will go to current period dues. Third priority will go to other demands as per 73 or 74. Okay. And the second one is electronic credit ledger. It will generally reflect the ITC balance. Whenever any input tax that was paid on your purchases, definitely the amount will be credited to your electronic credit ledger. And that amount can be used to pay tax only. Keep that word in mind. ITC balance can be used to pay tax only. But electronic credit ledger, this electronic credit ledger will be compared with Paytm wallet. Just like the amount is needed to be transferred from bank to the Paytm wallet, in the same way, the amount is needed to be transferred from electronic cash ledger to, from the bank to electronic cash ledger. When the amount is deposited in the electronic cash ledger, it will reflect in the credit side. Okay, and this amount can be used to pay tax, interest, penalty, late fee and others. Simply the cash balance can be used to pay any amount in relation to GST. It can be used to pay tax, interest, penalty, late fee and others. But whereas with respect to your ITC balance, it can be used to pay tax only. That is the point you need to remember. Okay. Sir, what are the various modes of depositing money in the electronic cash ledger? What are the various modes of depositing the money? Online mode, that is credit card or debit card, UPI, internet banking, IMPS. All these are the online modes. And with respect to offline mode, with respect to offline mode, what is the position? NEFT or RTGS, over the counter, maximum 10,000 per tax period. Okay. Cash, check, DD, okay. But any mode you can deposit over the counter. But even though you are making the deposit over the counter, in few cases, even you can deposit without any limit. The first one is government departments itself. When GST is going to be deposited by government department like AP Tourism, in those cases, even it is more than 10,000, it is allowed. Second one, To recover the outstanding dues from any person, registered or not, including recovery through sale of the property. Okay. To recover the outstanding dues from any person, registered or not, including the recovery through sale of the property. And third one, during any investigation or enforcement activity. In those cases also any ad hoc deposits are going to be made. They can also be deposited over the counter more than 10,000 rupees. It is allowed. Except in these three cases, there is a limitation in depositing the money in the electronic cash ledger through cash, check or DD up to 10,000. Sir, if we want to deposit more than 10,000, what is the position, sir? Other modes are there now. By using other modes, definitely you can deposit. Okay. So the another point you need to see is here. So there are four major heads with respect to electronic cash ledger, like CGST, IGST, SGST or UDGST and cess. Every major head is divided into five minor heads: interest, penalty, late fee and others. Tax, interest, penalty, late fee, others. Like that, every major head is divided into five minor heads. Okay. Every major head is divided into five minor heads. So based on that, sir, is it possible to transfer the amount from one ledger to another ledger? Answer is yes. Definitely a registered person can now transfer the amount from one major or minor head to another major or minor head by using PMD09 challan. Okay. That means cross-utilization of the funds across major or minor heads now possible. Sir, what is the position with respect to unpaid liability? Sir, what about, is it possible to transfer the balance from one account to another account? That means one GST number to another GST number of the same organization. Those people are generally known as distinct persons. Is it possible to transfer the surplus cash balance from one distinct person to another distinct person? Answer is yes. If no unpaid liability in the electronic liability register, then the surplus amount available in this electronic cash ledger of one distinct person now can be transferred to another distinct person also. If no unpaid liability is there, that means there is no outstanding liability in the electronic liability register, the amount available can be transferred to the electronic cash ledger of distinct person. That is the point you need to remember. Okay. Okay, ma. So the next point will be in this electronic cash ledger completion. The next topic will be electronic credit ledger. What are the items that will be reflected in electronic credit ledger? The self-assessed input tax credit. First of all, what is meant by the word assessment? Assessment means determination of tax payable. Assessment means determination of tax payable is known as assessment. Determination of tax payable is known as assessment. Okay. And self-assessment. What is meant by the word self-assessment? How much tax we need to pay? If at all it is assessed by the assessee himself, it is known as self-assessment. In which way the self-assessed ITC will come into scene? When the recipient files the GSTR 3B, in that how much ITC is claiming, that one is known as self-assessed ITC. That self-assessed ITC will be credited to his electronic credit ledger. Okay. And already we know that ITC available in this electronic credit ledger cannot be utilized for the tax payable under reverse charge mechanism. Already we know this point. Whenever we are liable to pay the GST under RCM, always pay by cash only. We cannot utilize the ITC balance. Whenever you are liable to pay the GST under RCM, it is always payable and by cash only. You cannot utilize the ITC balance. That is the thing you need to remember. Okay. The next point will be manner of utilization of ITC. Section 49 of CGST Act, this point is here. Amount available in IGST must be fully exhausted before utilizing the amounts available under other heads, that is CGST, SGST or UTGST. Okay. That means in order to utilize the other IDCs, what is the position? Definitely IGST IDC shall be 100% exhausted. Okay, then only you can utilize the remaining IDCs like CGST, SGST or UTGST. The next one is, so what is the order of this point? What is the tax that is paid on inward supplies? That is, if at all it is a IGST ITC, then that can be utilized first to pay the tax on outward supply of IGST. Still, any surplus IGST ITC that was there, it can be used to pay CGST, SGST, UTGST in any manner, in any ratio. IGST ITC first it shall be used to pay IGST. Still any surplus is there, it can be used to pay CGST, SGST and UTGST in any ratio, in any sequence. Okay. And second one is CGST IDC. This CGST IDC first can be utilized for the payment of tax on outward supply of CGST. Still, any surplus CGST IDC that is available, it can be used to pay IGST. And third one is SGST or UTGST IDC. This SGST or UTGST IDC can be utilized to pay the tax on outward supply of SGST or UTGST. And still any surplus SGST or UTGST ITC is there, it can be used to pay IGST. Okay, ma'am. Another point you need to remember is Rule 86B. Even though it is there in ITC, it is relevant for payment of tax here. The point is here, ma'am. Let's take the example. The output tax payable is, let's say, some 100 rupees and ITC of 105 rupees is there. In that case, generally, how much amount that is needed to be paid in cash? Answer is 0. Because the output tax payable is 100, IDC is of 105. In those cases, what is the position? There is nothing is there to pay in cash. But to whom this Rule 86B is applicable, they can utilize only 99% of the output tax from the IDC and rest of the 1% is needed to be paid in cash. In those cases, even though you are having 105 rupees in our example as ITC, you can utilize what is output tax 100. In that 99%, that is 99 rupees only can be utilized from ITC balance and remaining 1% is needed to be paid in cash. Sir, when this Rule 86B is applicable, whenever the value of taxable supplies other than exempted or zero rated supplies in a month exceeds 50 lakhs, in those cases Rule 86B will be applicable. Simply the taxable turnover value is more than 50 lakhs. In those cases, what will be applicable, ma? Rule 86B will be applicable. That is the point you need to remember. What is the next one? The amount available in the electronic credit ledger cannot be utilized for the payment of interest, penalty, late fee or any other amount except from output tax. Already we know this point. What is the IDC balance that is available? It can be used to pay output tax only and the rest of the late fee, interest, penalty, all those things are needed to be. What is the thing, ma? Shall be paid out of electronic cash ledger. That is the point you need to remember. Okay. So the next point is interest, ma. So with respect to interest, Section 50 comes into C. When interest is generally payable. When interest is generally payable, ma, whenever the tax paid, that means whenever the tax is paid after the due date, then definitely you are liable to pay the interest. The question is here, what is the due date of payment of tax? With respect to if the tax is going to be paid on a monthly basis, Next month, 20th will be the date of payment of tax. Okay, that is the point you need to remember. Next month, 20th is the date of payment. That is the due date of payment of tax. If the tax is not paid within that particular due date, then as per section 50, interest will come into C. And already you know that interest shall be payable only in cash. Interest can be paid through cash only. And we cannot utilize the ITC balance for the payment of interest. Sir, under which circumstances generally interest is needed to be paid? Under two circumstances generally interest is needed to be paid. In that, the first one will be delay in payment of tax, either in part or in full. That means whether there is any short payment or non-payment is there within the due date, then definitely you are required to pay the interest. Sir, what is the rate of interest, sir? 18% per annum. From which date up to which date? What is the time period for which the interest is needed to be paid? From the due date, that means after the due date, from the next day onwards up to the actual payment date, definitely you are required to pay the interest. Let's say, for example, with respect to March month, what can be the due date? April 20th. You just paid that amount on May 5th. In that case, what is the period for which interest is needed to be paid? With respect to March month, what is the due date? April 20th. Therefore, interest is needed to be paid from April 21st up to March 5th. April 21st up to May 5th. Definitely, what is the thing you need to do, ma? You need to pay the interest. Okay. Sir, on which value we are liable to pay the interest? That means on the gross amount or on the net amount. General trend is, if the tax is paid after the due date, but before the start of recovery proceedings, show of show cause notice, in those cases, interest is payable on net tax, that is, tax payable after utilizing the ITC balance. Okay. But whereas, if the tax is paid after the start of the proceedings under 73 or 74, on the gross liability, that is before deducting ITC, you are required to pay the interest. Okay. The next point is here, utilization of ITC. So, the second circumstances where you are required to pay the GST will be utilization of wrong availment of ITC. Utilization of wrong availment of ITC. That means you are not liable to pay interest when ITC was wrongly availed. If that wrongly availed ITC was utilized, then only you are liable to pay the interest. Keep that word in mind, ma. Whenever wrong availment of ITC was there, you are not liable to pay any interest. But when that wrongly availed ITC was utilized, then you are liable to pay the interest at the rate of 18% per annum. Sir, from which date to which date we are liable to pay that? From date of utilization of wrongly availed ITC up to the date of reversal or payment of the tax, definitely you are required to pay the interest. The question is here, when this amount is treated as wrongly utilized, excess ITC would be ITC wrongly availed minus ITC balance in electronic credit ledger. Simply when this was actually wrongly utilized, let's take the example. ITC wrongly availed was 50,000 rupees. ITC wrongly availed was 50,000 rupees. Okay. Now the point is, in this 50,000, we need to check what is the closing balance of ITC. Let's say a wrongly availed tax of 50,000 is in the month of March. In that case, we need to check on March 31st, the ITC balance is, let us assume, some 70,000. That means, what is the wrongly availed ITC, 50. What is the ITC closing balance? 70. I think already excess ITC of 20,000 is there. In that case, there is no utilization of wrongly availed ITC Therefore, with respect to March month, you are not liable to pay any interest. Okay, with respect to April month, the closing balance of ITC will be, let us assume that 40,000. What is the wrongly availed ITC? 50. Now, what is the closing balance with respect to April month? 40. In that case, the 10,000, that if because 40,000 means in the wrongly availed ITC of 50, you utilize the 10,000. That's why on the 10,000, you are liable to pay the interest with respect to April month. Let us assume that in the May month, the closing balance of ITC will be, let's say, some 10,000. In that case, you are liable to pay the interest on 40,000 now. But already you are paying interest on 20,000 from April month itself. Therefore, on the balance 20, from May onwards, you will pay the interest. This is the way how the interest will be computed on wrong utilization of ITC. That is the point you need to remember. Okay, ma'am? These are the important points with respect to payment of tax. Now we need to proceed to returns chapter. So the next chapter will be returns chapter, ma'am. So with respect to returns, the important areas you need to remember is, this is the list of the returns chapter. Okay, ma'am, the next topic will be returns. With respect to returns, the important area will be, what are the returns that are needed to be filed by the regular taxpayers? There are 3 returns that are required to be filed by these normal taxable persons, GSTR1 and GSTR3B. On a monthly basis. GSTR1 is a monthly statement of outward supplies. The due date of this GSTR1 will be next month 11th. But if at all you are following QRMP scheme, that is quarterly return monthly payment scheme, in those cases quarter ending next month 13th will be the due date. And GSTR3B is the monthly return. Every registered person is required to file this GSTR3B and the due date will be next month 20th. If at all you are following this QRMP scheme, that is quarterly return monthly payment scheme, in those cases definitely the due date of this GSTR3B will be 22nd or 24th of the subsequent month. And GSTR9. So what does this GSTR9 means? Annual return. So who is required to file this annual return? The registered person other than ISD, tax deductor, tax collector, CTP and NRDP. These people are required to file GSTR9 and the due date will be next financial year December 31st. That means, let's say with respect to 23-24 financial year, the due date will be December 31st, 2024. So the normal taxable person is required to file GSTR1 and GSTR3B on a monthly basis and annum basis GSTR9 is needed to be filed. Next one are the returns and the forms for composition dealer. Generally, composition dealer on a quarterly basis you need to pay the tax. For that sake you need to file CMP 08. So with respect to CMP 08, what is the position? What is the due date of the CMP 08? Quarter ending next month 18th. For example, with respect to first quarter, the due date will be July 18th. With respect to second quarter, the due date will be October 18th. Third quarter, it is January 18th. And fourth quarter, it will be April 18th. Okay. And this is quarterly needed to be filed. And its summary data will be filed in GSTR4, which is the return for a financial year. And this GSTR4 due date will be next financial year, April 30th. Okay. And along with that, annual return is also required to be filed, that is GSTR 9A, and the due date will be, as usual, just like GSTR 9, December 31st of next financial year. So other returns will be GSTR 5, which is a monthly return that is required to be filed by this registered person, that is registered NRDP. What is meant by this NRDP, ma'am? Non-resident taxable person. Okay. And what is the due date of this GSTR 5? next month, that means 13th day of the succeeding the tax period, or within 7 days after the expiry of registration, whichever is earlier. Let's say, for example, on April 1st, with 15 days validity, RC was issued to that particular person. In that case, what is the due date of this GSTR file? What is the due date of this GSTR file? Next month 13th, that is with respect to May 13th, or the day when RC was expired, from that particular date 7 days, that is April 22nd, whichever is earlier. April 22nd will be the due date of filing this GSTR file. So next month 13th, or the date when RC was expired, from that particular date 7 days, whichever is earlier, that is the last date for filing this GSTR file. So the next one will be GSTR 10. What does this GSTR 10 deals with? Final return. Who is required to file this final return? The taxable person whose registration has been surrendered or cancelled. Simply whose RC is cancelled or surrendered, those people are required to file GSTR 10. And what is the due date of filing this GSTR 10? Within 3 months from the date of cancellation or the date of order of cancellation, whichever is latter date. Date of cancellation or date of order of cancellation, whichever is latter date. From that particular date, GSTR 10 is required to be filed. Okay. The next one is some other forms. PMD09 is a challan that will be used to transfer the balance between major and minor heads. And PMD06 is used in QRMP scheme for the payment of taxes, which is going to be 25th of the succeeding month. And 2A and 2B, generally GSTR 2A is a dynamic document and GSTR 2B is a static document. GSTR 2A, that means generally it will reflect the purchases, that means inward supplies. It is a dynamic document. That means whenever the supplier updates his GSTR 1, the data will be automatically updated in GSTR 2A on a real-time basis. But GSTR 2B is a static document. It will be updated only once in a month on 14th of next month. That is the point you need to remember. Okay. So that's why GSTR 2A is a dynamic document and GSTR 2B is a static document. Next is actually GSTR 1. Already we know the due date of GSTR 1 will be next month 11th. Who is required to file this GSTR 1 is another question. Every person registered under our GST including the CTP is required to file this GSTR 1. And who are the people that can be excluded from that? ISD, NRDP, composition taxpayer, TDS deductors, TCS collectors, OIDR service providers. These people are not required to file GSTR 1. Technically, they are having some special returns. ISD, GSTR 6, NRDP, GSTR 5, composition taxpayer, GSTR 4, TDS deductor, GSTR 7, TCS collector, GSTR 8, supplier of OIDR services, GSTR 5A, like that. The details can be there. Those are having the special details technically. That's why these people are not required to file GSTR 1. Okay. The next point is, sir, in which way the details are going to be uploaded? That means separate invoice-wise details are needed to be uploaded, or a consolidated data can be uploaded is the question here. We need to see whether it is a B2B supply or a B2C supply. If at all it is a B2B supply, means recipient is a registered person, then whether it is an intrastate supply or an interstate supply, in both cases, invoice-wise details are needed to be uploaded. If at all it is a B2C supply, then we need to check whether it is intrastate supply or interstate supply. If at all it is the intrastate supply, consolidated details can be uploaded. If at all it is the interstate supply, we need to check the value. Value less than or equal to 2.5 lakhs, consolidated details can be uploaded. Value is more than 2.5 lakhs, separate invoice-wise details are needed to be uploaded. Okay. And the point is here, sir, here, invoice details are sufficient or scanned copy of the invoices are needed to be uploaded. There is no need to upload the scanned copies, ma. Uploading the invoice details is sufficient. Sir, in a particular month, we did not make any outward supplies, but still, are we required to file GSTR1? Yes. Even no supplies has affected in that particular month, still the return is needed to be filed. That particular return is known as nil return. Okay. This nil return can be filed through SMS from your registered mobile number. But the limitation is here. Without filing the GSTR1 and 3B of the previous month, you cannot file the current month GSTR1 month. So in order to file the current month or quarter GSTR1, it is possible only when the GSTR1 and 3B of the previous month or quarter has been filed. Okay. The next point is, sir, is it possible to revise the return of GSTR1? That means straight away the question can be put like this, whether GSTR1 can be revised. There is no concept of revision of return in our GST. There is only a possibility for rectification. Your income tax, a revised return can be filed. But in our GST, there is no concept of such return, a revision of return. Only rectification is possible by using amendment tables. Sir, what is the maximum time period? Here there is an amendment. We will discuss this later on. Lastly, last 15 to 20 minutes, I will discuss the amendments in this marathon session itself. There you can see this point. There is an amendment in this. So what is the maximum time limit to rectify the mistakes? Okay. And sir, is it required to file GSTR1 in the month of RC cancellation? Let's say, for example, on March 20th, your RC was cancelled. Then with respect to March month, is it required to file any GSTR1? Yes, for the active period, definitely you are required to file this GSTR1. That means from March 1st to March 19th, for that active period, definitely you are required to file this, what we can say, GSTR1. And another one is, sir, this month GSTR1 can be filed in this month only. Let's say with respect to March month, is it possible to file the GSTR1 on March 31st? Answer is no. You cannot file the GSTR1 before the end of current tax period, but there are two exceptions to that. CTP after closure of his business, and with respect to normal taxable person when RC is cancelled. In these two cases, definitely what is the thing? The GSTR1 can be filed in this month only. Sorry, in this month itself. So this is all about GSTR1. Okay, ma'am. Now, after the completion of the GSTR1, the next topic we need to see is GSTR3B. So what is the data that will be there in GSTR3B, ma'am? The data that will be there in GSTR3B is what are the total outward supplies in this month, and on that what is the output tax payable, what are the total inward supplies, on that what is the total ITC, that is there, how much amount we need to pay in cash. All these details will be there in GSTR3B. Already we know that the due date will be next month 20th. Okay. And sir, even no supplies are made, still GSTR3B is needed to be filed. Yes, a nil return is needed to be filed. And a nil GSTR3B can file through SMS, yes, but the condition is outward supplies as well as inward supplies. Outward supplies as well as inward supplies. Outward supplies as well as inward supplies. Both shall be zero in order to file the nil GSTR3B through SMS. Our next point is, what are the due dates of payment of tax? If at all you are a composition taxpayer, quarter ending next month, 18th, that means what is the position, ma? With respect to first quarter, what is the due date? Next month, that is July 18th, second quarter, October 18th, third quarter, January 18th, fourth quarter, April 18th. Okay, next one is normal taxable person who is paying the GST on a monthly basis. The due date will be next month 20th. Let's say, for example, with respect to March month, the due date will be April 20th. Okay. Next one, person opting for QRMP scheme. Person opting for QRMP scheme, first 2 months, next month 25th, whereas with respect to the last month, succeeding month 20th. Let's say with respect to first quarter, April, May, June. With respect to April month, May 25th. With respect to May, June 25th. With respect to June, July 20th. So these are the due dates for payment of tax under QRMP. And if at all you are a CDP or NRDP, you need to make the advance payment of tax. So then only you will get the RC now. That's why with respect to CDP or NRDP, advance tax, no due date was prescribed. Our next one is delay in late fee. With respect to delay in payment of tax, delay in filing the returns. What is the late fee we need to pay that? First one is nil returns. If at all it is a nil return, nil GSTR1 or nil GSTR3B, then the late fee will be per day 20 rupees subject to a maximum of 500. Per day 20 rupees subject to a maximum of 500. If at all it is a normal return, then per day is 50 rupees. It depends upon your previous financial year turnover. If in the previous financial year your turnover is up to 1.5 crore, then per day 50 subject to a maximum of 2000 rupees. If it is in the preceding financial year turnover is more than 1.5 crore but less than 5 crores, in that case per day 50 rupees subject to a maximum of 5000 rupees. And if it is in the preceding financial year your turnover is more than 5 crores, per day 50 subject to a maximum of 10,000 rupees. Okay. And if at all there is a delay in filing the GSTR4, if at all it is a nil return, per day 20 rupees subject to a maximum of 500. And if at all it is a normal return, per day 50 rupees subject to a maximum of 2000. In that CGST, SGST are already included. And with respect to GSTR7 per day, actually, okay, we can see those things in TDS TCS chapter. Revision of returns. There is no concept of revision of returns in our GST. Only the thing is rectification is possible by using amendment tables. And I think we know what is meant by the word final returns. When RC is cancelled, the thing that is going to be filed is final return. The next one is QRMP scheme. So with respect to QRMP scheme, who is the person that is eligible? The eligible person will be in the preceding financial year, if your aggregate turnover is less than or equal to 5 crores, in the current year you are eligible for QRMP. In the current year up to which turnover? In the current year up to which turnover, these composition rates are applicable up to 5 crores. And what is the full form of QRMP? Quarterly return monthly payment scheme. Even though here the tax is paid on monthly basis, the returns are going to be filed on a quarterly basis. With respect to GSTR1, quarter ending next month 13th. Let's say with respect to first quarter, July 13th, second quarter, October 13th, third quarter, it will be January 13th, and fourth quarter, it will be April 13th. Okay. So with respect to GSTR1, quarter ending next month 13th. And whereas with respect to GSTR3B, quarter ending next month 22nd or 24th, depending upon the state. And IFF invoice furnishing facility optional, that is first 2 months of the quarter. You can file the invoices up to 13th of the succeeding month. but there is a value cap of 50 lakhs each month. What is this point, ma? That means under QRMP scheme, the GSTR1 is going to be filed on a quarterly basis. Therefore, there is a delay in getting the IDC by the recipient. In order to overcome this particular practical difficulty, invoice furnishing facility was created. By using invoice furnishing facility, every month you can upload the invoices just like you will upload in GSTR1. Thereby, the recipient will get the IDC without any delay. But there is a value cap regarding that. The value cap is 50 lakhs per month, and with respect to B2B supplies only, this invoice furnishing facility is available. Next one, with respect to payment of tax. Technically, it is of two types. One is fixed sum method and second one is self-assessment method. Self-assessment method means how much tax we need to pay. We will calculate ourselves and will pay the GST. That is the normal procedure. And second one is fixed sum method or a notional value method technically. If you pay the tax previously on a quarterly basis, how much tax you paid in cash in the previous quarter, in that 35% is needed to be paid on a monthly basis for the first 2 months. If at all you paid the tax previously on monthly basis, how much amount you paid in cash, 100% of that cash is needed to be paid on a monthly basis for the first 2 months. With respect to third month, actual numbers will be there. Okay. And last but not the least in this particular chapter, the maximum late fee payable for the delayed filing of annual return. With respect to annual return, how much late fee we need to pay, it will depend upon previous financial year turnover. If in the previous financial year turnover, it is less than or equal to 5 crores, then per day 50 rupees or 0.04% of turnover, whichever is lower, will be the late fee. If at all your previous financial year aggregate turnover is 5 crores, more than 5 crores, but less than or equal to 20 crores, per day 100 rupees or 0.04% of turnover, whichever is lower. And if your aggregate turnover is more than 20, per day 200 or 0.50% of turnover, whichever is lower. These are the amounts you need to remember. Okay. So these are the most important points with respect to returns chapter, ma. So the next topic we need to see is TDS and TCS. So with respect to TDS and TCS, TDS means tax deducted at source and TCS means tax collected at source. Regarding TDS and TCS, the applicable sections will be with respect to TDS section 15 and with respect to TCS section 51 is with respect to TDS and with respect to TCS section 52 is applicable. First we will see TDS. So with respect to TDS, when it is applicable, when the supplies are made by the supplier to the notified recipient, then TDS is applicable. So the question is here, who is that notified recipient? Whether it may be central government, state government, local authority, or the board where more than or equal to 51% of the voting power is held by the government, society established by the government, PSUs, public sector undertakings. Okay, these people are the recipients. Then only the concept of TDS is applicable, simply government and government related persons. Okay. Sir, on which value TDS is going to be completed? On what it should be computed? On the value of supply, not on the invoice value. Invoice value means inclusive of GST, but whereas TDS is to be computed on the taxable value but not on the invoice value. Sir, at what rate we are required to deduct the TDS? If at all it is interstate 2% and intrastate 1% CGST and 1% SGST is needed to be deducted. Okay. Sir, what is the due date of payment of TDS to the government? Next month, 10th month. within 10 days from the end of the month means next month on or before 10th, we need to pay the TDS to the government. Sir, is there any threshold for this non-applicability of TDS? Yes. The contract value is less than or equal to 2.5 lakhs, then TDS is not applicable. If the contract value is more than 2.5 lakhs, then TDS is applicable. Okay. Next one is when these provisions are not applicable, TDS provisions when they are not applicable, if the supplier is unregistered. If the supplier is unregistered, there is no need to pay GST at all. That's why TDS provisions will not be applicable. In the same way, if the location of the supplier and place of supply in the same state, but the tax deductor, that is location of recipient, is there in some other state. In that case, what is the position mark? If the supplier is unregistered, then no TDS is applicable. LOS, POS in one state, but whereas location of recipient in some other state. In those cases also, TDS provisions will not be applicable. Detailed discussion will be there later on. Next one, whether any return is required to be filed with the government? Yes, GSTR 7 by the month, next month 10th. And a TDS certificate is to be issued within GST, the form number is GSTR 7A, within 5 days it is needed to be issued. So this is the basics with respect to TDS. So when TDS is applicable technically based on this, if the contract value is more than 2.5 lakhs and the recipient is a notified person, simply the government related persons, then the concept of TDS is applicable and TDS is to be deducted on the taxable value at the rate of 2%. The next point is, sir, when, so this TDS deductor is required to deduct the TDS when entered in the books of accounts or credited in the bank account, whichever is earlier. On or before that particular date, TDS is going to be deducted. And this TDS deductor is required to take compulsory registration as per section 24. Okay. And definitely whatever the TDS that was deducted, it must be paid to the government on or before next month, 10th. And once this TDS deductor, technically the recipient, pays the TDS to the government and files GSTR 7, then the amount will be reflected in the electronic cash ledger of the supplier, that is the deductee, upon the validation. Okay. This manner of account of TDS by the supplier, any amount shown as TDS will be reflected in the electronic cash ledger of the supplier. This amount can be utilized to pay tax, interest, penalty, late fee and any other amounts. Okay. See this. With respect to TDS here, supplier, LOS, POS and recipient, all three in the same state. Then it is intrastate supply. Therefore, TDS is going to be deducted will be CGST plus SGST. And LOS, POS are there in different states and it is the interstate supply. In that case, TDS, IGST is going to be deducted. But see the third one. LOS, POS is there in one state, but whereas location of recipient is there in some other state. In that case, it is intrastate supply, no TDS. Let's take the example. LOS, POS are there in AP, but whereas location of recipient is there in Telangana. What is the tax that is needed to be deducted? Being intrastate supply, CGST plus AP state GST is needed to be deducted. But whereas recipient is there in Telangana, he can deduct Telangana state GST, but not AP state GST, practically which are unable to set off with each other. That's why in those cases, the concept of TDS provisions will not be applicable. Okay. So LOS, POS in one state and recipient is there in some other state. In those cases, the concept of TDS will not be applicable. Next one. Sir, what are the consequences of non-compiling with the TDS provisions? If TDS is not deducted, then interest to be paid at the rate of 18% per annum along with the TDS amount. If the amount is not paid, the amount will be recovered as per section 73 or 74. TDS deducted but not paid to the government within the due date. In the first case, TDS was not deducted at all. In the second case, TDS was deducted but was not paid to the government within the due date of next month 10th. In those cases also, interest is needed to be paid at the rate of 18% per annum. Late fee. Late filing of TDS return. The due date of filing this TDS return is next month 10th. If at all it was not filed, in that case per day 100 rupees subject to a maximum of 5,000 is the late fee. So this is the concept you should remember with respect to TDS. Now we need to see TCS. So what is the section that is applicable to TCS? Section 52 is the section that is applicable for TCS. And when TCS is applicable, supplies are made by the supplier to the recipient through ECO and the payment is processed through ECO, then the concept of section 52 will be applicable. TCS. Who is liable to deduct the TCS? ECO. Other than the ECO notified under 9.5, remaining all other ECOs through whom actual payment is going to be processed, all those ECOs are required to deduct the TCS. Okay. On which value this TCS is going to be computed. So, net values of supply, how to compute this net value? Total sales exclusive of GST minus sales returns. What is the amount we will get? It is known as net value. On the net value, definitely we are liable to pay the GST. On the net value, we are liable to pay the TCS. Next one. What is the rate of TCS that is applicable? If at all it is interstate 1%, intrastate 0.5% CGST and 0.5% SGST will be applicable. Okay. Is there any threshold? So what is the due date of this TCS? For this also next month 10th. Is there any threshold limit for TCS? No. There is a threshold limit with respect to TDS of 2.5 lakhs, but there is no threshold limit with respect to TCS. Next one. When these provisions are not applicable. When the TCS provisions are not applicable, if the supplier is unregistered, there is no need to pay any GST. Therefore, TCS is not applicable. If the payment is not collected by the ECO from the recipient, that's why I told you. When the payment is processed through ECO, then only the concept of section 52 will come into scene. If the payment was directly made by the recipient to the seller, then 52 will not be applicable. And ECO is liable to pay the GST under section 9.5. Here, now what are the cases that are covered under 9.5? So what are the cases that are covered under 9.5? What are the cases that are covered under 9.5? Transportation of passenger, hotel accommodation, housekeeping, food aggregators. In all these cases, where 9.5 is applicable, generally ECO is liable to pay 100% of the tax. When ECO is liable to pay 100% of the tax, is there any logic in applying 1% TCS? No. That's why whenever section 9.5 is applicable, TCS provisions will not be applicable. Next question. Whether any return is to be filed by this TCS collector? Yes. What is the return is required to file? That is GSTR 8 by the next month, 10th. So what is the TCS that is collected by the ECO? It will be reflected in supplier account as a in the electronic cash ledger. That amount can be used to pay any amount in relation to GST, that is tax, interest, penalty, for whatever the amount can be used to pay. Okay. The next one is major types of e-commerce. Selling own products through own website like Chroma, Tata product. In that case, TCS provisions will not be applicable. because there is no ECO concept there. ECO is a mediator. When you are selling your own products through your own website, in those cases, TCS provisions will not be applicable. Selling the bought out products through own website under own billing, then also you are the seller himself. Okay, then there is no ECO concept here also technically. That's why in these cases also TCS provisions are not applicable. When TCS is applicable, operator, first one, ECO should not own those goods. Second one, billing will be done directly by the seller to the customer. Consideration is collected by the ECO and then remitted to the supplier. If all these three conditions are satisfied, then TCS provisions are applicable, and ECO in those cases shall deduct the TCS while making the payment to the supplier. So in the last case only, section 52 is applicable. In rest of the two cases, the TCS provisions will not be applicable. In the same way, TDS or TCS is not applicable to the cases which are nil-rated supplies, 100% exempted supplies, non-taxable supplies, where RCM is there. With respect to RCM, recipient is liable to pay 100% of the GST. In those cases also, the TDS provisions will not be applicable. So these are the important points from the TDS and TCS chapter you need to remember. Okay, now we are going to proceed to the accounts and records. So the next topic will be accounts and records. So with respect to accounts and records, so what is this accounts and records? In this particular chapter, we are going to discuss who are the persons that are required to maintain the records, what are the books and records they are required to maintain will be there. Very small topic, which is a pure theory chapter. So the first question is here, who is required to maintain the books of accounts? Every registered person is required to maintain the books of accounts. Where he is required to maintain the books of accounts? At the head office, that is the principal place of business, as well as if it all is having branches, then that additional place of business, books of accounts are needed to be maintained by every registered person. Sir, what are the records and books that are needed to be maintained by every registered person? Every registered person shall maintain true and correct view, not fair view. Every registered person shall keep and maintain at his head office true and correct accounts of production. What are the total inward supplies and outward supplies? What is the closing stock? On the inward supplies, what is the IDC that was availed? On the outward supplies, what is the output tax payable? These are the accounts he should maintain true and correct. And by the rules, they are also required to maintain some records also. What are the records they are required to maintain? What are the records they are required to maintain, ma'am? First one is name, address of a recipient to whom the goods are sold, name, address of the supplier from whom the goods are purchased, any goods imported, exported, those details, any advances received, warehouse locations, RCM applicable or not. These are the details that are needed to be maintained as per the rules. So these are the accounts and records that are needed to be maintained by every registered person. Production, what are the inward supplies, outward supplies? On the inward supplies, what is the ITC that was claimed? On the outward supplies, how much output tax you need to pay? What is the closing stock? And along with that, as per the rules, these records are also needed to be maintained, like to whom the goods are supplied, their names and addresses, from whom the goods are purchased, their names and addresses, import or export of the goods, advances, warehouse keeper services, and RCM related ones. These are the accounts and records you need to remember. Okay. The next one is here. What are the records which are to be maintained only by the supplier other than the supplier opting for composition levy? That means if it all is a composition supplier, he is not required to maintain these records. if it all is not a composition supplier, you need to maintain these records also with respect to the stock. What are the goods that are received during that particular month? What is the opening balance? How much quantity that is received in this month? How much quantity that is supplied or given to production? How much quantity that is lost, destroyed, or written off, or gifted, free samples, and after that, what is the closing stock balance? These details are maintained by the normal person. And in the same way, accounts of details of tax payable. How much is the tax output tax payable, and what is the IDC that was claimed, and for claiming of IDC, what are the documentary evidences like tax invoice, debit notes, and any DCs are there. All these details are needed to be maintained by a normal taxable person, which is not required in the case of composition supplier. Next one is, what are the records that are needed to be maintained by the agent? First point, in order to act as the agent, you must get the authorization from the principal. That's why, whatever the authorizations you received from each principal, whether to supply the goods or to procure the goods on behalf of the principal, those must be maintained. And if at all you are a selling agent, what are the goods you supplied on behalf of the principal? If it all is a recipient, buying agent, what are the goods he received? Okay. And what are the accounts you furnished to each principal? And in the same way, if any tax is paid on behalf of the principal, what are those taxes that are paid? All these records are needed to be maintained by the agent. Okay. So the next point will be records to be maintained by the agent. That means just know what we discussed regarding the records to be maintained by the agent, like authorization from the principal. What are the goods, if at all you are a buying agent, what are the goods you received on behalf of the principal? If at all you are a selling agent, what are the goods you supplied on behalf of the principal? And what are the accounts you submitted to the principal? If the agents paid any tax on behalf of the principal, what are those taxes? Okay, all these things will be maintained by the agent. Next one is, what are the additional records that are to be maintained by the manufacturer and the service provider? In addition to the accounts and records that are required to be maintained by every registered person, a manufacturer needs to maintain monthly production of accounts showing the quantitative details of raw materials, that means inputs or input services, and in the same way goods manufactured including waste and byproducts, the records are to be maintained, and along with that the service provider has to maintain the accounts relating to what are the inputs and input services related quantitative and other details are also need to be maintained by the service provider. And the next thing you need to remember is what are the records that are needed to be maintained by the person who is executing the works contract. So regarding that, on whose behalf you are executing the works contract, and in performance of that particular works contract, from whom you received those goods or services. In the goods or services that are received, how much goods or services that was utilized in the execution of the works contract, and in the same way, details of payment received in respect of, that means how much payment you received, and separate records is to be maintained regarding every works contract. So these are the things you need to remember. And the next thing is how the accounts and records will be maintained. Records can be maintained in electronic form also. And whatever the accounts you prepared, they should be kept at all the places that are mentioned in the registration certificate. No entry to be erased or overwritten without prior authority. And all the books of accounts, if mentioned manually, they must be serially numbered. If at all in department asks for it, they must be produced on demand, and they should preserve the books of accounts as per the statutory time limit. Okay. What is the time limit? What is the period of retention of accounts? 72 months from the due date of furnishing the annual return for the year pertaining to each accounts and such accounts and records. Simply let us assume that with respect to 23-24, what is the due date of annual return? December 31st, 2024. From this particular date, within 72 months, what is required, ma'am? Within 72 months, up to 72 months, the records are needed to be maintained. Okay. And in the same way, if the matter is in appeal, revisional process or any other proceedings with appellant authority or revisional authority or appellant tribunal or court or any investigation is going on, in those cases, the period of retention of accounts will be from the date of final disposal of appeal, 1 year, or 72 months from the due date of annual return, whichever is latter date. Up to that particular period of time, the books of accounts are needed to be maintained. If those things are not followed, that means failure to maintain the accounts as per the above procedure, then whatever the unaccountable books or unaccountable goods that are found, unaccounted services that are there, on them GST is payable, and proper officer shall determine the tax payable on those unaccounted goods or services, and the same will be recovered from the supplier by following the procedure that is prescribed under 73 or 74. Okay. So this is with respect to accounts and records, important points you should remember. And the last one is place of supply. So with respect to place of supply, what is meant by the word place of supply? Why one should know the place of supply? Because if at all it is a interstate supply, IGST will be paid. If at all it is a intrastate supply, CGST plus SGST will be paid. So in order to treat it as an interstate supply, LOS, POS should be there in different states. If at all LOS, POS is there in same state, it is an intrastate supply and CGST and SGST will be paid. So in order to know the POS, definitely the POS rules are required to be framed. Generally with respect to goods and services, separate place of supply rules are there because goods are tangible ones and services are intangible ones. That's why separate rules are required. In that, Section 10 deals with the domestic supply of the goods. Section 11 deals with international supply of the goods. Section 12 deals with domestic supply of services. Section 13 deals with international supply of services. But in our syllabus, only 10 and 12 are there, which are relevant for domestic supplies. So now we need to start with Section 10. Place of supply of the goods other than supply of the goods imported into or exported from India, Section 10. So with respect to Section 10, first point is where supply involves physical movement of the goods. If the supply involves physical movement of the goods, what is the place of supply? The place of supply will be the place where the movement terminates. That means what is the destination? That place will be the POS. The place where the transit ends, that place will be the POS. That is the first one. And second one is where supply does not involve movement of the goods. When there is no physical movement of the goods, in that case, what is the POS? Location of the goods when they are delivered to the recipient. Location of the goods when they are delivered to the recipient. Okay. Third one is when the goods are required any assembly or installation, the place of installation will be the POS. Okay, we'll take the example of first one. When the goods involve physical movement, let's say door delivery. In that case, what is the POS? Where the transit ends. What is the destination? That place will be the POS. And second one, when the goods does not involve physical movement, let's say along with building, a generator is sold. In that case, where the generator is located, that place will be the POS. Third one, when the goods required any assembly or installation, take the example of AC. Where AC is installed, that place will be the POS. Next one. Goods are supplied on the board of a conveyance like the vessel, aircraft, train or motor vehicle. In those cases, when the goods are loaded onto that particular vehicle, the place where the goods are loaded onto that particular vehicle, the place will be the POS. Location at which such goods are taken on board, the place will be the POS. Okay. Next one is place of supply of services, section 12 deals with where LOS and POS are within India. In that, this is 12.2 technically, but serial numbers were given. Here the numbers that are given are serial numbers, not the section numbers. Okay. So the first one is general provision. That means where it is not possible to apply any other subsection of this section 12. In those cases, this first point will come into scene, which is the general provision. As per general provision, the place of supply will be, if at all it is a B2B supply, then that registered place of recipient will be the place of supply. If at all it is a B2C supply, then address on record is available. That address will be the POS. If address on record is not available, location of supplier will be the POS. That is a general provision or residuary one. If at all it is a B2B supply, location of that recipient will be the POS. And if at all it is a B2C supply, then address on record is available. Address on record is available. Then that address will be the POS. If address on record is not available, the location of supplier will be the POS. Next point is services provided in relation to an immovable property. In that case, what is the position, ma? 12.3 actually deals with this particular thing. Any services which are directly in relation to immovable property, like architect services, interior decorator services, surveyors, engineers. Okay, with respect to them, 12.3 is applicable. In the same way, hotel accommodation services, for that also 12.3. And with respect to organizing any functions, that means if the accommodation was given in an immovable property for organizing any marriage, official, social, cultural, religious, business functions, in those cases also, what is the section that will be applicable, ma? 12.3 is applicable. So with respect to 12.3, what is the place of supply? Look, place of supply will be the place where that immovable property was situated. The location of immovable property will be the POS. Sir, if the immovable property location is there in outside India, in that case, what is the position? Location of recipient will be the place of supply. If location of immovable property was situated in more than one state, in that case, on a proportionate basis, we shall take into consideration. Immovable property was located within India, then immovable property location will be the POS. If immovable property location outside India, then location of recipient will be the POS. If the immovable property is located in more than one state, we should take POS on a proportionate basis. Okay. 12.4. With respect to 12.4, it is exhaustive list. With respect to these services, restaurant and catering, personal grooming, fitness, beauty treatment, healthcare services, cosmetic or plastic surgery. This is exhaustive list, which are in relation to performance-based services. In those cases, what is the POS? Location of where that service is actually performed, that place will be the POS. Where the service is actually performed, that place will be the POS. Okay. Next one is with respect to training and performance appraisal services. If at all it is a B2B supply, then that registered place of recipient will be the POS. If at all it is a B2C supply, where the service is actually performed, that place will be the POS. In relation to 12.5, training and performance appraisal, if at all it is a B2B supply, registered place of recipient will be the POS. If at all it is a B2C supply, then where the service is actually performed, that place will be the POS. Okay. And with respect to Admission to event 12 seats. Then with respect to 12 seats, admission to event or amusement park, the place where the event was held, the place where that park was situated, that place will be the POS. And 12.7, organizing the event, nothing but event management services. With respect to them, organization of any event, whether it may be cultural, artistic, sport, scientific, educational, entertainment, in all these cases, what is the position, ma? Definitely, it comes under event management services. So with respect to them, if at all it is a B2B supply, event management services are provided, is a B2B supply, business to business, then registered place of that particular recipient will be the place of supply. If at all if at all it is a B2C supply, then if the event is held within India, the place where the event is held, that place will be the POS. If the event was held outside India, then the location of recipient will be the POS. B2B supply, registered place. B2C, we need to check where the event is held. If the event is held within India, then where the event is held, that place will be the POS. If the event is held outside India, location of recipient will be the POS. So this is with respect to event management services. The next one is transportation of the goods, including courier or mail services. Regarding them, what is the place of supply? If at all it is provided to B2B, that means business to business, then registered place of that recipient will be the POS. If at all it is a B2C supply, if at all it is a B2C supply, in those cases, what is the position, ma? With respect to B2C, what is the POS? If at all it is a B2C supply, what is the position, ma? Then the place where the goods are handed over for transportation, that place will be the POS. If at all the transportation of the goods was to outside India, then the destination will be the POS. Technically, it will be treated as export. So this is with respect to goods transportation, B2B, registered place, B2C, where the goods are handed over for courier, and if the transportation is outside India, then the destination will be the POS. And next one is passenger transportation service. So with respect to passenger transportation service, B2B, registered place will be the POS, and if at all it is a B2C, if at all it is a B2C, in that case, what is the POS, ma? B2B, registered place will be the POS. B2C, the continuous journey starting point will be the POS. Sometimes the place of boarding is not known at the time of issue, like bus pass. But with respect to bus pass, the place of boarding is not known. In those cases, address is available, address on records is available, that address will be the POS. If address on record is not available, in those cases, what is the position, ma? Location of supplier will be the POS. Next one is, if the services are supplied on the board of the conveyance, in those cases, that continuous journey starting point will be the POS. Okay. Next point is, with respect to banks and other financial services, including stockbroking services, the POS will be address on record. If address on record is available, that place will be the POS. If address on record is not available, location of supplier will be the POS. With respect to insurance services, B2B supply, registered place will be the POS. B2C supply, then location of recipient will be the POS. If you observe, in 99% of the cases, if the service is provided to B2B, then that registered place of the recipient will be the POS. And if advertisement is provided to government in one state, that state will be the POS. In more than one state, we should take it on a proportionate basis. And with respect to place of supply of telecommunication services, if these services are provided through a fixed line, then the place where this particular fixed instrument is installed, that place will be the POS. If at all it is a postpaid mobile, take the example. If billing address is available, that place will be the POS. If billing address is not available, in those cases, what is the position? Supplier location will be the POS. Prepaid. With respect to prepaid, where the prepaid vouchers are sold, that place will be the POS. Okay. And if the prepaid vouchers are sold through internet, then billing address. If billing address is not available, location of supplier will be the POS. These are the important points with respect to place of supply you should remember. Now we are going to discuss about our GST amendments which are applicable for May 2024 attempt. Generally, this particular amendment video is useful for the students who studied the amendments up to April 30th, 2023. Okay, because if you wrote in November 2023, then you may have studied the amendments up to April 30th, 2023. But now you are going to write May 2024 attempt now. So that's fine. From the date 1st May 2023 to 31st 2023, whatever amendments that came into scene, all those amendments are applicable for May 2024 attempt also. So that's why whatever the amendments that happened between 1st May 2023 up to 31st October 2023 are incorporated in this particular material. And along with that, previous attempt amendments are also included as a just precautionary measure. If at all those things are not asked in the previous exam, there is every possibility that it can be asked in the current exam now. So in order to make you familiar with those amendments, exclusively to keep focus on those amendments are also incorporated. So without any delay, now we are going to enter into this May 2024 attempt related amendments. So the first amendment is there in our supply chapter, that means supply under GST. Okay, so before going to discuss about this particular point, I just want to remind you what is the old point and what is the new one. Okay, fine. Now we are going to see regarding what is the point that is there in supply. Previously, what is the existing provision is, if you are able to recollect section 7, in that 7, there will be 3 subsections, just like 7.1, 7.1a and 7.2. So in this 7.1, there will be 3 clauses. Already you know 7.1a, 7.1b, 7.1c, like that. And 7.1e simply deals with the classification. And 7 subsection 2 deals with out of scope supply. Out of scope supply. Okay. In this 7 subsection 2, if at all you are able to recollect, actionable claims are actually covered. What is meant by the word actionable claim generally? Simply, there will be a very lengthy discussion on this actionable claim, but in brief, what we can say is the claim on which we can take legal action even though there is no security. Even though it is an unsecured debt, on that, if at all we are able to take a legal action, it can be termed as actionable claim. Okay. So now the question is here, is it actionable claim is a good? Yes, every actionable claim is a good under our CGST Act. Already we know that point. But if at all you observe 7 subsection 2 read with schedule 3, there will be 6 points in that. In that, the 6th point is actionable claims other than betting, gambling and lotteries are neither the supply of the goods nor the supply of service. If you are able to recollect it, this is the present point. Before amendment, this was the situation. As per 7, subsection 2, read with schedule 3, 6th point says that actionable claims other than betting, gambling and lotteries, we are not liable to pay any GST. Okay. Actionable claims other than betting, gambling and lotteries, we are not liable to pay any GST. This is a present provision. Okay. Now, in which way it was amended, we need to see that. Okay. So, now you can observe here. What is the amendment, ma? Now, what is the amended provision is here? The taxability of three other actionable claims, namely online money gaming, casinos and horse racing is charged at 28% on these activities, and the valuation would be prescribed under valuation rules. That is okay. So what is the previous entry that was there in 7 subsection 2? Actionable claims other than betting, gambling and lotteries, we are not liable to pay any GST. But whereas with respect to now, the amendment entry is actionable claims other than specified actionable claims. So now the word specified actionable claim was created. Now the word specified actionable claim was created. That means the actionable claims other than specified actionable claims, we are not liable to pay any GST. Okay. Now the word simply, they just inserted a new word that is known as specified actionable claims. The question is here, sir, what is meant by this specified actionable claim? Is it defined? Yes, it is also defined. You can observe. So this is. So these are the specified actionable claims. In that, if you observe, betting, gambling, lotteries, already there previously. Now the three things that was newly added is here, casinos, horse racing, and third one, online money gaming. So these are the new entries in this particular thing, actionable claims here. And all the 6 are named as specified actionable claims. So, what is present kept as out of scope of supply as per 7 subsection 2, ma? Except these specified actionable claims. Rest of the actionable claims are neither the supply of the goods nor the supply of service. That is the point we need to remember. Okay. Now the question is, yes, already you know what is meant by these casinos and horse races. The only thing I think this can be asked in the present exam is online gaming. Sir, what is meant by this online gaming generally? What is meant by this online gaming, ma'am? Simply, there is a difference between, online, I just used the word online gaming. No, online gaming is not included here. What is the thing that was included here, ma? Online money gaming. Sir, what is the difference between online gaming and online money gaming? Online gaming, online money gaming. So what is meant by this online gaming? So online gaming means if any game that is capable of being played on the internet, offered any game, and it includes online money gaming also. Oh my God. It includes online money gaming also. Say nowadays so many number of people are playing so many number of games. Those things are known as online games. The question is here, sir, online games are covered under specified actionable claims? Answer is no. The thing that is covered under specified actionable claims is only online money gaming. Sir, what is meant by this online money gaming? Online money gaming means what we can say is it is an online game. It is an online game. First condition. it should be online game. That means only through internet you should be able to play that. Second one, you should deposit money or money's worth, or it can be a virtual asset. It can be a virtual asset. That means you can deposit either money or money's worth, or it can be a virtual asset also. And the third one is there should be expectation of winning money or money's worth. Okay, that means there should be a expectation to win. What they should expectation to win? Money or money's worth. Okay. And the fourth condition, the most important one is whether its outcome depends on skill or luck or both. Okay, ma'am. These are the 4 points that it satisfies. Generally, it can be treated as online money game. First one, it should be an online game. What is meant by the word online game? Online game means the game which is offered on the internet, okay, or an electronic network. And it includes, already I told you that, OMG, online money gaming. So the question is here, sir, what is meant by this OMG here? OMG, online money gaming means, first point, it should be online game. Second one, in that, generally the players will deposit money or money's worth. That means sometimes you can play directly with the money, or some apps will say that you need to deposit the money into their wallet, thereby that using the wallet balance, you can play the game. That one comes under money's worth. And virtual assets, virtual digital asset actually it is. Not virtual asset, exact word is virtual digital asset. Virtual digital asset means what we can say, virtual digital asset means like cryptos. Nowadays, cryptos are accepted everywhere. So in order to cover the cryptos, generally the word virtual digital assets were used. So generally you can deposit the money in crypto. The prize money can also be in the form of crypto. That's why in order to cover those cryptos like assets, the word virtual digital asset was used. Okay, that is the second condition. Third one, definitely why you are playing the game. We are playing the game in the expectation of winning money or money's worth. I told you like it can be in crypto or it can be in some other form. Okay, there must be some expectation to win the money. And fourth most important thing is the outcome. Whether it depends upon the performance, which is based on the skill, or it may be purely a luck, or it may be a both of them. Why this word skill or luck was used there, the point is very simple. If the point is simply, generally, if the matter, say for example, let's say, take the example of Dream 11. Generally, what the Dream 11 app people will say, app management will say, sir, here, if at all it is a pure luck, it will be kept outside. Now, what the people will say, no, sir, it is not a pure activity of luck. In order to make the team, people actually, they need to use your brain. They need to use their dimag. Okay. Then only they are able to set the team. Thereby they will win the prize. So here, luck factor is there. But here the outcome is not 100% dependent on the luck. It can be, it will be dependent on the skill of the person also. Then what the Supreme Court will say then, if the matter go to the court, okay, then it can't be a pure game of luck, it can't be an online game. So then the main purpose of this government amendment will get defeated. That's why government don't want to happen like that. That's why what they come up with a solution here. The outcome is depends upon the skill or luck or both. That means because of your skill you got that money or because of luck you got your money, it does not matter to me. You are definitely liable to pay the GST because it will comes under the definition of online money gaming. Okay, that is the first one. So in order to treat any activity as the online money gaming, first one, it should be online game. Second one, the deposit must be pay or deposit money or money's worth. And third condition, there must be expectation to win money or money's worth. Next one, its outcome will depend upon either skill or luck or both. If all these points are satisfied, it is an online money gaming activity. So, this online money gaming activity is covered under specified actionable claims. Therefore, you are liable to pay the GST. That is the first amendment you need to remember. Okay. So, this is the first one, ma. So, based on the new amendment, what is the position, ma? As 7 subsection 2 read with schedule 3 is saying that actionable claims other than specified actionable claims are not liable to pay any GST. So what is meant by the word is specified actionable claims? 6 points are covered. Betting, casinos, gambling, horse races, lotteries, online money gaming. Now these 6 are named as specified actionable claims. On them, definitely you are liable to pay the GST. On them, you are liable to pay GST. That is the point you need to remember. Okay. So the next amendment will be, in this case, supply of food and beverages. Cinema halls taxable as restaurant service or not, like that is the CBIC clarification. So before going to discuss about this particular clarification, we just need to see the background of this particular need of this circular. Generally, if at all you are able to recollect your supply chapter, in that section 8 will be there. As per section 8, 2 types of supplies will be there in that. Composite supply or mixed supply. If it is a natural bundle, it will be called as a composite supply. In that bundle, whatever the supplies that are there. If it is a artificial bundle, in those cases, it will be termed as mixed supply. If it is a composite supply, then what is the rate that is applicable to? Principal rate will be applicable here. If it is a mixed supply, highest rate will be applicable. This is the point already what we know. Okay. And the issue is here. Why I told you this composite supply point is here. The issue for consideration is here. That means the need of this particular circular is here. Many cinema theater operators, apart from movie exhibition, they are also providing the food and refreshments to the customers. That means who comes to see the movie. Let's take the example of PVP or PVR. Generally, if you observe this PVR, PVP balance sheet, then the much revenue will be not from the sale of movie tickets. The more revenue is from sale of the food. Okay, got the point. So that's why there was the issue that what is the rate we need to apply there? Sir, what is the rate here? Is there any 2 different rates? Yes, ma'am. The issue is here. If it all, take the example of movie theater. Movie theater comes under the word, exhibition of movie. It is a supply of service. Depending upon the ticket rate, the GST rate will change from 12 to 18%. Okay. With respect to movie theaters, with respect to this, on the movie ticket depends on ticket rate. It may vary from 12 to 18%. It may vary from 12 to 18% with respect to movie theater. Okay. The question is here, these movie theaters may run these refreshment stalls themselves, or they may give it to a third party. That means it can be outsourced. It can be outsourced. So they own their own food outlets, or they can be outsourced to some third party. They can run in two ways. They can have their, that means PVP, PVR, will have their own food outlets in the premises of movie theaters, or they can be outsourced to some third parties. Let's say in PVP, let's take the example that Creamstone is there, ma. As far as I remembered, near our town, Vijayawada PVP Mall is there. In the PVP Mall, Creamstone ice cream parlor was there. Here, this ice cream parlor belongs to PVP, or that space was actually outsourced to somebody else. That place was outsourced to somebody else. That means they may give it on a contract to a third party like Creamstone. Then those things are known as outsourced. Second one, PVP may also have its own food outlets, just like what happens in near the screen. Okay, I told you the Creamstone is there within the premises of PVP Mall. Okay, but near the screen, movie screen, besides that, some popcorn, Coke, all these things are generally, in majority cases, it is sold by the PVP owned food outlets. So it can be of two ways. They can be run by themselves, or they may be outsourced to some third party. The question is here, whether this particular food supplies are to be treated as a composite supply, which can be bundled with the movie tickets, or this food supplies can be termed as an independent restaurant service. Sir, what is the issue, sir? इतना घबराना क्यों है? तो क्या फर्क पड़ेगा इसमें? Whether it is matched with movie tickets or if at all it is independent activity. The फर्क पड़ेगा इसके टैक्स रेट में. If at all, it is a composite supply and it will be taxable as a part and parcel of movie tickets, that means exhibition of movie. The food is also liable to be taxable at the rate of 18%. But if at all it is independent restaurant service, what is the restaurant service tax rate? It can be 5%. So that is the point. So if at all it becomes a composite supply, then automatically on the food items also equal to 18% tax rate will be there. And if at all it is an independent restaurant, in those cases, definitely what is the position? 5% tax rate will be applicable. Okay. And sometimes the customer, that means not the customer, sometimes these these movie theaters may supply the refreshments as a part and parcel of the movie ticket, combo packs. In those cases, obviously, it is liable to be paid along with movie tickets. So that's why the government needs a circular here. Therefore, a CBAC circular was issued regarding this. So what is the scenario one? Where such food is, that means supply of the food or beverages in a cinema hall is taxable as a restaurant service as long as it is supplied as an independent of cinema exhibition service. That means where such food is supplied independent of movie exhibition. Okay, in those cases, it will be treated as restaurant service only. And what is the tax rate that is applicable? 5%. Okay. But where the sale of such food is bundled with cinema ticket, where the sale of that cinema ticket is bundled with, sale of food is bundled with this cinema ticket, in those cases, clubbed together. And if at all it is a composite supply, The entire supply will attract GST. What is the rate that is applicable to principal supply? Sir, what is the rate that is applicable to principal supply here? Movie tickets. So what is the rate that is applicable to movie tickets will be applicable to this food and restaurant, or sorry, food services also. At that case, the rate of GST will be 12 to 18% depending upon the movie ticket. So what the circular says finally? There are 2 points. One, where food is independent of movie exhibition, it will be treated as restaurant service and taxable at the rate of 5%. If such food is bundled with the movie ticket, in those cases, if at all it qualifies as a composite supply, what is the rate that is applicable to principal supply will be applicable, and rate of GST may be 12 to 18%. This is what this particular circular says. Okay. So the next one is not that much important from the examination point of view. Clarification on the taxability of the shares held in your subsidiary company by holding company. Let's say holding company is having securities or shares in the subsidiary company for the purpose of owning and controlling interest. The question is here whether it amounts to supply of service or not. Answer is no. It is not satisfying the conditions that are prescribed in section 7. Therefore, and it can't be a supply of service. Most importantly, shares and securities are not neither the goods nor the service. Therefore, it is not a supply. There is no need to pay any GST on the shares that is held by the holding company in its subsidiary. Okay. See, securities are neither the goods nor the service. Okay. Purchase of the securities is also neither the goods nor the service. Therefore, the activity cannot be taxed under GST. As simple as that. Generally, this may not be that much important from the examination point of view, but first 2 amendments you need to remember very well. Okay. Now, we are proceeding to chapter number 3, charge of GST. So, with respect to this charge of GST, so now the third point is tax on the services supplied by a director of a company in his personal capacity. That means, what is this a point? Before that, we need to see the background of this particular point. If at all you are able to recollect, services provided by the executive directors shall not be considered as a supply, and whatever the remuneration that is paid to those directors will be taxable under the head salaries, because those things happens in the course or furtherance of his employment. But whatever the remuneration that is paid to the non-executive directors, then we need to check under which section the TDS is going to be deducted. If the TDS is subjected to section 194J, then whatever the remuneration that is paid to these directors, definitely it will be covered under RCM, reverse charge mechanism. Okay. The question is here, whatever the services that are provided by the directors are covered under RCM, or only the activities that are done in the capacity of director are covered under RCM. For that, a circular is needed here. What is the thing I told you, ma? Whatever the activities that are done by the directors is covered under RCM, or only the things that are done by the directors in the capacity of director, those things are only covered here, that are covered under RCM. That was what the circular tried to answer here. Okay. So the CBIC now clarifies that only those services that are done by the director in the capacity of director of that company are covered under RCM. Okay. And any other service that is provided by the director in his private capacity, in his personal capacity, just like the services by way of renting of immovable property by the director to the company. It is not the duty of the director to give the immovable property and rent to the company. No? Those things that are done in his private capacity, or personal capacity. With respect to them, what is the position, ma? It is not taxable under RCM. They are taxable under FCM. That is the point you need to remember. Okay. Let's say, for example, Mr. Ram is a non-executive director. Let us assume that Mr. Raj, we will take it as Mr. Raj is a non-executive director in Raj Limited. Okay. And from that particular company, he received two payments. First payment is 10 lakhs for his directorship in that company. Second one is he received 25 lakhs for renting of immobile property to the company. Now the question is here, how much amount that is taxable under FCM, how much amount that is taxable under RCM, how much amount that is taxable under FCM and under RCM? Here the first point is here, the 10 lakhs he received in the capacity of the director will be covered under RCM, and on this 10 lakhs, who is liable to pay the GST, ma'am? On this 10 lakhs, definitely as per RCM, company is liable to pay the GST. But whereas with respect to this 25 lakhs, it was done in his personal capacity. If at all it was done in his personal capacity, in those cases, what is the position, ma? It is taxable under FCM, but not under RCM. Okay. So, 10 lakhs he received in the capacity of the director, that amount is taxable under RCM, and company is liable to pay the GST. 25 lakhs he received for renting of immobile property to the company. Definitely it was done in his personal capacity. It is taxable under FCM. Let us assume that Mr. Raj is not a non-executive director and is executive director. In that case, what is your answer? If Mr. Raj is a executive director, then this 10 lakhs is not taxable under GST because it is not received in the capacity of the director, he is an employee there. And what about the 25 lakhs, ma? Definitely on the 25 lakhs, he is liable to pay GST under FCM. For this, answer will not change. Okay. And but for the 10 lakhs, if at all is executive director, then it is not treated as a supply as per Schedule 3 and no GST is payable at all on the 10 lakhs. But with respect to the 25 lakhs, on that GST would be payable by Mr. Raj under FCM as per the new circular. Okay. Okay, this is what all this amendment is all about. So, taxability on the services supplied by the director of the company in his personal capacity. Definitely it is taxable under FCM, but not under RCM. Okay. Next one. So, the next point is what are the other points that are there in RCM that with respect to this new point that is always here added is Indian Railways. It's a new thing that was added if you observe. Excluding Indian Railways, say this. And here also, okay, this is covered under FCM. I will explain you later on. These people are generally covered under FCM. Already you know that. And see this, excluding railways. And for that, what is the point here? That is the thing we need to see with respect to this. So this Indian Railways point, ma, you need to club, okay, even though they are given as separate points, see this, where it is covered here, it is covered here, under FCM, Indian Railways is covered here, because these people are covered under FCM. I'm just telling you the overview, later on we will have an in-depth discussion now, and see this one excludes Indian Railways under RCM, that's why it is covered under FCM, and apart from this, in exemptions chapter also, the word Indian Railways was included. Let's see this. Indian Railways was included here. That means this entry is not applicable. That means exemption was withdrawn with respect to Indian Railways, see, excluding. Okay. We need to club these two things, in order to get a better idea. See this, here also, this entry, nothing will not be applicable to Indian Railways. And this 5,000 exemption is not also applicable to Indian Railways. So, this is the point you need to keep focus, So, in this, so many points, merging, actually there was one amendment. So, you need to keep focus on all these areas together. So, that's why I'm telling you the point in detail now. What is the existing provision here? General rule is, services, that means what generally the Indian Railways will do, What the Indian Railways generally will do? What the Indian Railways will do? Generally, they may be involved in transportation of passengers. This is first one. And second one, they may be involved in transportation of goods. Okay. And they may be involved in renting of immovable properties. This is the third one. Or they may be involved in any other services. Okay. These are the four things generally the Indian Railways will do, Indian Railways will provide the services of transportation of passengers. Indian Railways will provide the services of transportation of the goods. And they may be involved in renting of immovable property, or they may be involved in any other service. Okay. The first point is, now what is existing provision with respect to transportation of passenger by Indian Railways? Exempt. And transportation of the goods by rail from one place to another place, exempt or taxable? It depends on, just wait, 2 points here. If at all it is a specified good, it is exempt. And if at all it is a non-specified good, definitely what it will be, taxable. Taxable under FCA. Okay. And if at all it is a renting of immovable property, that means their warehouses or their places can be given on rent. If at all it is like that, with respect to any renting of immovable property services provided by Indian Railways, then we need to check here. If at all they are provided to government or non-business entity, then definitely it is exempt. If at all it is provided to government or non-business entity, it is exempt. And if at all it is provided to a registered business entity, then it is taxable under RCM. And if at all it was given to unregistered business entity, it is taxable under FCM. Okay, and same point will be applicable to this fourth point also. Any other service. With respect to any other service, first one is, if at all it is provided to government or non-business entity, it is exempt. If at all it is provided to if at all they are provided to registered business entity, then it is taxable under RCM. If at all is an unregistered business entity, then it is exempt. Okay, this is the present existing provision with respect to Indian Railways. Indian Railways is nothing but also a government now. That's why what is the point here? Say this. Indian Railways first will do transportation of passengers. Generally, transportation of passengers is exempt. Sorry, just forgot to write here. What are the exceptions, ma? AC and first class. Those two are taxable under FCM. Okay. With respect to transportation of the goods by Indian Railways, specified goods like what we can say, daily necessities like pulses, milk, rice, newspapers, defense items, like that few other items are there now. With respect to those specified goods, it is exempt. If at all they are non-specified goods, they are taxable under RCM. Sorry, they are non-specified goods, they are taxable under FCM, forward charge mechanism. And if Indian Railways are providing service of renting of immovable property to the government or non-business entity, it is exempt. To the unregistered business entity, taxable under FCM. To the registered business entity, it is taxable under RCM. Any other service, just like this, government or non-business entity, exempt. Registered business entity, it is taxable under RCM. And unregistered business entity, it is exempt. This is the present existing provision. Okay. And another point, any service that is provided by the government, definitely we can say it as a fifth one, where consideration is less than or equal to 5,000 rupees, it is exempt. That means whatever the service the government will do, for that consideration is less than or equal to 5,000, it is exempt. These are the 5 points. But now what is the amendment that was there? So few points are linked with RCM, few things are actually exempted, few things are taxable under RCM, FCM and exempt. All the 3 areas it is covered here at present. Now what is the amendment? The amendment is here with respect to first case. Transportation of services and transportation of the goods, that means this one, transportation of passengers, and second one, transportation of goods, there is no amendment. These 2 things, there is no amendment. No amendment. Okay. The amendment just came in point number 3, 4 and 5. Now the amendment is there in point number 3, 4 and 5. This is point number 3, this is point number 4 and this is point number 5. The amendment is there in these 3 points only, 3, 4, 5. Okay. So amendment is there in these points only, these 3 points. Okay. Now what is the amendment that is there? Any service by the Indian Railways. So what is the point that is there? I am clubbing all those things because they are scattered in 2 chapters. One is exemptions and second one is RCM. I am clubbing those things and telling you, so it is better to take the notes instead of searching those things in the material. You need to search them everywhere, which is there in chapter number 3, some point, okay, blah, blah, blah. You need to see that. And again, you come back to these exemptions, you need to check. That's why copying, while actually I am telling you, it is better to copy that. Okay. The amendment is, any services by the Indian Railways other than transportation of passengers and goods shall be taxable under FCM, irrespective of the recipient. What is the present point now? Any services by the Indian Railways other than transportation of the goods and passengers shall be taxable under FCM, irrespective of the recipient. What the point? That means with respect to renting of immovable property, with respect to any other service, with respect to where the consideration is less than or equal to 5,000. This point now will not be applicable to Indian Railways, even though the consideration is less than or equal to 5,000. It is taxable for Indian Railways. And second one, With respect to renting of immobile property, what is the present point? It is exempted now. Up to this extent, it is no more exempted. It is also taxable. And this is taxable, but this one is taxable under RCM now previously. Now it will be covered under FCM. It remains as it is. And in the same way, previously it is exempted, this is exempted. Now, these things are taxable. Okay. But all the things are taxable now under FCM. That is the point. I just wrote the amendments in yellow color. You can observe there. With respect to point number 3 previously, renting of immobile property to the government or non-business entity, previously it is exempted, but now it is taxable under FCM. Not only this one, any other service that is provided by the Indian Railways are taxable under FCM. The RCM was removed for these services. Okay. So what is the point here? Renting of immobile property to the government or non-business entity previously exempted, but now it is taxable under FCM. Previously, renting of immobile property to unregistered business entity taxable under FCM, now also taxable under FCM, no change. And renting of immobile property to the registered business entity previously taxable under RCM, but now taxable under FCM. This is third point. And fourth point, with respect to that fourth point, any other service to the government or non-business entity previously exempt but now taxable. To the registered business entity previously taxable under RCM, now under FCM. Previously to the unregistered business person is exempt, now taxable. Now all the three services are taxable under FCM. And the fifth condition, where the consideration is less than or equal to 5,000 is exempt, is no more applicable to Indian Railways. Even though the consideration is less than or equal to 5,000, definitely it is taxable for Indian Railways. So this is the point you need to remember by clubbing these two, exemptions and RCM. Even though it was given in two separate chapters, you need to analyze them in this manner. Okay. So this is amendment. You can check there. So second one, 5A. So now we need to see the exemption, amendment with respect to 9 subsection 5 ECO. And with respect to this particular ECO 9.5, now its scope is somewhat restricted. But before going to discuss about that one, what is existing provision with respect to 9.5? Generally, 9.5 is applicable only with respect to ECO of services. In that, not to all the services. At present under 9.5, only how many services are covered there? With respect to 9.5, how many services are covered? Only 4 services. What are those 4 services? Passenger transportation. Second one, hotel accommodation. Third one, housekeeping service. Fourth one, food aggregators like Zomato or Swiggy. These are the 4 people who are covered under 9 subsection 5. Okay. And in that, there was an amendment with respect to transportation of passengers. That means remaining 3 remains as it is. The amendment came in the first service that is covered under 9 subsection 5. That is services by way of transportation of passengers by a radio taxi, motor cab, maxi cab, motorcycle or omnibus or any other motor vehicle. That is the previous point. Okay. Now it was amended like this. See what is the amendment? Services by way of transportation of passengers by a radio taxi, motor cab, maxi cab, motorcycle or any other motor vehicle except omnibus is the amendment. Previously, omnibus is also included in this 9.5. But now what is the amendment, Services by way of transportation of passengers by a radio taxi, motor cab, maxi cab, motorcycle or any other motor vehicle except omnibus. So now this point was divided into 2 parts. See this. This omnibus kept outside. This is point number 1. Now this is point number 2. Services, and further a new category was introduced. Services by way of transportation of passengers by omnibus, except where the person supplying such service through ECO is a company. That means now you can divide this particular point into two types. So previously, transportation of passengers by ECO, which is covered under 9.5. Now it will be divided into two parts. Now it is divided into two parts. One is passenger transport services through others. Passenger transport service through omnibus. Now with respect to this service, passenger transportation service that is provided by radio taxi, maxi cab, motorcycle, in all these cases, ECO is liable to pay the GST whether the actual supplier is registered or unregistered. In all the cases, ECO is liable to pay the GST. That means whether the supplier is a registered one or an unregistered one, in all cases, who is liable to pay the GST? ECO is liable to pay the GST. But whereas with respect to this case, passenger transportation service through omnibus, it was divided into 2 points here. It was divided into 2 points. One is, if the supplier is a company, supplier means omnibus supplier. If the supplier is other than company. If the supplier is company, in that case, who is liable to pay the GST, ma'am? Supplier will pay GST here. And if at all, the supplier is other than registered person, other than company, then ECO is liable to pay GST. So now this point was divided like this after amendment. So passenger transportation service through radio taxi, motor cab, maxi cab, motorcycle, except omnibus, in all these cases, ECO is liable to pay the GST whether the supplier is registered or unregistered. But if the passenger transportation service through is omnibus, then we need to check who is the supplier. If the supplier is a company, supplier himself will pay the GST. If the supplier is the other than company, in those cases only, ECO is liable to pay the GST. That is the point you need to remember. Okay. This is the amendment, ma. So now there ends this particular topic. The next chapter amendment is with respect to place of supply. That is so that is amendment we need to see now. So the amendment is there with respect to place of supply. Generally, if you observe place of supply, there are 2 points with respect to supply of the goods. One is section 10 and second one is section 11. I think 11 is not in your syllabus. With respect to section 10, if you observe there, so with respect to place of supply, first thing is 10.1a, whenever there is a physical movement of the goods is involved, the place of supply will be the place where the goods are delivered. POD, place of delivery will be the POS. Okay. And another one is there, 10.1c, which says that if at all there is no physical movement, then place of supply will be the place of location. the place where the goods are there at the time of delivery, that one will be the place of supply. So 10.1a says, if at all there is a physical movement of the goods, POS will be the place of delivery. As per 10.1c, there is no physical movement, then place of supply will be the place where the location of the goods. Okay. Now what is the amendment that is there? Now another new section was created, that is named as, a new section was created that is named as 10.1ca. A new section was created, 10.1ca. As per this 10.1ca, that means notwithstanding anything contained in 10.1a and 10.1c, that means 10.1ca has a overriding effect on these two sections. POS will be as per 10.1ca, this is C, okay. I will write once again, no issue, sorry. 10.1ca, as per 10.1ca, if as per 10.1ca, if the recipient is a unregistered person, that is, the supply is a B2C supply, then POS is equal to address on the record. If it is not available, then POS is equal to location of supplier. This is the new point that was created, 10.1ca. If the recipient is unregistered, that is if at all it is a B2C supply, then what is the POS? POS will be address on record of that recipient. If address of that particular recipient is not available, then location of supplier will be the POS. Okay. So the important point is here, sir, when this particular 10.1ca is applicable, if you observe 10.1a or 10.1c, physical movement was involved, physical movement was not involved, you need to check all these things. Okay. That means generally now these two are restricted their usage for B2B technically, even though it was not specified anywhere, these 2 points. That means if at all it is a B2B supply, then you need to check physical movement was involved, 10.1a is applicable. No physical movement was there, 10.1c is applicable. Now, this 10.1a and 10.1c are restricted to B2B supplies only. Now, in this 10.1ca, unlike in case of B2B supplies, we need to check whether physical movement was involved or physical movement was not involved. There is no need of checking the movement in case of B2C supplies. Here POS will be always based on the location of recipient or based on the location of supplier. Okay. That means if at all the recipient is an unregistered person and if at all it is a B2C supply, then place of supply will be address or record of the recipient, okay, of recipient. If address is not available, then location of supplier will be the POS. That is the point you need to remember now. Now 10.1a and 10.1c is restricted to B2B supplies only. Okay. So this is a place of supply amendment. With respect to this, you need to remember. Say this address on record is available. That address on record is not available. Location of the supplier will be the POS. Okay. And advertisement sector, not actually important from the examination point of view. So this is not that much important from the examination point of view. That's why I tell you the summary of this particular point. So with respect to this, now we are talking about the POS in relation to advertisement services. In that there is one amendment. Now we will see that. Generally, if you observe, there are 2 sections. Majorly, there are 3 sections that are involved therein. So one is, first one is 1214. Generally, section 1214 deals with advertisement services. 1214 deals with advertisement services. As per 1214, anybody remembers what is the POS? Sir, why there is a point that is need for insert of this one circular is 1214 will decide the advertisement services that are provided to the government. It was clearly given. What is the place of supply? That means to provide it to government, one state, that state will be the POS. If it all it is provided to more than one state, in those cases, what is the position? Proportionate basis, we need to compute the place of supply, like that. But if at all, these advertisement services are provided to non-government recipients, there is no specific rule in this section 1214. So that's why CBIC circular will clarifies that particular thing. Okay. The issue is here, generally, advertisement companies often involved in procuring the space or space on the hoardings or the billboards that are mounted on a particular building or at a particular land, okay, in different states, generally from various suppliers, or sometimes we will call them as vendors also, okay, for providing advertisement services to their clients. Because in order to give some advertisement, there must be some billboard or hoarding that must be there now. Generally, these hoardings or these billboards are of some third-party vendors. From that particular third-party vendor, generally these billboards or the hoardings will be of third-party vendors. Okay. Generally, this particular advertisement agency will take them on rent basis from these particular third-party vendors, and on the billboards, they will do the service to their clients. Advertisement service. Okay. The question is here, how to decide the place of supply with respect to these type of cases. One arrangement that can be possible is, let's say, here the services can be divided into two types. One is arrangement 1. With respect to arrangement 1, this particular billboard or the hoarding belongs to third party, and on that billboard advertisements were done. In that case, 12.3 will come into C, that is services in relation to immovable property. So, in that case, location of hoarding or billboard will be the place of supply. A billboard or hoarding belongs to the third party, and on that billboard ads are done. In that case, instead of 12.14, what is the section that will be applicable? As per section 12.14, 12.3 will come into C. As per 12.3, it is in relation to immovable property. Then the place of supply will be the place where the immovable property was located. Where the immovable property was located. So, where the immovable property was located, the location of the hoardings or billboard will be the place of supply. And what is second arrangement? The second arrangement will be arrangement 2. Billboard or that holding belongs to client only. That means it already that particular, say for example, one hospital is there. On that hospital terrace, there is a big billboard. Now, on that billboard, the particular hospital wants to give its own advertisement. Got the point? Billboard belongs to the hospital because it was there on the terrace of the hospital. Okay. Now what the hospital wants, there must be some attractive advertisement that is needed to be designed by this advertisement agency. Okay. Here billboard or hoardings belongs to the client only. On that billboard, advertisements were there. It's not given. In that case, what is the place of supply? With respect to this arrangement 2, the place of supply should be decided by 12 subsection 2, which is a residuary entry, not as per 12.3. Okay, ma. That means 12.3 deals with immovable property. Here, immovable property was not taken on a rental basis, ma, because that particular billboard or holding already belongs to the client. In that case, what we are doing, we are providing only the service there. In that case, definitely 12.3 will not be applicable. The place of supply is needed to be determined as per 12.2. As per 12.2, definitely what is the position? Location of the recipient will be the place of supply. That is, so the LOS will be, the POS will be location of recipient generally. You can study in-depth story of 12.2 that was given in your material. Okay, so this is the amendment with respect to place of supply. Now the next thing we need to see is exemptions. Already I covered all these exemptions, related amendments here. Okay, already we covered. And this is another point you need to remember, new exemptions that was introduced. With respect to these new exemptions, and the next point is the new exemption that was there is my simple one. Previously, services provided by governmental authority. Services provided by governmental authority in relation to any panchayat or municipal functions are exempt. But any services that are provided to governmental authority, it is taxable. Okay, ma. Previously, what is the point, ma? By governmental authority in relation to any municipality or panchayat functions, it is exempt. But any third party is providing services to governmental authority, definitely it is taxable. But now, if any third party is providing services to the governmental authority in relation to these activities, it is exempt, like water supply, public health, sanitation, solid waste management, slum improvement and upgradation. With respect to these activities, if any third party is providing services to governmental authority, definitely is it exempted or taxable, ma? It is exempted. As simple as that. The next one is value of supply. So with respect to this value of supply, ma, so previously if you observe, practically this particular amendment is there in time of supply, but the chapter remains the same, time and value of supply. If you observe time of supply, if any advance is any advance is received in relation to goods, you are not liable to pay any GST at the time of receiving the advance. If at all any advance is received in relation to service, definitely you are liable to pay the GST at the time of receiving the advance. I think you know this point. With respect to goods, at the time of receiving the advance, we are not liable to pay any GST. With respect to services, whenever we receive the advance, we are liable to pay the GST. But amendment is here. This particular goods point is excluding registered persons making supply of specified actionable claims. Now, what is the effect of or impact of this particular amendment? Now, in case of supply of actionable claims, supply of specified actionable claims. Sir, what are these specified actionable claims? I think we had a discussion on it previously, like gambling, betting, lotteries, casinos, horse races, online money gaming. These 6 are treated as specified actionable claims. With respect to these specified actionable claims, now what is the impact, ma? In case of supply of these specified actionable claims, time of supply will be triggered if the payment for the same is received by the supplier in advance. That means simply, even though it is a supply of the good, because actionable claim is a good, if at all it is a good, on the advance we are not liable to pay GST. But if that good is a specified actionable claim, if that good is a specified actionable claim, in that case, at the time of advance itself, time of supply will be triggered and you are liable to pay the GST. Simply what we can say is here. Okay, fine. So, with respect to time of supply, now what is the point, ma'am? With respect to time of supply, with respect to goods, previously you are not liable to pay any GST at the time of receiving the advance. But now it is divided into 2 points. Specified actionable claims, other than specified actionable claims. If at all it is a specified actionable claim, even though it is the good, definitely you are TOS will be attracted at the time of advance. If at all it is other than specified actionable claims, no time of supply will arise at the time of advance. That is the point you need to remember, ma, after the amendment. With respect to specified actionable claims, time of supply will be triggered at the time of receiving the advance itself, even though it is a good. But now with respect to other than specified actionable claims, respective goods, the present position will remain as it is. No time of supply will arise at the time of receiving the advance. That is the point, ma. Next one is a registration. It is naam ke vaste. Few amendments are there. With respect to this point, if you observe that generally when the physical verification is required, ma, generally when the physical verification of a place of business is required, generally the physical verification of the place of business is required when if Aadhaar authentication was not opted, Aadhaar authentication was opted, but we are unable to link with Aadhaar. Third one is, if at all the government risk assessment system wants to do the physical verification. And fourth one, even though everything is good, if the department wants to do the physical verification. These are the 4 cases. These are the 4 cases, okay, where the physical verification can be done. What are the 4 cases where the physical verification can be done, ma? First point is, you are not opted Aadhaar authentication. Second one, you opted the Aadhaar authentication, but link is not working or something like that. Third one, based on risk assessment. And fourth one, if everything is good, but still the department says a will mange more. In all these 4 cases, physical verification will be done. But if at all physical verification is there, what is the time period, ma? Generally, previously, there is no specific time limit to upload the physical verification report on the GST Common Portal. Everything from physical verification, verifying the documents, everything should be done within 30 days. Okay. Okay, within 30 days. The rule is simple. The present existing provision simply says that once the physical verification was done, within 15 working days, it should be uploaded on GST website. That is the only criteria at present that is there. Whenever physical verification was done, whenever physical verification was done, then its report needed to be uploaded within a period of 15 days. That is the only thing that was there. But now the government came up with the framework of time also with respect to physical verification report when it is needed to be uploaded. When it is needed to be uploaded, ma'am? When it is needed to be uploaded? Physical verification will be done Physical verification will be done. Physical verification report must be uploaded at least 5 working days prior to the completion of the time. That is the point you need to remember. Okay. So what is the point here, ma? Here the point was divided into 2 types. I will tell you a simple story here also. First one is, the form number will be REZ 30, ma. Generally you are not required to remember the form number. This is the report that is needed to be uploaded by the proper officer. Okay. So now the first amendment that came into scene is with respect to this physical verification. Previously, in order to do the physical verification, it should be done in the presence of applicant or in the presence of registered person. But now it was changed. Now physical verification can be done by the proper officer even without the presence of registered person. That is the first amendment in physical verification. What is the first amendment? Now physical verification can be done by the proper officer even without the presence of registered person. And second one, with respect to time limit, now it can be divided into 2 types. Physical verification is going to be done before grant of registration certificate. Second one, physical verification is going to be done after the grant of registration certificate. These are the 2 points you need to remember here. So when the physical verification is going to be done? Physical verification is going to be done before grant of registration certificate. In that case, now there is the amendment that at least 5 working days before to the 30 days time frame from the date of submission of application. So what is the present point? At least that means with respect to this point, at least 5 working days prior to the completion of 30 days time period from the date of submission of REZ 01. That means previously you can physical verification can be done or report can be uploaded anytime before 30 days. But here now it was confined to 25 days practically, because at least 5 working days prior to the completion of 30 days, you should upload the physical verification report on the GST portal. But whereas here, if at all physical verification is going to be done after the grant of RC, then there is no such requirement. From the date of physical verification, it should be uploaded within 15 working days. From the date of physical verification, it should be uploaded within 15 working days. That is the point you need to remember. Okay. The amendment is there only in this point. That is the thing you need to remember here. And next one is here with respect to bank account, ma. So with respect to rule 10A, what is the previous point, ma, with respect to rule 10A? What does this deals with? Submission of bank details. What is the time limit for the submission of bank details previously? From the date of RC within 45 days or the first GSTR 3B due date, whichever is earlier. On or before that particular date, what should be done, ma? On or before that particular date, what shall be done? Bank account details are needed to be submitted to the department. Otherwise, your RC can be cancelled. Okay. Now, what is the amendment in this? There is a time prescribed under Rule 10A was amended. Now, the point is here, from the date of RC, 30 days, from the date of RC, 30 days, or actual date of filing of GSTR1, whichever is earlier, that is the cutoff date to submit the bank details to the department. Previously, 45 days time was there. Now it was reduced to 30 days. So, from the date of RC, 30 days, or actual date of filing of GSTR1, whichever is earlier, that is the cutoff date to submit the bank details to the department. If those bank details are not submitted within that particular time, what is the position? Definitely your RC can be cancelled also subsequently. Okay. So the time period was changed with respect to 10A. What is the old time limit? From the date of RC, 45 days, or the due date of filing first GSTR 3B, whichever is earlier. But now it was changed to from the date of RC, 30 days, or actual date of filing of GSTR 1, whichever is earlier, that is cutoff date to submit the bank details. Okay. And the second point is here, this is not a new point. Now it was included, this point also. This is, this is first amendment with respect to this registration. And second one is, if these details are not furnished, that means non-furnishing of information as per Rule 10A. What are the consequences? First point is, Shumoto cancellation of registration by the proper officer. Already we know that. Second one, there is a provision for automatic system based suspension of GST registration if the information under Rule 10A is not submitted within the time limit. And in the same way, if the information is not submitted as per Rule 10A, then your e-way bill generation can be blocked, as well as blocking of GSTR1 will also be followed. Okay. What is the point here, ma'am? Just you can see here. That means what is Rule 10A time limit now? Rule 10A time limit will be, first one, from the date of registration certificate, 30 days, or actual date of GSTR1, whichever is earlier. That is the cutoff date to submit the bank details to the department. If at all it is not followed, any default is there. Now what are the consequences? First one, cancellation of registration under section 29 subsection 2. Already you know that one. Second one is automatic suspension of registration. Third one is blocking of GSTR1 and invoice furnishing facility. So these are the consequences if any default occurs. That is the point you need to remember. As simple as that. Your registration can be cancelled, automatic suspension of registration, and blocking of GSTR1 and invoice furnishing facility if the bank details are not submitted within the time frame of Rule 10A. That is the point you need to remember. Okay. And the next point is GSTR1. This story will have a discussion later on. So this point was actually given in that particular concept, but practical enforcement will not be there with respect to that. Simply what we can say is, if at all there is any difference between, simply just I will write here. This topic is actually in relation to Rule 88 CMA. Actually, this topic is in relation to Rule 88C. So this point is basically with respect to Rule 88C. That means if at all there is a difference between, GSTR1, that means the supplies that are reported in GSTR1 is more than the supplies that are reported in GSTR3B, or the ITC that is reflected in GSTR3B is more than the ITC that is reflected in GSTR2B. In those cases, Rule 88C generally may come into scene. Okay. When this Rule 88C will come into scene, the proceedings and recovery in case of differences between the outward supplies in GSTR1 and outward supplies in GSTR3B, that is the first one. Okay. Generally, if at all there is the supplies that are specified in GSTR1 is more than the supplies that are specified in GSTR3B, in those cases, what is the position? Definitely the difference will be intimated to the person, and that means for that a show cause notice will be issued. And for that show cause notice, the person must give a reply within 30 days. Okay. If no reply was received by the registered person, or his reply is not satisfactory, in those cases your RC can be cancelled. Okay. If at all we received a proper reply, then all the proceedings are deemed to be concluded. Okay. So now second point, what is the 2 points? There are two consequences here. One is, already that was there in the law, consequence 1. The supplies that are there in GSTR1 is more than the supplies that are prescribed under GSTR3B. Supplies that are more than GSTR1 is more than GSTR3B. Okay. In those cases, definitely the first one is a show cause notice will be sent to you. For that show cause notice, you must give a reply within 30 days. If the reply is satisfactory, proceedings are deemed to be concluded. If the proceedings are, that means if the reply is not satisfactory or no reply, in these cases, your RC will be cancelled. This is the first one already that was there. Okay, now the second one, consequence 2 is recovery as per section 79. But for this, there is no effective date that was specified. That's why even though it is there in this particular case, recovery. That means what is this recovery here? That means a show cause notice will be issued to that particular person. For that show cause notice, the person either pay the GST or give a reply. That means here show cause notice will be there. For that you need to give the reply 7 days. If the either reply should be given, pay the tax or give the reply. Reply is satisfactory, then proceedings are concluded. Okay. Neither paid the amount nor reply was given. Okay. In that case, straight away, instead of cancelling the RC, okay, RC may be cancelled as per the consequence. That means previously there was a provision for cancellation of RC also. Okay, RC was cancelled. What is the loss to the SC there? He will not pay the tax now. Now that's why second consequence were added there. Now, even though your RC is going to be cancelled, that is the consequence 1. And consequence 2 is, what is the amount that is there? It will be recovered as per section 79. That is the point 1. So, when GSTR1 sales, simply, I am using the word sales, but the actual word is supplies. For the sake of simplicity, I am using that word. GSTR1 supplies are more than GSTR3B supplies. Consequence 1. If a reply is not satisfactory, your RC will be cancelled. Consequence 2. Then as per 79, recovery proceedings will be started and that difference amount will be collected from that party. Okay. And now another new rule was inserted here, that is Rule 88D. What does Rule 88D deals with, ma? When this Rule 88D will be applicable, ma? The ITC claimed in GSTR 3B is more than ITC reflected in GSTR 2B. ITC claimed in GSTR 3B is more than ITC reflected in GSTR 2B. In those cases, what is the position, ma? Rule 88D will come into C. Previously, 88C, supplies indicated in GSTR 1 is more than the supplies indicated in GSTR 3B. Rule 88C will come into C. If ITC claimed in GSTR 3B is more than ITC reflected in GSTR 2B, in those cases, Rule 88D will come into C. Okay. As per Rule 88 also, if at all this happens, two consequences will be there. Consequence 1. What is consequence 1, ma? First one, system-based suspension of your registration certificate. That means automatic suspension of your registration. There is no manual process will be there, ma. Once the system, GST Common Portal finds that particular thing, automatically your RC will be suspended first. And second one, show cause notice will be issued to you. For that show cause notice, you must give a reply within 30 days as usual. If reply is satisfactory, proceedings are deemed to be concluded. If the reply is not satisfactory or reply not given, in those cases, what is the position, ma? RC cancellation. Okay. This is same. 88C and 88D are same, ma, but what is the difference is 88C is applicable. 88C is applicable rule number when supplies in GSTR 1 is more than GSTR 3B. Rule 88D is applicable. ITC claimed in GSTR 3B is more than ITC reflected in GSTR 2B. Except that remaining province remains the same. And consequence 2 is here. Consequence 2, as usual, show cause notice will be given. For that show cause notice, within 7 days, either you need to pay the difference amount or give a proper reply. Then proceedings are deemed to be concluded. Otherwise, what will follow, ma? Section 73 or 74 will be followed, thereby recovery proceedings will be initiated. And along with that, your e-way bill GSTR 1 and invoice furnishing facility can also be blocked. These are the 2 points, not relevant that much from the examination point of view, but you need to remember sometimes there is a possibility. What are these 2 rules, ma? Rule 88C. When this Rule 88C will come into C, GSTR was said, supplies in GSTR 1 is more than supplies in GSTR 3B. Okay. And this one you can ignore here. Okay. Just wrote, sorry. Supplies in GSTR 1 is more than supplies in GSTR 3B. This Rule 88C. Consequence 1, your RC can be cancelled. Consequence 2, as per 79, recovery proceedings will be initiated. Rule 88D. ITC claimed in GSTR 3B is more than ITC reflected in GSTR 2B. Then consequence 1, your RC can be cancelled. Consequence 2, 73, 74, recovery proceedings will be initiated. Okay. As simple as that. Not that much discussion is needed on this. Okay. See all these things already we completed here in simple terminology. Okay. And after completion of that one, now the fourth point will be, third point we just completed. The fourth point will be simple, ma, with respect to revocation. So with respect to revocation, what is the position, ma? Previously, if you observe with respect to revocation, that means section 30. With respect to section 30, revocation of cancellation, revocation of cancellation. Initially, what is the time limit for the application, ma? 30 days. Further, you can ask additional commissioner or joint commissioner for another 30 days. After that, it can be extended by the commissioner for 30. The total number of days that is there to make the application for revocation is 90 days previously. But now, after the amendment, the position is initially to make the application, the time limit is 90 days, and further it can be extended 180 days by the commissioner. Total it will be 270 days now. That is the amendment with respect to revocation. Previously, initially the time limit to make the application is 30 days. After that, extension can be granted by the additional or joint commissioner for another 30. And after that also you need some extension, it can be granted by the commissioner. The total number of days will be 90 days. But now, initially the time limit to make the application is 90 days. And after that, extension can be granted by the commissioner for a further period of up to a maximum of 180 days. The total time period now become 270. That is the amendment you need to remember. Okay. This is the fourth one, ma. See this, the initial time period is 90 days. Further, it can be extended to another 180 days by commissioner or his authorized persons. Okay, that is the point you need to remember. Okay, ma? And in the same way, if you observe that, if you observe section 24, what is section 24 deals with, ma? Compulsory registration. With respect to compulsory registration, the procedure is simple. Even though your aggregate turnover does not exceed, but still you are required to take the registration. In that, so many number of people are covered like RCM recipient, ECOs, and interstate supplier of the goods. Now, in that section 24, the person who is supplying online gaming from outside India to a person in India is now covered under section 24. That means, the person who is supplying online money gaming services from outside India to a person within India, in that case, the supplier is required to take compulsory registration as per section 24. That means section 24 now added one more point. The person who is supplying online money gaming service from a place outside India to a person in India is required to take compulsory registration. But he is not required to give his PAN and the statement because he is from outside India. Na? That's why you cannot ask him for PAN and state where he is going to take registration. So, generally, if at all you are taking any registration, PAN and state where you are applying for registration is compulsory. But for this person who is supplying online money gaming services from outside India, has been given exemption from giving their PAN number as well as the state where they just want to start the business or where they just want to take the registration. See, that was the amendment, ma. See, except NRDP is not required PAN, TDS deductor, TCS collectors are not required to submit their PAN, ma. Okay. And in that one new point was added, this is this fellow. Okay, online gaming services, OIDR service providers, they are not required to declare their PAN and state. See, except these people, remaining people are required to submit the PAN as well as the state where are going to take the registration. But these four people, previously there are three people, but now there are four people that are granted exemption or relaxation from submitting their PAN as well as the state where they are going to take the registration. Okay. Next point is tax invoice, debit notes and credit notes. With respect to this point, previously with respect to e-invoicing, what is the threshold limit, 10 crores. But now the 10 crores was reduced to 5 crores. That means starting from 17, 18 onwards, any registered person aggregate turnover is more than 5 crores, e-invoicing is required. That means the scope of invoicing was increased. And next one is clarification on e-invoice related issues. In that if you observe, even though your turnover is more than the threshold limit. In few cases, you are not required to issue the invoice, like GTA, passenger transportation, multiplex movie theaters, like that. In that, local authority and government is also covered. Okay, the question is here, whenever government is involved, invoicing is not required. Or if the supplier is the government or government department, then only invoicing is not required. The clarification was given here. If the supplier is government department, then only e-invoice is not applicable. If the recipient is government department, then the concept of invoicing is applicable. Okay, ma'am. See, person supplying them shall be generate the e-invoice. That means third party to government department, invoicing is applicable. Because here the government department is the recipient. Okay, if the government department is the supplier, then invoicing is not applicable. That is the concept you need to remember. Next one is, okay, ma. Generally, ma, if you observe this B2 particulars of tax invoice, which is there in rule number 46. In that rule number 46, generally, what is the thing you need to write there? What is the thing you need to write, ma? Generally, name, address, and GST number of the supplier, date of issue, serial number. If the recipient is a registered person, then name, address, and GST number of the recipient. If the recipient is an unregistered person, value is more than 50,000, name and address mandatory. Value is less than 50,000, state is actually optional, like that we discussed it now. But now, with respect to these cases, what are the cases, ma? Where actually state is required? If at all is a OIDR supplier, or supplies are done through ECO, or if at all it is an online gaming service, even though the value is less than 50,000, state is mandatory. Name of the state, ma'am. Not everything is mandatory there. Okay. What is the thing that is required? So, if at all the value is less than 50,000, no information is required, ma'am. But with respect to OIDR services or supplies that are done through ECO and online money gaming services, with respect to these three, even though the value is less than 50,000 rupees, name of the state is mandatory, not the total address. Name of the state is mandatory. If it all is a OIDR supplier or the supplies through ECO or online money gaming services, in these three cases, even though the value is less than 50,000, still name of the state is mandatory. Okay. Next point is, so the next topic is, we need to see the amendment with respect to payment of tax. So with respect to payment of tax, there is one circular that was issued with respect to clarification on charging the interest under section 53 in case of wrong availment of IGST credit and reversal thereof. With respect to that, the issue is like this. In case of where IGST credit wrongly availed, unutilized, and IGST and the balance in electronic credit ledger balance fallen below the amount of wrongly availed ITC of IGST, whether interest will be levied if IGST, CGST and SGST total taken together does not falls below the wrong availment of utilization. That was the issue. Because IGST is going to be used for every payment of GST. Na? That's why that will be fair to take if all the total ITC's balance is below the IGST wrongly utilized, then only interest is needed to be charged. Yes, that was the clarification that was given. IGST can be utilized to pay all the liabilities, IGST, CGST and SGST. Total credit shall be considered to check whether the balance in credit ledger is fallen below the incorrect availment and utilization. See the example. This is the opening IGST IDC. This is IGST IDC that was wrongly availed. Okay, this is correct IDC that was availed. Okay. In this case, correct IDC availed of CGST and SGST 25,000. This is IGST liability and this was IGST that was used. Okay. So in this case, what is the wrong availment of IDC, ma'am? IGST 40,000. Okay. Here IGST balance was reduced to 10,000. Sir, in this case, is it possible to levy the interest on the shortfall of that 30,000? Answer is no. Because we need to take total amount of closing balance. 10 plus 25 plus 25. Total balance is 60,000, which has not fallen below the incorrect IDC that is availed. Therefore, no interest is charged. And keep it in mind, this GST compensation cess balance will not be considered while computing the closing balance of this particular amount for this purpose. Okay. So what is the summary of this point, ma? When the IGST ITC was wrongly availed and utilized, okay, in that case, there will not be any interest liability. If the balance in electronic credit ledger under the head IGST, CGST and SGST all taken together does not fall below the IDC that was wrongly utilized or availed, then no interest will be charged. That is the point you need to remember, ma. So the summary is, in order to check wrong utilization of IDC, not only the closing balance of IGST IDC shall be considered, the total balance of IGST, CGST and SGST are needed to be considered. That is the point you need to remember. Okay. Another thing, ma, even though it is not covered, actually we covered the most important things from the examination point of view. Few things are left out actually. In that, one thing you need to remember is with respect to composition scheme. If at all you observe with respect to composition scheme, if you observe with respect to composition schema, the person cannot make any supplies. The person cannot make any supplies through ECO. Then he is not eligible. That means if at all he is making any supplies through ECO, he is not eligible for the composition scheme. But now it was amended, ma. Now the supplier of the goods can make supplies through ECO. Okay. But keep it in mind, ma, only intrastate supplies can be done. But keep it in mind, what is the thing they can do? Only they can do intrastate supplies. So now remember this point. Now the supplier of the goods can make the supplies through ECO, who is required to collect the TCS. Okay. But he can do only intrastate supplies only. He cannot do any interstate supplies, and ECO shall not give any permission to do the interstate supplies. Okay. And in the same way, in registration chapter also, another point is there with respect to that particular point. If at all you observe with respect to registration, compulsory registration, persons who are making supplies through, supply of the goods through ECO is required to take the compulsory registration. Any person who is making the supplies through, supply of the goods through ECO is required to take the compulsory registration. So now, any person who is supplying the goods through ECO, any person who is supplying the goods through ECO is required to take compulsory registration as per section 24. As per section 24. Okay. But now there was an amendment with respect to this particular point that now the supplier of the goods, if the aggregate turnover is less than the threshold limit, is not required to take compulsory registration as per section 24 on fulfilling certain conditions. Sir, what are the conditions? As usual, he should not do any interstate supplies, and only supply through one state, and the third one is submission of details like your PAN, plus address. Needed to submit these details. Once it is validated, one enrollment number will be given to him. Okay, that enrollment number must be given to the ECO. Without enrollment number, ECO should not give permission to make any supplies there. Okay, this is a new point actually you need to remember, ma. What is the previous point? Any person who is supplying the goods through ECO is required to take compulsory registration. But now his aggregate turnover is less than the threshold limit. He is not required to take compulsory registration if these conditions are satisfied. First one, he should not make any interstate supplies. Second one, he should get himself registered only in one state. Third one, he shall submit the details of PAN and address, okay, on the GST website. On validation of the PAN, the enrollment number will be granted to him. That enrollment number must be communicated to the ECO, and ECO shall not permit the supplier to supply the goods unless enrollment is granted to him. Okay, this is another point you need to remember here. Okay. Another thing we need to remember with respect to the case is GTA. With respect to GTA, one more amendment is there. Actually, it is not that much important. That's why it is not given in the particular material. But I just want to tell you orally in this particular video. So GTA, with respect to GTA, is having two options, ma. You can follow either FCM or you can follow RCM. But previously there is no time duration to follow this one. But now with respect to now, GTA is required to exercise this particular option of paying GST under FCM. There is a time limit regarding that. The time limit will be on or after 1st January of the preceding financial year up to 31st March of the preceding financial year. 31st March of preceding financial year. Okay. So GTA is required to exercise the option of paying GST under FCM by making the declaration on or after 1st January of the preceding financial year, but up to, that means not later than 31st March of preceding financial year. And another thing, once he selected this particular option, there is no need to communicate every time, every year. Okay. That means once the option to pay the GST under FCM was taken by GTA, it shall be deemed to have been exercised for future years unless GTA wants to change to RCM. That is another point you need to remember. And with respect to ITC also, which is in relation to your, with respect to ITC, generally corporate social responsibility. Corporate social responsibility. With respect to this corporate social responsibility, whatever the expenditure the company incurs on that, no ITC is allowed. That is the point you need to remember. Okay, ma. No ITC is allowed in respect of the goods or services which are procured by the registered person for his corporate social responsibility program. Definitely on those items, ITC is not allowed. Okay, that is the point you need to remember. So these are the amendments you need to keep focus on from the examination point of view. Hope this video will be useful to you. God bless you all.